Ladies and gentlemen, may I please request you to please settle down as we will be starting the proceedings shortly. Thank you. To formally begin today's event, as is our tradition, we will start with the recitation of Holy Quran. I request Qari Umar Farooq to kindly come forward and recite a few verses from the Holy Quran.
السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. قل الحمد لله وسلام على عباده الذين اصطفى. الله خير أما يشركون. أمن خلق السماوات والأرض وأنزل لكم من السماء ماء فأنبتنا به حدائق ذات بهجة ما كان لكم أن تنبتوا شجرها أإله مع الله بل هم قوم يعدلون. أمن جعل الأرض قرارا وجعل خلالها أنهارا وجعل لها رواسي وجعل بين البحرين حاجزا أإله مع الله بل أكثرهم لا يعلمون. أمن يجيب المضطر إذا دعاه ويكشف السوء ويجعلكم خلفاء الأرض أإله مع الله قليلا ما تذكرون. أمن يهديكم في ظلمات البر والبحر ومن يرسل الرياح بشرا بين يدي رحمته أإله مع الله تعالى الله عما يشركون. أمن يبدأ الخلق ثم يعيده ومن يرزقكم من السماء والأرض أإله مع الله قل هاتوا برهانكم إن كنتم صادقين. قل لا يعلم من في السماوات والأرض الغيب إلا الله وما يشعرون أيان يبعثون بل ادارك علمهم في الآخرة بل هم في شك منها عمون صدق الله العظيم. السلام عليكم.
Pakistan is a disaster-prone country, facing risks from floods, earthquakes, droughts, and storms, affecting millions every year. From devastating floods and earthquakes to droughts and cyclones intensified by climate change. These events leave lasting scars on communities and economies. Annual economic losses average between $3 to $4 billion. The 2005 earthquake, 2010, and the 2022 floods caused damages in billions. In the face of growing climate and disaster threats, the challenge is not if the disasters will strike, but when and how quickly we can respond. In times of crisis, what matters most is speed in reaching the vulnerable, speed in restoring lives, speed in rebuilding what's lost. Historically, Pakistan relied on post-disaster funding, causing delays in response and recovery. Delays in funding higher the cost, derail development, deepen vulnerability. Pakistan is investing in resilience, not just response. Pakistan is building a proactive disaster risk financing landscape, using pre-arranged finance to respond faster, smarter, and stronger. Disaster risk financing means planning ahead through insurance, contingency funds, and risk-sharing tools so that the right funds are available at the right time. Effective financial management for disaster risks is a challenge for the government with limited financial capacity to manage fiscal impact. NDRMF is strengthening fiscal resilience by working with the government and partners to design effective financing mechanisms. With a DRF strategy based on risk layering approach for cost-effective risk transfer. Powered by the NatCat risk assessment model, Pakistan can now measure, model, and manage disaster risks with precision, developing tailored financing instruments for insurance and reinsurance. Identifying exposure, estimating losses, prioritizing action. Faster recovery, lower losses, protected lives. Disaster risk financing, finance ready, response ready, resilience ready. Pakistan's risk financing landscape is evolving from reacting to risk to financing resilience. By planning ahead with tools like insurance, contingency funds, and pre-agreed financing, Pakistan can respond faster, recover quicker. Protecting lives, preserving development, investing in resilience, not just response.
Distinguished guests, esteemed speakers, respected colleagues and friends, Assalamu alaikum. A very warm welcome to the International Seminar on Disaster Risk Financing hosted by National Disaster Risk Management Fund under the Ministry of Planning, Development and Special Initiatives, Government of Pakistan. I'm your Master of Ceremony, Barira Zufishan, Manager Monitoring and Evaluation at NDRMF, and I'll be running through you this inaugural session and inviting our esteemed guests for having or sharing their thoughts with us. Today we are gathered here to reflect on the risks Pakistan faces and to chart a way forward through the data, tools, and partnerships that can strengthen financial resilience in the face of disasters. As you may be aware, Pakistan's growing exposure to climate and disaster risk has caused significant economic losses and demands a shift from reactive aid to protective and proactive financial planning. Therefore, Pakistan is adopting a financial tool that strengthens resilience before disaster strikes, that is, disaster risk financing. The 10-year disaster risk financing strategy developed by NDRMF under the guidance of Ministry of Planning and Ministry of Finance outlines a risk-layered approach for financial protection. A key innovation enabling this is the Natural Catastrophe Model, the NatCat model, Pakistan's first catastrophe risk assessment tool. Your presence here from ministries, development partners, financial institutions, academia, and the private sector is a testament to the growing momentum behind this important shift. Together, we will explore the DRF solutions, validate the strategy, and advance collaborative DRF solutions for Pakistan. We are honored to have you with us, the distinguished speakers, and you will be setting the tone for this important dialogue today. Without further delay, I would now like to invite Mr. Bilal Anwar, CEO, National Disaster Risk Management Fund, under whose visionary leadership we are continuing to drive innovation and disaster risk resilience and financing in Pakistan. Mr. Bilal Anwar is an international climate finance and sustainable development professional with a reputation as a technical leading expert, with over 2 decades of diverse experience in the field of climate change, climate policy, disaster risk management, and disaster financing. He holds an extensive management expertise in climate change and carbon strategies in the corporate sector and the program and operational management for donor-funded projects in several countries. Sir, may I kindly invite you for your welcome note?
Thank you, Marina. Distinguished guests, ladies and gentlemen, climate policy practitioners, and disaster financing experts, a very warm welcome. Assalamu alaikum. First of all, thank you very much, and deepest and heartfelt thanks for gathering here today on NDRMF call to collectively deliberate, explore, and find viable solutions for such a fundamental challenge. The challenge in front of us is, how do we finance the calamities and disasters which are becoming more frequent, more intense, and more damaging with time? The painful truth is, climatically and its disasters, Pakistan is beyond being the victim of climate impacts. We are its battlefield. And I would like to share with you today why I do think so. Not because in the last 2 decades, in 3 major disasters and many recurring events, it has cost us over $50 billion, amounting to approximately more than 10% of its GDP. Not because these disasters adversely impacted millions of people as seriously as displacing them from their homes, losing their livelihood, but also taking away their invaluable sense of belonging to their land and to the community. Also not because the loss of both physical infrastructure and natural capital, and much of which remains not repaired, not recovered, not retrieved for many years. But a great deal of social and indirect human cost remains unquantified, unaccounted, and got lost in the grand statistical figures. So while we paid for suffering of people, reinstating our damaged infrastructure, and to an extent, restore our destroyed natural capital and ecosystems, we have also paid for not being able to prepare ourselves well. Ladies and gentlemen, in the coming years and the decades, the question is going to grow bigger and more terrifying. The question is how to finance the disaster's impacts, manage their risks, and ensure climate adaptation. We are almost in the state of permanent crisis, so we need sustainable solutions. And that exactly is the purpose of our presence here and gathering all of you in this room, to find the sustainable solutions. We know from the expertise of the visionary leaders, experts, and passionate development practitioners that a number of sustainable models and the solution has been tested out around the world. And those models and methodologies, they have actually created an impact in terms of financing the disaster, reducing their impacts, and minimizing the impact on the infrastructure as well as on the communities to the extent possible. These models have been successfully tested out, refined, and calibrated over time. Such models, approaches, and methodologies are gathered under this powerful heading, disaster risk financing, which basically means a system for ex-ante, predictable, and pre-arranged financing for disasters, where an insurance system provides undelayed relief, where reserve funds are immediately available and make provided to the necessary funds to the schools and health systems to be safeguarded, brought back to the operations as soon as practically possible. With financial support to small farmers and shop owners in the remote areas is provided in a timely manner to rebuild their economic livelihoods and social well-being without delay. This is what we learned from the practices all over the world, and this is the purpose to gather here in a kind of a soul-searching as well as intellectually enriching session, a gathering today. NDRMF is merely providing a platform for it, not as a financial entity, which has been our traditional role, but this time as a visionary podium. It's almost a quantum leap for us. There's a huge amount of learning curve which we are passing through, and we actually want to benefit from your experiences, your expertise in a more institutionalized manner. Where we are shifting from building the concrete flood protection walls to the walls of financial preparedness and fiscal resilience. This task is too gigantic, it's too urgent, and let me acknowledge, too complex. Although we owe our remarkable institutions, with our remarkable institutional track record, incredible investment we have made in risk modeling and risk assessments, our wealth of networks with the communities and the fund implementing partners, many of us here in the room today, and our network and our working and collaborative relationship with the international development partners and the government, we just cannot do it alone. We humbly request your support to invest our financial and intellectual resources in disaster financing to trade disasters with development. Today's session has been designed specifically and exclusively to find out the solutions, and the solutions which have been built and tested around the disaster risk financing models and the approaches. We are just about to embark on this journey, and we want to take all of you along with us. I thank you very much. I welcome you, all of you here, and I look forward to the discussions and deliberations which are going to be happening in the subsequent sessions. I particularly take the time to welcome our distinguished guests from UNDP, ADB, and IOM, and a number of other partners. Thank you very much.
Thank you very much, sir, for those inspiring opening words and for setting the stage for today's important discussion. Our next remarks were to be delivered by Dr. Mohammad Yusuf Khan, Chairman, SUPARCO. However, due to an urgent commitment, he is unable to join us today. But he has nominated Dr. Amjad Ali, Director General, SUPARCO, on his behalf. Dr. Amjad leads the promotion of research and development in space science and applications domain, with a focus on maximizing the use of space-based information for national development and integrating it into the country's planning processes. Sir, we are honored to have you. The floor is yours, please.
Bismillah ar-Rahman ar-Rahim. Mr. Bilal Anwar, Chief Executive Officer, NDRMF, Resident Representative of UNDP Pakistan, Executive Director, SDPI, ADP Country Director, distinguished participants, ladies and gentlemen, Assalamu alaikum and very good morning. It gives me a great pleasure to share my views and thoughts during this open session related to disaster risk financing to strengthen Pakistan financial resilience, which is organized by the NDRMF. I would like to organize my talk in two ways. First, I would reflect on the developmental challenges which Pakistan is facing these days, and I will associate it with the space technology, that how space technology actually provides the vantage point to address all these issues one way or the other. So, just to start with, the most important developmental challenges in the field of the disaster management mitigation, and that is the inadequate understanding of the risks. This is one of the most important issues that we are facing these days, beside all other aspects related to the disaster management. You might have observed like the last 1 month or two during this monsoon season, so most of the losses occurred just because of the inadequate understanding of the risks. People not actually understanding what are the risks associated with their life and how to respond to that. Either they are not having the knowledge or they are just simply ignoring them. So there is some problems in our system that we are not actually sensitizing this particular issue, that how small little risks can actually endanger your life. You can simply take the example of one of the cases that happened in the Babusar area, that people were not ready even to leave their cars. They were not ready to respond to the risk in an appropriate way. So ultimately they have lost lives. So this is one of the developmental challenge which every practitioner in the field of disaster management has to face, and they have to work on that. Another particular aspect is the adaptation to climate change, because now we have to understand that climate change is an issue that is now real, that is now reality. Because maybe 10 to 15 years back, we were talking that maybe 2 degrees centigrade temperature is like increasing, but we were not actually knowing how all these 2 degrees centigrade temperature is actually instigating the different elements of the natural calamities, how they are actually accelerating the events, how they are actually increasing the impact of these events. So this is something which we have to understand at the right time and with the right responses, so that we are able not only to mitigate the climate change issues, but we have to actually able not only to mitigate, but we have to actually take advantage of this issue. But for that, you need to be prepared. Another important aspect is the access to innovation, because in the developed world, they are having enough knowledge, they have enough institutional capacities to come up with innovative ideas, to come up with innovative elements, and then they specially inducted into their system, and ultimately they can benefit out of that. Especially in our part of the world, we are having this problem, and whenever we need something to innovate regarding to tackle any climate related disaster or any response to the disaster, so whenever we have to go for any type of innovation, that comes with certain cost. The fourth important aspect, the developmental challenges, is the knowledge gaps. Even in these days of education, the social media, despite all these things, we are still having the knowledge gaps, because there is no systematic studies up till now being done in this particular field, so that we have the right information. Still, people are making their decision based on opinion. So I must say that, and I think you will agree with me, that now this is no more the time to make your decision based on opinions. You have to resort one way or the other way to scientific knowledge. So this effort, I think I must commend the efforts of the NDRMF, that they have actually come up with something which can at least to bridge some of the gap that is available in the disaster, its risk and also its mitigation, and another important aspect, that is the financial perspective. So this is one of the most important aspects that is actually going to contribute to the scientific the disaster, but also help us to save precious lives and resources. Another important thing is the efficient use of resources. In our area and in our region, mostly we are having this problem that our resources are not efficiently used. So whenever resources are not efficiently used, so that create gaps, and ultimately that can give to, ultimately leads to disasters, and sometimes even to, create a lot of risk for the people. Similarly, lack of the shared responsibility is also another one and most of the important thing. Because due to the shared responsibility, we can also save a lot of lives. We can help elevate a lot of the problem that is going to be posed by the natural catastrophes. In shared responsibility, I would say, you know, like I would like to give the example of the Swat River, you know. Every years you have some sort of disaster, and you know, after 3 months back, अगर आप उधर दोबारा visit करें, and you will see कि वहाँ से पहले अगर वहाँ पे 2-3 होटल थे, तो वहाँ पे फिर 5 होटल बन जाते हैं. So ultimately, we are not feeling the shared responsibility, because if I will show the responsibility in one way, so ultimately that is going to contribute to a lot of people, downstream or upstream. So in one way or the other way, we are lacking this specific, point, that is the shared responsibility. Another, that is a more technical perspective, but I think this is also important, that we have to integrate the DRR into development. I think this is just first one such effort in which the NatCat model is actually can actually now provide the basis for the induction of their DRR into their development perspective, because they have provided a special, node for the FFC and also for the Ministry of Planning, Ministry of Planning and Development. Now they are able to see all their development, projects, especially in the context of the disaster risk reduction. Another, the developmental issue is the institutional capacity. As we are living the institutional capacities all over the country, if you see, there are certain organizations which are responsible for doing such type of jobs, but even then they are lacking the institutional capacity. So ultimately, they are lacking the specific and the technical responses, and ultimately they are not able to mitigate the, the disaster and its effects. So, keeping in view all these, these disaster-related developmental challenges, so I would like to reflect only one point. So there might have been other aspects as well, but I would only reflect on the only aspect, that is the space technology, because space technology provides the only vantage point for all these studies, all these developmental challenges to study or to mitigate or to respond to that in one way or the other. So how actually space technology can chip in this whole context? Space technology provides you a very unique advantage, that you can see, study, interpret, interact all these things in space and time. So if you are having a spatio-temporally explicit information, then you would be able to respond accordingly to all these developmental challenges. Another aspect is that with the help of the space technology, you are able not only to analyze, but you can understand the process and the phenomena that is going behind it. Some of the things are already reflected in this project, this NatCat studies that is conducted by the NDRMF and SOPARCO, in which you can actually not only see the processes, but you can also see the phenomena in the real world. Similarly, the approach must be multidimensional. So space technology can actually give you that advantage to study it in multidimensional way. You can not only see it in space and time, but you can also use different aspects of the space technology. That can be associated with their communication satellites. They can give you actually the ways and means to communicate with the people, but beside that, with the help of remote sensing satellites, you can study the phenomena. And the GNSS and others, the space technology elements can also be inducted in the process. Another important aspect is the space technology, especially the remote sensing and GIS. Whenever you image certain area, so it is actually not only just to, to capture that particular time and space, but it also provides you, actually help you to represent the real world into a digital environment, a computer environment, because ultimately you have to do certain analytics. And based on that analytic, you have to devise your strategies. So space technology, especially the remote sensing and the GIS or the imagery which you have right now, that can actually help you to represent the real world problem in a computer environment. And then you can run different type of analytic and come up with certain solutions. And beside that, when you have the space technological product in the form of the remote sensing and or GIS maps, you can study all the W questions. Because when you are having any problem or the developmental challenge, the most important thing that one come up with is the W questions. If you have the solutions, if you have the answers for all the W questions, then you can actually devise a strategy based on that. So with the help of remote sensing, you can study what can be found where, you can study the extent, you can study the impact. Beside that, you can also, capture the phenomena in time. So time is also one thing which can you, because with the help of remote sensing, you can repetitively, cover one particular area, and then you can devise your strategy accordingly. Similarly, causes and effect studies can be done, and it can be also extended to the investigated studies. Similarly, you can study how this actually unfolds. So this particular aspect can also be very confidently studied and then can be used for different type of mitigation measures. Apart from that, space technology can give you the advantage to study not only the state, but pressure and impact, because these three things are very much important for the disaster risk and in its mitigation. So with the help of remote sensing and GIS and other associated technology, you can study the state, what is actually the state, and what are the pressure points, and what are the actual impacts. So you can do that by observing any area, you can monitor that, you can classify that, you can measure that, and ultimately you can detect it. So all these advantages that is associated with the space technology, and that space technology is sufficiently used in this project of the NetCat. So besides that, as being a representative of the National Space Agency, I would like also to reflect some of the recent development which SPARCO has done in this particular field. SPARCO has, only this year, we have launched one satellite in January, that is a communication satellite that is not only providing the services in the context of the communication, but that also provide the high throughput internet services. So you can use that for different type of services related to the disaster risk reduction or mitigation or management and other aspects. Beside that, we have launched 2 remote sensing satellites, very high resolution remote sensing satellite. One was launched in May and the other one was launched just on 31st of July. And we are again going to launch 2 more satellites, one hyperspectral and another high resolution remote sensing satellite in maybe in December or early next year, January. So we are just striving hard to harness the space technology and make it available for different type of institutions, organizations, ministries, and departments to use it in their own perspective in one way or the other, even just for the developmental purpose, or that can be used even for different type of disaster risk assessment studies. Last but not least, I expect that this seminar would help in bridging the gap between the technical people, policymakers, the donors, and ultimately help to reduce the vulnerabilities and the risks associated with this, with the natural disasters. Thank you very much, sir.
Thank you so much, sir, for a detailed discussion and information. I now invite Mr. Abid Qiyum Sulehri, Executive Director of Sustainable Development Policy Institute. He is a leading expert on sustainable development, political economy, public policy, food security, and climate change. He serves in various international and national policy-making forums and has represented Pakistan in several official and civil society delegations at the global level. Dr. Sulehri is currently a member of International Advisory Committee of COP29, the Board of Directors of National Disaster Risk Management Fund, the Advisory Council of Asian Development Bank Institute, the Pakistan Climate Change Council, the Board of Directors of Benazir Income Support Program, and the Board of Governors of National School of Public Policy. Sir, we look forward to your thoughts on strengthening the policy landscape for disaster risk financing.
Thank you. Good morning, ladies and gentlemen, excellencies, distinguished guests, friends from media, from academia, from civil society, and disaster managers, disaster preparedness practitioners, and policymakers. Today, if we need to think of two commonalities or two common phrases that can bind the world, it is tariffs and disasters. One can argue whether tariffs they lead to disasters or not, but of course, disaster, both man-made as well as natural disasters, they are something which are now spread across continents, from Texas and New York, New Jersey to Chakwal in Pakistan, from Catalonia in Spain to Moscow in Russia, from Uttarakhand in India to different parts of China. Disaster is something which is now one can think of in this world, which is already 1.5 degrees centigrade warm than the pre-industrial level. Now, the magnitude of the damages, very often we give this argument that if countries like America, they are not resilient from disasters, how can a country like Pakistan can be resilient from it? I think the major difference that lies in disaster management in developed world and developing countries is the magnitude of human lives, and it's the rebuilding capacity. How quick the life can be normalized after disasters, and that's where role of disaster preparedness and disaster management that comes in. And that's where the major difference is in this paradigm shift of planning, paradigm shift of development initiatives, and planning for uncertainties. We often say that natural calamities, they may be unavoidable if they are bound to happen, but with right set of policies and practices and preparedness, one can avoid getting those natural calamities turning into human disasters and human catastrophes. And this is what today's seminar is all about. Please let me appreciate the efforts of NDRMF team and SPARCO for developing this groundbreaking NatCat model, natural catastrophe model. This natural catastrophe model, it's basically NatCat would bridge the gap. I firmly believe that such information models, they will help us planning for uncertainty, and they will help us anticipatory planning by way of taking new approaches. Every dollar and every rupee lost in a disaster has a double whammy. It's not only loss of that rupee, it's also spending additional rupees to build it back. And that's where information and data is required. So this is, I think, one of the foundational aspect which I'm sure Ministry of Planning is incorporating in public investment decisions. Ministry of Planning and Development and a new initiative is incorporating such information in PC1 preparation and in loss and damage analysis. One is also looking forward to this disaster risk financing strategy that is again jointly prepared by NDRMF and Ministry of Planning, which talks of two types of strategies, the sovereign funding like catastrophe bonds and other, but also this non-sovereign initiatives like agriculture insurance and weather-based insurance, for which, as I alluded earlier, that NatCat's analysis and data would be quite important. Now, ladies and gentlemen, towards the end, I would also like to highlight the resilience of community and indigenous communities. While we are talking of disaster financing, I think we shouldn't always take this topic from a victimhood mentality. The argument I want to present in favor of my case is Geneva pledges after 2022 floods were for $10.98 billion. Out of those $10.98 billion, only 5% are grants, rest of them are loans. Out of those loans, if you take $1.8 billion oil for deferred payment out, the net liquidity that came to Pakistan till 30th June is less than 25%. It's 24.9% liquidity that came to Pakistan 3 years after that catastrophic floods. And if we go to Sindh, if we go to Balochistan, if we go to those flood-affected areas, one can find the marvelous resilience in communities and, of course, mobilization of indigenous resources that had tried to bring those communities back to near normal, if not normal. So while we are talking of disaster financing, I think this is a capital and this is something that needs to be brought on table while negotiating. I think communities, they are not begging for money. They are not expecting money from their vulnerability lens. They are putting their meager resources on table to build back better, and they are asking for matching grants and matching funds. And it is the trust in those communities that would be the key and success to any disaster risk financing. So we are vulnerable, but we are a resilient nation to disasters and to climate change. And when we talk of disaster financing, it is that resilience that need to be supported and that needs to be financed. And for that particular purpose, these sovereign and non-sovereign initiatives, those are extremely important. And another window of opportunity that I would like to highlight here is Resilience Sustainability Facility by IMF. This $1.8 billion for next 18 months. One is hoping that after the successful completion of our review in September for the Extended Fund Facility Program, we will receive the first tranche of RSF. And if you go through RSF modalities, you will find that disaster preparedness and disaster management, disaster-informed public investment are the key pillars. And of course, one would like to see complementarities in all these initiatives. In the presence of this multilateral support in the shape of RSF and in the presence of resilience shown by communities at grassroots level, the only thing that can bridge these micro and macro level initiatives is our commitment to disaster risk financing. And for this, I look forward to learn from experts on how to mobilize finances for disasters. Disasters are multidimensional. They don't know boundaries. And their solution can also be a collective, multidimensional and multidisciplinary. And that's what today's meeting is all about. Thank you very much again, ladies and gentlemen, for your attention.
Thank you so much, sir, for your words. Up next, we have Mr. Samuel Rizk, the resident representative for UNDP Pakistan since July 2023. Prior to his appointment in Pakistan, Mr. Samuel served as head of conflict prevention, peace building, and responsive institutions at the UNDP Crisis Bureau in New York. Mr. Samuel brings over 2 decades of global experience in peace and conflict resolutions, post-crisis recovery, resilience programming, and development finance. We welcome you to share your thoughts on this critical agenda. Ladies and gentlemen, Mr. Samuel Reiser.
Thank you very much for the long introduction. Many thanks to Mr. Bilal Anwar for this kind invitation to be here today, and a warm welcome to a lot of colleagues from the development partners, distinguished representative from Suparco, but also Emma, Dr. Solari, and colleagues from the UN system as well. Maybe a few thoughts to share. I could read this out, but I'll read and interpret a few things too. So first of all, thank you for pulling together, to NDRMF, for pulling together another discussion on disaster risk financing. I think there is, first of all, no shortage of these discussions. Secondly, no limit as to how much more advocacy needs to be done to keep this high on the agenda. Pakistan has the known climate risks, and proactive inclusive financial planning at this point is not an option. It is actually urgent. Everyone remembers the 2022 floods as the most recent big event. Can it happen again? Yes. Does it have to be as damaging or costly? No. I think that is lesson number one. It is important that Pakistan has actually moved quite a long way in this resilience effort, and that's why I think what Dr. Solari mentioned now, what is the quality of resilience and who actually is resilient in this country? There are two parts that are important to distinguish, and I think disaster risk finance is also somewhere in the middle. People and community resilience, there's no doubt about that. Institutional resilience leaves some question marks, although there's a lot of progress on there. And I'll talk a little bit about what this means as well. So the different parts of resilience are really quite important. Think about the word resilience in its simplest form. The ability to stretch but not break, like an elastic band. Now you put this image in your mind and you decide for yourself, is this country, is this community, is this institution able to stretch but not break in the face of the next crisis? Earthquake, flood, gulf, drought, etc., etc. I think that remains an open question mark, and the answers are yes in some places, maybe no in other places as well. There remain particular structural issues that perhaps have been more exposed because of the 2022 flood that I think still require some work. The differentiation between what is a grant and what is a loan, and the private sector investments that are required, and what is the balance in between all of them, exposed the international financial architecture for disaster response that brought to mind what is ethical and moral about financing disaster recovery from loans, for example. It's a big thing now. A lot of discussions around debt and how much more debt some countries like Pakistan can actually take. And that's where I, in a little bit of a footnote, I often wonder whether we are talking about making Pakistan resilient or making Pakistan resilient again. I mean, anything that now starts with making almost always has to have an again at the end. And that remains also an open question mark. The structural challenges that Pakistan still has, notwithstanding the amazing turnaround from just 2 years ago, from the macroeconomic near meltdown, security challenges, a political transition on the horizon, and the legacy of the flood from just 7 or 8 months ago, a lot of that is actually gone. Macroeconomic stability is happening, but other development indicators are actually going in the other direction, whether it's on gender parity or human development, etc. That, I think, is part of the challenge that Pakistan continues to have, and I feel in many cases fixing, investing in, working on other development indicators will actually build the resilience of Pakistan. 2 years ago, if you asked anyone, especially those that wanted to invest in the country, either private sector investors, local or international, do you feel that Pakistan is a bankable country? I say this because a lot of people since then have been developing bankable projects or portfolios of bankable projects or something or other. 2 years ago, Pakistan, for many investors, was not a bankable country. 2025 is a different story. Pakistan actually is a bankable country because of all of these good macroeconomic indicators, and perhaps that is another area to consider as we discuss disaster risk finance. Who will finance in a bankable environment, I think is really good. Really happy that along with NDRMF and many partners here, everyone is concerned about the same thing which relates to disaster risk financing. We look for opportunities in UNDP and the UN system, and I think more and more global expertise, global capacity, global know-how, especially on tech and data, will likely happen. Myself and Shiraz, who heads our Resilience, Environment and Climate Change Unit, had a discussion with our global team, the one that works on capacity for disaster reduction initiative, KADRI, a well-known interagency platform, and they committed to helping us figuring out what is the gap that needs to be filled on DRR that we can help with, along with colleagues in IOM and WFP and FAO and many others as well. Current partnerships with NDRMF, NDMA, MOCC, Securities and Exchange Commission, I think have been largely working, although in many cases happening in parallel, and I think maybe that's the next effort as well, which is how to coordinate all of these efforts. So among all of the bad news that we always share about the grievance narrative in Pakistan, there are some bits of good news that are just as important to share. One of them, for example, is where Pakistan actually is leading globally and regionally as well. Last year, with UNDP's support and a number of other colleagues who are here as well, whether it's GIZ or others, Pakistan became the first country in Asia and the second globally to complete an in-country process for the Global Shield against disaster risks. Exposed during that process one issue that I think became quite critical: who pays for insurance and who pays for the premiums for the most vulnerable here. 1% of GDP here in Pakistan goes to insurance. We understand that because if you have 43% poverty, then a lot of people don't actually have disposable income to be able to spend on insurance. But they are the most vulnerable. They are the first people that lost homes, houses in Sindh and Baluchistan, many of whom are still out of houses, lost access to a school or a livelihood or a hospital or their own business as well. But Pakistan is moving along the way, and with the help of the Global Shield, it may be the case that there will be standby financing to pay for insurance if and when another disaster happens again, and then eases the burden on getting more grants and getting more loans as well. So I very much commend NDRMF for launching the NatCat model and the DRF strategy. And now I think the focus becomes more not on strategies or on standby financing, but on implementation. And that's where I can tell you that much of the discussion among development partners here, also with our national partners, government or non-governmental, is not necessarily about the lack of money, but it's about the speed of implementation if and when money actually is there. That, I think, continues to be a challenge here, and I think that takes a little bit of this pressure around always chasing finances. In fact, in many cases, in the case that Dr. Solari mentioned around the IMF facility, there's also an IMF facility. There's also an IFC facility, an IMF facility. I think we will hear from Emma as well about the work that ADB does. So facilities, standby funding, etc., does actually exist, and I think that shifts a little bit of the burden on how quickly we can implement as well. A couple of last thoughts to close. One is, to really think about how our support goes to the resilience of individuals, people, and communities and institutions. I think that is important. And then taking advantage, secondly, of this moment of opportunity. The moment of opportunity is actually the title of the Secretary General, the UN Secretary General's speech from the 22nd of July, the big climate change speech, and we hosted a number of young people here in the UN facilities who were actually quite upset and angry with the state of the world around how the world supports climate action these days. Secretary General's speech is only one part of what's happening over the next few months, and he pointed to a few urgent areas. Plans, NDC discussions are happening as we speak, energy transition, finance, and climate justice. And I think for Pakistan, you know, we look at little indicators of success or mentions, and Pakistan was one of few countries mentioned in the UN Secretary General's speech among 193 for some accessibility to the most vulnerable to clean energy here, which is really quite important as well. On the 24th of September, heads of state summit will also take place, which we expect the highest level of representation from Pakistan to join. And then by the end of the year, we get to COP, where the new NDC 3.0 will actually be there as well. So maybe in closing, I say count on our support where it is required. And I feel that moving ahead, the points around making resilience part of the development effort are really quite important. Again, the simplest form of resilience is stretch but not break. But in another definition as well, we look at resilience as the ability to cope and recover and sustain that recovery. Cope is for the humanitarian colleagues. We saw that after the flood, but almost everything else since then has been the burden and the urgency and the work that development agencies need to be doing. So congratulations once again on pulling us all together, and looking forward to the next few weeks and months of urgent effort on disaster risk financing. Thank you.
Thank you so much, sir, for reinforcing once again that resilience is a continuous process and that UN definitely stands on the agenda of leaving no one behind. Next, I would like to invite Ms. Xiaozhen Fan, Country Director for the Asian Development Bank in Pakistan. She leads ADB operations in the country with a focus on promoting inclusive growth, resilience, and competitiveness under the country partnership strategy. Ms. Fan holds a doctorate in economics and brings over 30 years of professional experience, including 22 years in ADB. She has leadership roles and expertise in development economics and regional financial cooperation across Asia. Ms. Fan, we look forward to hearing your reflections, please.
Good morning. CEO and the RMF, Mr. Binal Anwar, distinguished guests, ladies and gentlemen. It is truly an honor for me to attend today's disaster risk financing seminar. This is truly a timely and important event. It comes at a pivotal moment in Pakistan's journey towards financial resilience to disasters. As climate and disaster risks intensify, the ability to mobilize rapid, predictable, and scalable finance is critical to protect lives, safeguard livelihoods, and maintain development gains. Today's seminar brings together the insights across the government, development partners, insurers, and academia. This is a valuable step towards validating the disaster risk financing strategy approved in 2024 and chart an effective path for its implementation. ADB commends the Ministry of Planning, NDRMF, and SPARCO for your policy and technical leaderships in formulating and launching Pakistan's first 10-year disaster risk financing facility and the National Catastrophe or NatCat model. Both are landmark achievements that lay the foundation for a disaster resilience financial architecture in Pakistan. The DRM strategy marks a shift towards reactive recovery to proactive risk management. Pakistan's approval of the DRM strategy in 2024 also marks a decisive shift towards a risk-layered disaster risk financing framework. This framework includes 5 layers, namely, first, budgetary reserves, secondly, contingent disaster credit lines, thirdly, sovereign insurance, fourth, catastrophe bonds, and finally and fifth, a solidarity fund. Ex-ante disaster risk financing or financing arrangements made before disaster strikes, as I just listed, plays a vital role in complementing post-disaster risk funding by ensuring timely and predictable access to resources. This will reduce fiscal burden and disruption, accelerate recovery, and protect development gains. ADB is proud to support Pakistan's transition from a reactive disaster response to a proactive, risk-layered financial strategy anchored in institutional reforms, data-driven planning, and inclusive protection. Through ADB-financed Climate and Disaster Resilience Enhanced Program that was approved late last year, we are supporting the integration of DRF into the government's fiscal planning and access to contingent disaster and climate finance. The Climate and Disaster Resilient Finance Enhancement Program, SAP Program 2, is expected in next year. And in that, we plan to have a contingent disaster financing facility for the first time in Pakistan. Through our technical assistance, ADB is assisting Pakistan in building an inclusive insurance market. This covers crop insurance for farmers, protection for public assets, and microinsurance for vulnerable households. Innovation is at the heart of the disaster resilience effort, and data is critical for disaster risk management. In this connection, it is important to acknowledge the NatCat model jointly developed by NDRMF and SPARCO. This model enables a data-driven risk analytics, insurance premium estimation, and prioritization of financial protection tools. ADB is also supporting innovative financing approaches, such as the Islamic finance, parametric insurance, and mobile-based payout systems. These aim to deliver fast, inclusive, and effective protection, especially for low-income and rural households. These tools must be scaled and embedded in social protection, agriculture, and public asset management. DRF instruments must also be gender responsive and socially inclusive. Social protection programs, such as the Benazir Income Support Program, which ADB also plays an important role, plays a transformative role in embedding financial protection within Pakistan's social safety net, ensuring that women and vulnerable groups are not left behind. Global practices offer valuable lessons for Pakistan. First, a layered risk financing approach, combining budgetary reserves, contingent credit lines, insurance, and social protection, social safety nets are recognized as global best practices. Second, Even the best designed disaster risk financing instruments can fail without strong institutions and public trust. Therefore, good governance, predictability, and transparency are essential. Pakistan is well positioned to learn from the global experiences and lead by example in the region. In closing, we continue to call on all stakeholders across the government, private sector, academia, development partners, civil societies, and many more to collaborate in scaling disaster risk financing instruments and embedding them into Pakistan's financial architecture. ADB stands ready to support Pakistan through financing, innovation, capacity development, and regional and international knowledge exchange. Together, we can build a future where resilience finance is mobilized before disaster strikes, and the responses and support reach affected communities swiftly, equitably, and effectively after a disaster. Thank you very much.
Thank you so much, Ms. Chausen Fan. Okay, so ladies and gentlemen, I would like to share a quick update. Minister of Planning, Development and Special Initiatives, Professor Ehsan Iqbal, has been urgently summoned to a high-level meeting with the Honorable Prime Minister. He will be joining us shortly as the meeting concludes. Given the ongoing monsoon season, we can only hope that it is a matter of routine national importance and not a response to any national or emerging disaster. So we appreciate your understanding and patience, and we look forward to welcome him shortly. Now, with that, I'm absolutely excited to announce, and with a lot of pride, that our first knowledge product, the NatCat Atlas, based on our flagship initiative, the NatCat model, is here. The NatCat Atlas covers all major perils, and it will be highly useful for DRR and climate change experts for the risk-informed development and decision-making in the country. To launch the NatCat Atlas, I would like to invite Mr. Bilal Anwar, CEO and DRMF, Dr. Abid Qayyum Suleri, Executive Director, SDPI, Dr. Amjad Ali, Director General, SUPARCO, Samuel Resk, UNDP Representative, Chausen Fan, ADB Country Director, Dr. Farooq, Director, SUPARCO, and Dr. Bashir Hussain, Manager, DRF and DRMF. And I'm sorry, I forgot to announce Ms. Mia Suto, Country Director, IOM, to please join us on the stage also. एक और Another knowledge product, a technical booklet based on NatCat model, again is launching very soon. Please look forward to it as well. Now, may I request Dr. Abid Qayyum Suleri to please come on the stage and hand over the shields to our distinguished guests, please? Mr. Samuel Rizk, Resident Representative of UNDP Pakistan. Next up is Shausan Fan, ADB Country Director for Pakistan. Dr. Amjad Ali, Director General, Sparco. Now, may I kindly request CEO, Mr. Bilal Anwar, to kindly present the shield to Dr. Abid Qayyum Suleri. Yes, sir. Thank you, everybody. Thanks to all for their valuable insights and commitments over here. Now, next up, we have a keynote speaker presentation by Arup Chatterjee on capital markets and insurance practice team from Resilience and Risk, Global Insights and Pakistan Opportunities. Arup Chatterjee, Unit Head, Manila, ADP.
Hello. Hello, am I audible? Hello, Salam alaikum and good morning. Am I audible?
Yes, Arup, you are definitely audible.
Okay, thank you so much. So let me start then. Distinguished guests, ladies and gentlemen, it's a privilege and an honor to stand before you today, not just as a financial sector specialist, but as somebody deeply committed to the idea that finance can protect lives. We gather here in Islamabad, a city that has seen its share of tremors and storms, but also resilience and renewal. And today we are joined by leaders whose work shapes the very fabric of Pakistan's future. I begin with Professor Ahsan Iqbal, Minister for Planning, Development and Special Initiatives, Deputy Chairman, Planning Commission, whose vision guides national development. We also had the privilege to hear from Mr. Amjad Ali, Director General Suparco, Dr. Abid Suleri, Executive Director of SDPI, Dr. Samuel Risk of UNDP, Ms. Emma Fan, our ADB Country Director, each bringing vital perspectives on risk, resilience, and reform. And special thanks to Mr. Bilal Anwar, whose leadership at the National Disaster Management Fund has brought us together today. So let me begin with a very simple question. What if Pakistan had a $500 million disaster risk buffer in place before the 2022 floods? If we picture it, we will find that families were displaced by rising water, schools are submerged, markets shuttered. And yet within days, relief arrives, reconstruction begins, hope returns. And perhaps that is the power of financial preparedness, what we are all talking about today. Because resilience is not built in the aftermath, it is financed before the disaster strikes. Why disaster risk financing matters? Well, we live in a world where the rare has become a routine, something we have heard in the previous session. Pakistan has faced the 2005 earthquake, the 2010 floods, and the 2022 climate-induced catastrophe. Each event left behind not just broken infrastructure, but broken lives. Losses exceeded $50 billion, and recovery was delayed, not because we lacked compassion, but because we lacked financial protection. In every disaster, the vulnerable suffer the most. The farmer whose crops are gone, the mother whose home is lost, the child whose school is destroyed, but it needn't be this way. Imagine disaster risk financing as a fire extinguisher in a building. You don't install it after the fire. You install it before, knowing it may save lives. Disaster risk financing is that extinguisher, ready, reliable, and rapid. The disaster risk financing, again, is not a one-size-fits-all approach, and it is a layered shield tailored to the severity of the risk and its frequency. We have already heard about it. It comprises of various layers. The base layer comprises of basically the budgetary reserves for frequent and low impact events like seasonal floods. The middle layer is comprised of contingent credit lines, and ADB's Climate and Disaster Resilience Enhancement Program is a prime example where there is a contingent disaster financing facility which is being developed and likely to be approved next year. The top layer is insurance, reinsurance, and catastrophe bond for rare high-impact disasters. This structure ensures speed, efficiency, and fiscal stability. But this DRF architecture must be embedded in a broader framework alongside debt sustainability, macro fiscal buffers, and asset management. Now, we discussed about insurance and reinsurance. That is also an important backbone and recovery. Let me tell you a story. In a small town in Japan, after a devastating earthquake, families returned to their homes, not because the ground had stopped shaking, but because their homes were insured. Within weeks, reconstruction began. Children returned to school. Businesses reopened. This is the quiet power of insurance. a promise of recovery, a shield against despair. In Pakistan, we must build that same promise. Insurance and reinsurance are not just financial instruments, they are tools of dignity. They protect infrastructure, they support households and businesses, they reduce dependency on aid, and stabilize entire markets. Globally, we see powerful models. The US National Flood Insurance Program, it blends public funding, reinsurance, and catastrophe bonds. New Zealand's Toka 2 offers public-private residential hazard coverage. Mexico and Chile have used sovereign risk transfer via catastrophe bonds. Japan combines household earthquake insurance with fiscal buffers, and Australia and Canada embed disaster risk financing in federal planning. Again, we also see in Asia countries like Nepal, Bangladesh, and the Philippines who use community-based models, microinsurance, and social protection to address local risk. And in Turkey and Morocco, scalable solutions like the agriculture insurance pool in Turkey, Tarsim, the Solidarity Fund of Mexico, they tackle covariate risks, the risks that affect entire regions at once. So there are different solutions which are available, and Pakistan can adapt a solution which best suits her needs. Now, despite all these innovations, a protection gap looms large. Asia and Pacific account for nearly half of the 1.86 trillion global protection gap projected for 2025. This gap is not just a number, it is the difference between recovery and ruin. Closing it is not only a technical challenge, it is also a moral imperative. So how do we scale DRF to close this gap? We have to build resilience through institutions and innovation. We start with strong institutions first. Multinational partners like the ADB, the IMF, the World Bank are already supporting Pakistan through layered DRF strategies, contingent financing, insurance market development, and macro fiscal stability. Under ADB's Climate and Disaster Resilience Enhancement Program, Sub-Program 1, we focused on institutional reforms, while Sub-Program 2 will offer a contingent disaster financing. Another initiative on the anvil is ADB's Insurance Transformation Program, which is about strengthening regulatory capacity and promoting inclusive insurance programs, insurance products, I would say. These are just not programs, they are building blocks of resilience. But these institutions alone cannot carry the weight, and that's where we need the private sector and the insurance sector here especially, not as a donor, but as a partner. Corporates and agri-businesses must also adopt risk-informed practices and invest in resilience. Why? Because protecting their operations also protects the economic fabric of Pakistan. When businesses integrate disaster preparedness into supply chains, financial planning, and investment decisions, they become anchors of stability. Let me also talk about technology and inclusion, the new frontier. Let me take you to a village in Sindh. Imagine a farmer receiving a payment on his mobile phone within hours of a flood, thanks to a parametric insurance app. No paperwork, no delays, just help when it's needed the most. This is the promise of fintech and insurtech. Through mobile payments, blockchain, and parametric triggers, we can deliver fast, inclusive protection, especially to the rural and low literacy users. Pakistan's startup ecosystem must rise to this challenge. It must build digital disaster risk financing solutions that are locally relevant, scalable, and accessible. Technology must drive equity, not just efficiency. And let us not forget the power of Islamic finance. In Malaysia and Indonesia, Takaful, a mutual risk-sharing model, has flourished. Sukuk bonds have funded health and disaster services. These instruments, rooted in solidarity and ethical finance, can expand reach and inclusivity within Pakistan's disaster risk financing strategy. They are not just financial tools, they are expressions of community care. Now, when we look back in terms of experience, what the world has taught us, let me share a few cautionary tales to you also. In the United States, the National Flood Insurance Program, once a beacon of protection, now struggles with chronic underfunding. In Mexico, the Fonden Disaster Fund faced delays in disbursement, leaving communities waiting when time was of the essence. In Kenya, livestock insurance failed to gain traction not because the product was flawed, but because public trust was missing. And in the Philippines, catastrophe bonds misfired due to trigger misalignments. The payout mechanisms didn't match the reality on the ground. These stories carry a common thread. Even the best designed instruments can falter without strong institutions, inclusive design, behavioral insights, and robust governance. Disaster risk financing is not just about money, it is also about trust. And trust is built through empathy, clarity, and relevance. Pakistan must invest in community-based risk communication rooted in local values and cultural understanding. In terms of the way forward, the Pakistan's 10-year DRF strategy is more than a policy document. It is a vision for leadership, both national and global. It must align with Vision 2025, Udan Pakistan, National Economic Transformation Plan 2024-29, the 5Es framework, and the UN Sustainable Development Goals. Let's talk about what this means in practice. The key actions would include integrating risk into public financial management, promoting risk-informed lending, budgeting for future shocks, tracking disaster spending, building an asset registry, insuring public assets, safeguarding critical infrastructure. Imagine a school in Balochistan, insured and rebuilt within weeks of an earthquake. Imagine a farmer in Punjab receiving a payout before his crops fail. Imagine a mother in Sindh whose home is protected, not just by bricks, but by policy. This is what resilience would look like. Resilience must also be measured and not just mandated. And here fiscal discipline and smart governance would matter the most. Pakistan should institutionalize cost-benefit analysis for all disaster risk financing instruments, conduct fiscal risk assessments in budget planning, adopt risk-adjusted investment frameworks, and some of the key tools in this context would include contingent credit lines, sovereign insurance and reinsurance, ESG and sustainability bonds, and also catastrophe bonds once Pakistan is prepared for the same. These instruments promote risk reduction, strengthen institutions, and build public trust. We also need strategic enablers to make this work. Let me emphasize on these strategic enablers that deserve our attention. The first is risk data and modeling. Investing in catastrophe modeling, satellite technology, and geospatial tools is important. We already heard about the steps and strides Pakistan has already made in this regard. What gets measured gets improved. Therefore, the NatCat modeling of Pakistan carried out by NDRMF is not only a grand initiative, but this now needs to be mainstreamed in terms of real use in disaster risk financing, risk transfer, and also for risk-informed development. The second area of importance is digital inclusion and financial literacy. Communities must understand risk and make informed choices. Digital tools must be inclusive and not exclusive. The NatCat mobile ad needs to be prioritized for use by risk-sensitive communities to bring about long-term behavioral change. The next area of focus should be academic partnerships and youth leadership. Universities must lead in analytics and policy design. Pakistan's youth must be empowered as designers, analysts, and champions. Pakistan can also lead by sharing lessons and co-developing instruments in the spirit of South-South cooperation. A CARIC risk pool could aggregate risk, attract global reinsurance, and promote regional solidarity. Local leadership is also important. Disaster risk financing must be community informed and locally delivered. Union councils must be financially ready to lead. Finally, women are architects of resilience. They are central to recovery, cohesion, and stability. Disaster risk financing, therefore, must support life insurance, mental health, and also protect from gender-based violence. So let me look at what a call for action would be if we have to move from risk to resilience. And this is where perhaps ADB is proud to already work with Pakistan's government to advance this vision. DRF through layered strategies, DRF through insured market reforms, and DRF through Islamic finance pilots. Further to that, we can layer it with regional knowledge exchange. But financial resilience must be tested before disaster strikes. We cannot wait for the disaster to happen and test the financial resilience. So Pakistan should conduct disaster simulation, DRF stress tests, multi-stakeholder drills, because preparedness is not just a plan, it is a practiced response. Let us integrate DRF with climate-smart financing, early warning systems, and bundled insurance credit mechanisms for the agriculture sector. This will ensure food security, stable rural incomes, and reduced aid dependencies. Pakistan's DRF strategy positions it to become a global leader, shaping norms, sharing innovations, and standing tall in the face of adversity. In conclusion, let's me close with the timeless word of Allama Iqbal. Na ho naumid, naumidi zawal-e ilm o irfa hai, ummid-e mard-e-mumin hai, khuda ke rastanon mein. Translated into English, it would mean, do not despair. Despair is the decline of knowledge and wisdom. Hope is the hallmark of the true believer, counted among the confidants of God. Let us build systems that endure, empower recovery, and protect livelihoods with innovation, inclusion, and resolve. Thank you very much for a patient hearing.
Thank you so much, Arup. If anybody has any questions for Arup, right now is the right time to ask them. Please raise your hand if you have any questions and we'll give you the mic. Arup, are you there?
I'm still here, yeah.
Okay, great. Mic.
Hi, I am Zahid from BISP and NCR. I just want to ask a question. He suggests layered approach. How he proposed that, what type of layered approach you use to minimize the losses?
So when we talk of Benazir Income Support Program, what comes to my mind is developing a shock responsive social protection system. So Benazir Income Support Program already receives funding from the government. Now, during a disaster, if the losses are high and there is a strain on, you need additional funding from the government has to reallocate budget sources. So one way we can look at it is entering into a pre-arranged financing by having an arrangement with an insurance company, something like a first loss arrangement, whereby for any addition, say you what additional expenses incurred beyond your budget, the insurance company can pay the difference up to a agreed ceiling. That is what could be done. So the shock responsive budget which you currently get is the lowest layer. Then the insurance layer kicks in, which is the next layer when the losses are less frequent and more intense in that way. So that could be one solution. The other is, of course, looking at insurance solutions which can be integrated directly with some of your interventions. Thank you.
Any other question?
Thank you, Arup. This is Dr. Adnan Aziz. Arup, good to see you online. I was hoping to see you in person, but of course we couldn't. But thank you for this enriching keynote. I just wanted to ask you something about, I understand the disaster risk elements and how can we possibly think of various tools to prevent for us to manage those risks. But a step before that, what's your thought on, do we really need to wait? Of course, having a fire extinguisher is important to be there, but do we really need to wait for such disasters to happen in the first place? Can't we go a step back and think of mobilizing finance to actually prevent from something of that from happening in the first place, rather than letting it happen or allowing it to happen first and then do that? Can't we go a step before that? And I would like to say that that is perhaps more sustainable and longer term, but would like to hear your views on that. Thank you.
Thank you, Adnan. So nice to see you after a while. You are on the dot that way. Disaster risk reduction is most important, and then comes disaster risk transfer, what we are talking about, the different insurance instruments, both for risk sharing and risk transfer. So ADB's focus was disaster risk reduction right from day one, and that's why how the NDRMF was created in the first place, to put more emphasis on disaster risk reduction. It is only the residual risk which is transferred and insured. So if you have sound foundations, definitely the chances of damages from losses are few and lesser that way. So definitely disaster risk reduction is important. ADB has been also focusing on that area. We are not only looking at insurance sector interventions, but we are also looking at how to crowd in the institutional investors, which includes insurance companies and pensions funds, into the capital market. And through capital market investments, invest in resilient infrastructure through sustainable bonds. And that's where Islamic finance instruments like Green Sukuk and all would be very, very important and very relevant in the context of Pakistan.
So we have one more question.
Assalamu alaikum. My name is Zubair Khan and I am representing Indus Consortium. I am a researcher and I want to ask ADB that has a climate resilience funder. ADB is funding major hydro power plants in Pakistan like Balakot, like Petrind, and due to this major hydro dams, the communities has been impacted and the river flows has been impacted. Don't you think so that these major hydro dams are impacting communities especially? While ADB should finance on micro or communities micro dams that doesn't impact the communities? Thank you.
Walaikum salam. Well, in principle, ADB has a strong environment and social safeguards review for all projects, and since I'm not involved with these projects directly, I may not be. It will not be proper for me to respond in terms of what are the risks which are emanating, but in theory, yes. I would say that these precautions need to be taken both for upstream, midstream, and downstream populations and also activities which are happening. Climate change is an unknown variable in the risk calculus in that sense, and therefore these are things which need to be continuously monitored and measured, and it has to be very dynamic and not very static. So we will be happy to check with our colleagues and get back to you. Thank you so much.
Okay, with that, Arup, thank you very much. With your 35 years of experience in financial sector, policy, regulation, insurance system across Asia, Africa, and Latin America, your presentation was amazing. And the way you have actually linked the risk layers with the inclusive reforms, those were brilliant and very much, okay, so very much informative. So thank you once again because you have given us a solid backdrop for our upcoming agenda. But with that, our CEO, Mr. Bilal Anwar, would like to say a few words.
Okay.
Arup, thank you very much for such a wonderful, informative presentation. And I was actually worried that you won't be able to make physically to come to Islamabad, but your virtual presence was equally impactful. And I would also like to thank you for the continuous support which we're getting from Arup in the drafting of the disaster risk financing strategy, but also in the updating and installing of the NetCat throughout the process. And now we are entering into the new phase of the implementation of the DRF strategy. I think this support is going to be very much, will be highly actually relying and depending on your experience and expertise. So thank you very much, and hope things do get better.
The pleasure is all mine. Thank you so much.
Yeah. Thank you. I really hope the relationship get better between the two countries and you are able to travel back.
Hope to catch up soon. Yeah. Thank you very much. Wishing the seminar all the success. Thank you.
Thank you so much, Arup. Ladies and gentlemen, with that, we'll now have a short tea break. Enjoy your tea and some networking. Please rejoin us back in 20 minutes.
Dear audience, we kindly request you to please settle back to your seats as we are about to resume the seminar. Thank you. Ladies and gentlemen, Assalamu alaikum and good morning everyone. I am Priyal Fazal Shah, Research Analyst at National Disaster Risk Management Fund, and I will be guiding you through the next part of today's seminar. Thank you all for staying engaged as we move into an important segment of our agenda. We now begin with our first panel discussion of the day, which focuses on a very timely and foundational topic, the key issues and challenges in financing disaster resilience in Pakistan. This panel brings together experts from across the public, financial, and development sectors to reflect on those challenges, share lessons from the field, and explore the pathway forward. To lead this important discussion, I am pleased to invite Ms. Barira Zub Shah, Manager Monitoring and Reporting at NDRMF. With a strong background across diverse thematic areas, including social and child protection, women's empowerment, and climate resilience, she leads key oversight of complex, high-impact portfolios. Ms. Barira is also the architect behind NDRMF's strategic frameworks and institutional learning systems. Today, she brings her expertise to the forefront as our moderator for this panel and will guide us through the discussion. Over to you, Ms. Barira.
Good afternoon, everyone, once again, and a very warm welcome to our first panel discussion of the day, Issues and Challenges in Financing Disaster Resilience in Pakistan. This panel discussion is a session which is an opportunity to reflect on how we can strengthen Pakistan's financial preparedness in the face of increasing climate and disaster risk. We are honored to be joined by a distinguished group of experts, practitioners, each bringing their unique perspective from government, development partners, and private sector. Their insights will help us better understand the challenges and, more importantly, the pathways to unlocking sustainable, inclusive, and forward-looking disaster financing solutions. Our first guest is Mr. Raja Rehan Arshad. He's an international development consultant with ADB. Mr. Raja Rehan Arshad is retired from the World Bank Group in 2022 and is now a senior advisor to World Bank Group and the Asian Development Bank. His last position was a lead disaster risk management and resilience specialist in Middle East and North Africa region of the World Bank Group since July 2015. In his previous role in the World Bank Group, he was the team leader of the Resilient Recovery in the Global Facility for Disaster Reduction and Recovery, based in the World Bank headquarters in Washington, D.C. Prior to that, he was also based in Islamabad office of the World Bank Group for 19 years. He has worked in the development field for 40 years now, with 30 years of experience in World Bank. He has worked in many sectors, including disaster risk management, climate resilience, fragility and conflict, water and sanitation, municipal infrastructure and services, urban and rural development, community-driven development, and decentralization. Sir, please join us on the stage. Next up, we have Mr. Ahmed Kamal, former chairman, Federal Flood Commission, as well as former member, DRR, in National Disaster Management Authority. He has over 30 years of experience in the field of water resource management, flood control planning and management, flood forecasting and warning systems, and disaster risk insurance. Currently, he is playing his role as advisor and consultant to NDRMF as well as UNDP. Thank you for joining us, sir. Next up, we have Mr. Wasim Khan, Director, Insurance Policy and Approval Department, SECP, Islamabad. Mr. Wasim Khan has been associated with SECP for past 17 years. Prior to this, he gained valuable experience working with State Bank of Pakistan and within the commercial banking sector. His core expertise lies in regulatory framework of financial markets, supervision of financial institutions, and risk management. Presently, he is heading the policy and regulatory approval function pertaining to the insurance sector. Mr. Wasim Khan, please join us on the stage. Next up, we have Mr. Johan Ramke, Energy, Climate Change, and Just Transition Cluster Head at the GIZ Pakistan. Mr. Johan has 27 years of experience in the insurance sector with a special focus upon alternate risk transfer and alternative risk solutions. He is the Regional Manager, Sub-Saharan Africa for the lines of business, marine, and specialty at AGCS. He is Underwriting Manager at Amlin Mitsui Sumitomo, Germany, and Head of Project at GIZ for Innovative Insurance Products, Climate Insurance Solutions, Financial Literacy in Ghana, Paraguay, Zambia, India, and Pakistan. And last but not the least, one of the most important guests that we have, Ali Taqi Sheikh. He's an ADB consultant, country foremost expert on climate change and sustainable development. He serves on several national and international committees and boards, including the International Board of Loss and Damage Fund. He's also a member of Pakistan Climate Change Council and the newly constituted Prime Minister Task Force on addressing the issues of water scarcity. He writes a regular column for Daily Dawn on issues of climate vulnerability and governance. Thank you so much, everybody, for joining us for this panel discussion. Sir Ahmed Kamal, you have vast experience in flood management and disaster risk reduction. What do you think are the real challenges of this rising climate change situation in Pakistan?
By virtue of whatever that we have faced so far during this monsoon season, not only in, you can say, one part of the country, but probably in most part of the country. And that has also brought out, the ill land management issues, the land planning issues, as well as, the urban drainage and urban master planning issues on ground. And not to talk about the other cities, but to talk about, let's say, on the city of Islamabad. We have been, seeing every day so much bad is being happening. First, we have seen in the, area of Saidpur village, and then we, moved down to Sector E, and just yesterday we found that in one of the areas, just in the suburbs, you can say, of Comsets University, that is Chatta Bakhtiawar, there had been a massive issue of water inundating the areas and all that. So this all calls for a very strong sort of a urban planning as well as urban resilience. And secondly, long ago, about 10 years or so, there had been an exercise undertaken by the National Disaster Management Authority regarding, the multi-hazard vulnerability and risk assessment. There was some sort of a SOPs made, rules and regulations made, and those got approved from the National Disaster Management Commission. But their implementation is not being seen on ground. Probably there are maybe a couple of, you can say, dozens of cities where those have been implemented, but not implemented fully, maybe by some organization other than NDMA, and few by the NDMA. So I think that this challenge needs to be taken care of while we now are talking about the challenges by virtue of the present climate change. We need to have a national level hand-holding with regard to undertaking multi-hazard vulnerability and risk assessment, as well as how well we can take care of the urban planning, the urban land management, as well as the implementation strictly of all rules and regulations. I'm going to talk about a little bit about, there had been an act made on river flood management. So why should not similar sort of act can be brought in for the urban areas as well, with regard to the streams flowing through the urban areas, and with regard to the drainage issues, which are now excessively posing, you can say, very real danger. Rather, they have, converted, that danger has been converted into a major disaster. More than or close to 300 lives we have already seen as lost during this monsoon season, and all of them are mostly, you can say, of them are in the urban areas of the country. So my take would be that we need not now to have much more emphasis on urban resilience. We have taken care of the flood management with regard to the riverine areas and all that. And now we need to have much more emphasis on the urban areas. Thank you.
Sir Rehan, you have advised global and local institutions on resilience. Where do you think Pakistan is currently standing in terms of DRF institutionalization?
Thank you so much for the question. And I would really like to thank National Disaster Risk Management Fund for this opportunity to come and share my views on disaster risk financing in general. The question actually has to be answered in the context of what is meant by institutionalization of DRF. Institutionalizing DRF would require a very long spectrum and sequence of events to create the enabling environment for disaster risk financing. Right now, I feel there is a need to create that enabling environment at the institutional level, at the policy level, at the financing level, as well as at the de-risking level. And I think the last one is the most important one, and my previous speaker, Ahmed Kamal Saab, also referred to it. We are looking at disaster risk financing and how it can be scaled up or it can be mainstreamed and how it can be institutionalized. But for that to happen, we really need to look at this whole misperception of natural disasters. And I would really like to repeat this as a broken record, that disasters are not natural. Hazards are natural. And this is based on my 40 years of working in the developing world. Hazards are natural, but disasters are unnatural. Disasters are man-made. So when a hazard happens or pans out, it does not need to result in a big disaster. And that's where the whole concept of risk reduction comes in. So I really feel if we really need to if we need to institutionalize disaster risk financing, we need to start first and foremost reducing the exposure, and then also more importantly the vulnerability that is so important. And as you know, risk is a function of exposure and vulnerability. And kudos to NDRMF for launching, and SUPARCO for launching the NatCat model, which we've heard so much about. And we also know that NatCat is doing historical probabilistic risk assessment, which is looking at the past history and coming up with the what is the likelihood of disasters striking again, and also looking at the exposure. But the most important part, which is in some ways the linchpin of the whole disaster risk financing industry, especially when you come to the involvement of the private sector and then the insurance industry, is the vulnerability part. And unless the vulnerability is taken into consideration, there's information on vulnerability, and vulnerability is reduced, it'll be very difficult to mainstream disaster risk financing, especially when it comes to the insurance industry and the capital markets, because they will not have the information on what is the risk involved. And because of that, they will start hedging their bets, they will raise the premiums, and those premiums will become so high that it will be very difficult for the communities or the people, and even for the public sector institutions and the private sector to take out such insurance. So I really feel there is a need to institutionalize this by focusing on the very important part of the disaster risk management equation, which is disaster risk reduction, which includes risk identification, which NatCat is doing, but it needs to be also dovetailed with what Ahmed Kamal Saab said, multi-hazard vulnerability risk assessment, because that is where it's helping to do at the micro level. And the second is risk reduction, investing in risk reduction, mainstreaming disaster risk reduction. Just one last point I would like to, and of course preparedness, which includes early warning and then of course being ready for emergencies. One last point I would like to make over here, because we are talking about financial resilience. Global studies have shown, and these have been documented by UN Office of Disaster Risk Reduction, that $1 spent in disaster risk reduction can save $15 in recovery. Now, if we are looking at how to finance recovery using ex-ante disaster risk financing instruments, we are looking at the residual risk being very high because we are not reducing the risk. What we need to do is to reduce the risk by investing that $1 and then just have the residual risk be taken up by risk transfer and, risk sharing and risk transfer instruments. Thank you.
So Wasim, you're the regulatory person. So from a regulatory standpoint, what role can the insurance sector play in strengthening disaster resilience?
First of all, I would like to thank you and the RMF to give me this opportunity. In the context of insurance sector, before answering your question, I want to highlight what's the current landscape of the insurance in Pakistan. If you look at it in terms of percentage of the GDP, it's less than 1%. But just looking at this percentage, I think that's not giving the whole picture. Currently, the insurance sector provides the coverage to more than 10 million long-term life insurance policy holders. It's the second largest financial sector in the Pakistan in terms of number of account holders or number of policy holders. Insurance sector currently provides the national health coverage to more than 150 million people in Pakistan under the Sehat Sahulat program. Insurance sector currently provide the more than 5.5 million people are covered through the small ticket through the mobile network operators. So there is a huge coverage which insurance sector is currently providing to the different sectors of the market. But still there is a lot of gaps. If you look at the auto insurance and motor insurance, currently there are more than 30 million vehicles in Pakistan, but less than 3% of vehicles are insured. There are it's a mandatory law in the country, but that is not properly covered or properly implemented. We have in the country, there is a mandatory group health insurance requirement for the laborers in the country, but less than 3% is compliance ratio. So a country where there is a very minimum mandatory insurance, where there is a very minimum implementation of mandatory insurance, insurance sector has not grown to the level of that. And when we come to the disaster risk insurance instrument as a disaster risk, it's a new phenomena in the whole scenario, in the whole landscape. In the last couple of years, we approved the disaster risk financing strategy, and insurance is embedded as an instrument in the disaster risk financing strategy. But before that, insurance as an instrument has never in ever any national level poverty alleviation policy, food security policy, or the fiscal management policy, insurance as an instrument has not even integrated in the whole landscape. So disaster insurance as a part of disaster risk financing strategy is a new phenomena. So that's as being a regulator, we acknowledge the importance of that whole phenomena or these new instruments, and we have started working on that. The insurance sector should be resilient to capture this new potential market. So we have changed the whole framework, and we have increased the capital requirement for the new insurance in the country. We have tripled the minimum capital requirement to absorb new risks. We are implementing the international standards for the insurance sector, particularly in the context of accounting standards, risk-based solvency, pooling of resources. So in the coming years, I think as the instrument will develop in the local market, as the need will emerge from the people who want the insurance. In the context of disaster insurance, there are the two main target population on the disaster insurance product. One is the people who are most vulnerable to the disasters. So in Pakistan, the flood is the main issue. So the farmers are the more vulnerable people which need this coverage. And second is the public property. These two areas where we don't have any mandatory or a national level schemes. Government has till to date have not adopted the public property insurance scheme. And the people who are more exposed to the disaster is the farmers. How the product, a market bought product, which is a crop insurance or a livestock insurance, can be affordable to such population or such people. So affordability apparently will be a major challenge. Even there may be the supply of product in the future, but the price at which this product can be offered to the people who are more vulnerable, the funding of that product, that subsidy will be a challenge. And we collectively, through this disaster risk financing instrument strategy, need to design such product which should be affordable to the such people who are the more vulnerable.
Thank you so much for your answer, sir. Johan, why do you think is technical capacity and financial literacy so central to DRF's sustainability in Pakistan?
Okay. I think we should, in general, let's say, moving away, first of all, from the technical expertise, more to a general awareness of what is a risk, what is the issues that might arise, forming, let's say, an overall understanding on which you can build the technical expertise, not only, let's say, for the insurance sector, as my pre-speaker just noted. It has also something to do is that the aspects of the traditional insurance solutions, how it was done when it was formed in the medieval years, so solidarity and subsidiary is one of the key issues, so that the ones who have a good risk have to subsidize the ones who have got a bad risk, as well as that this understanding, as well as the solidarity, if something not only happens, but the solidarity that those who can afford a premium should subsidize those who can't. So in the overall understanding of financial expertise and literacy is then building upon that. This is then something that should be included in various forms, and it's one of the key areas where we can, let's say, on the insurance build upon, and where we need the demand to generate then an overall understanding. And then, as my pre-speaker just, let's say, stated, you have to have certain insurances which are mandatory, whether it's a fire insurance for the buildings, it's car insurance, health insurance, so then you can have a certain volume of premiums which are allocated, out of which then specific risks can be covered and paid for. And in addition, you have to consider that only when we understand what we are talking about from the insurance field as well as within the society, we will be able to, let's say, also take the necessary steps in order to reduce any risks coming. So financial literacy is one of the key, or actually the key area we have to build upon.
Thank you so much, sir. So, Sheikh Saab, how do you think that DRF fitting into the broader climate finance, loss and damage agenda, nationally as well as globally?
Thank you. First, let me congratulate Bilal and his colleagues. I'm particularly privileged to be here this morning because when disaster risk finance strategy and NatCat were approved, I was on the board, and I see it's coming of an age, and I'm anticipating NDMRF's engagement in working with State Bank of Pakistan and ensuring that parametric insurance is tested at least in one sector, let's say agriculture or crops. Now, I want to divide my answer in two parts. There are some good reasons, and then there are some reasons. First, let me share with you some good reasons in terms of barriers that everybody will tell you. Fragmentation, multiple institutions competing with each other, not clear about their mandates, and overlapping and undermining each other at times. Second, such a crowded place, yet there is no ownership. And if you doubt me, by show of hands, you can see the government of Pakistan is missing in action in today's event. All those institutions who will claim ownership of this field will not be present here today. The ownership is absent. Third, we have a strategy that was approved several years ago. As far as I know, it has still not been notified. It's still in the file somewhere to become Government of Pakistan policy. We go further, therefore there is no roadmap. And roadmap would mean risks and disasters are in the provinces. We can give you national strategy sitting here, but end of the day, the action or the feet have to be on the ground in the provinces or sub-national levels. Go further, insurance or risk management for that matter depends so much on science, such as modeling, such as data systems, scientific institutions, collaboration with academia. And that modeling capacity is dormant, not fully invoked and harnessed, even if it exists. Let me stay further. An ecosystem of institutions that is needed for this purpose is still very dotted. I don't want to use a stronger word, stronger expression, but it can be more robust if it is clearer. And therefore, the instruments that we are referring to here, and some of my colleagues did, about blended finance and de-risking and layering, and you see it here also, become very high science, a very Brahmanic approach that common person or even the functionaries of government cannot relate. Even here, if I were to design it, or if I were to raise a question, I'll say, where is high frequency and high impact? There are 4 aspects, 3 are mentioned here. And this country, because of its climate ill-preparedness, not vulnerability, is oftentimes high frequency and high impact. Now I want to come to the real reasons. Anybody can tell you about these things if you are following this field. No, the fragmentation exists. I'll give you only 4 perhaps. The rules of business approved in 1973, revised time to time, have still not clarified who is responsible for this. So let's please not blame the donors. They come and they support competing projects in competing ministries and departments and provinces. It's because the rules of business need revision, and we have not done that, and therefore it causes a lot of overlap and competition between government's own agencies and Pakistan's development partners. Let me come to another part that I want to mention. Integration with existing documents. I had, excuse me, in recent years, I had opportunity to work on 3 documents. National Climate Finance Strategy, 1. Handbook at the Planning Commission to integrate climate risk screening, risk management from there, and NDC where we'll make our investments and take the action, and that's a global commitment. These documents are not reflected in these conversations at that level that is necessary. I've invested my time, and I know there are references in these documents to de-risking, to blending and layering. Nevertheless, that's where the fragmentation is. And the last point, because I don't want to give a very long answer, science, we talked about NatCat. I'm so happy that we have a starting point. It needs to be integrated with this work that we are doing here in disaster risk, and IPAS, that is the instrument that exists at the Planning Commission, so that our public sector investments are better informed by science. If a vulnerability assessment can be done, no matter how crude it is in the beginning, I don't mind that. We'll refine and polish as we go, and that has to be starting point. And that brings me to my last point. And this is my learning after a few years of work, as you can see. that I'm relatively new in this field, I may not know very well. Who decides? We have distanced and elbowed out the private sector, so that's not part of this conversation. Happy to have you here, sir, but that's not really part of the conversation. I'm happy that insurance sector is here. The insurance penetration is negligible. If you want to ask me that from 2022 floods or 2010 floods, if the earthquake before that, what percentage of houses or people or businesses were insured? Negligible, single digit and low single digit. So this sector does not exist. Disaster risk financing cannot move an inch unless this sector spearheads the change. And globally it is very well advanced in terms of determining market forces in pricing and determining everything else. But I just want to come to one element. Public sector financing has probably 1,400 projects that we call throw forward. We started the project, but we don't have the resources to finish this. I don't know, because of currency fluctuation, what the latest price tag is, but they may be to the tune of, Bilal, I stand corrected, 8 trillion rupees or 18 trillion rupees, I'm confusing at this moment. 8 trillion rupees. In other words, even if government of Pakistan was not to initiate a single project for next decade, 10 years, we cannot finish the backlog. And most of those projects are not sophisticated projects that respond to climate challenges. Therefore, our losses are getting increasingly higher and higher. They are monuments of maladaptation. They make us more vulnerable. And the decision making is still not based on science. It's still based with the political office that I need to improve certain number of projects from this or that province, this or that district. And therefore, in my humble view, there are two conversations happening in this country. One is this scientific audience that is engaged in that we need to transform and graduate. And second, where the government of Pakistan is. And government of Pakistan is still not paying enough attention to show its leadership for us to move forward. Thank you, ma'am.
Thank you so much, Sheikh Saab. You have actually taken the bull by the horns and understood the assignment absolutely correctly. So we have started with the issues and challenges completely on the right track. So I'd like to dive a little deeper into the thematic areas a little and ask the specific questions from our participants. So starting with Ahmed Kamal Saab. Sir, what institutional or policy shifts are needed to embed disaster risk financing in flood protection infrastructure planning, especially in the perspective of NFPP4?
Thank you very much for this question. Let me share with you that till 1977, the subject of flood management was being dealt with by all the provinces separately within their own jurisdictions. It was in 1976 when a major flood like that of 2022 hit the country, and it was a riverine flood. And at that time, it was decided that there should be some sort of an organization at the federal level to have a comprehensive integrated planning towards flood management, flood control management, and its implementation on ground. At that time, an institution was raised, and the then chief engineer advisor was also made the chairman of that commission. It was basically all the 4 provinces, GB, AJK, Pakistan Met Department, Water and Power Development Authority, and then a representative from the Army Corps of Engineers. Later on in 2015, in the context of 2010 floods, National Highway Authority, Indus River System Authority, NDMA were also made part of that. Now, with regard to your question, I should say that while the National Flood Protection Plan 4 was formulated in 2017 and it was updated in 2022, in the aftermath of 2022, the approach taken was that we need not to have a preemptive flood management. We need to have an integrated flood risk management approach on ground. And we need to have at least not only the structural interventions, but we need to include non-structural interventions plus the nature-based solutions and most importantly, urban and the coastal flood management. And for that very reason, for the first time, the forest departments, agriculture department, livestock department, those were made part of the entire consultative process and all that. I should say that in order to implement a document like the National Flood Protection Plan 4, there need to be both top-down and bottom-up approaches, because the real implementers are the provinces, and with their support, the district management or the district governments. So, very honestly speaking, while we should be giving the strategic guidance at the national level to this subject, we need to have a very proactive implementation strategy at the provincial and the below province level, which presently is, being implemented in a parallel way. There had been so many organizations at the federal level. We have a NDMA, we have got Federal Flood Commission for the cross-border data and arrangements. We have the Pakistan Commission for Indus Water. So rather, if we need to have a good implementation with regard to National Flood Protection Plan 4 and for a good financing strategy, if available for that, I should say that there should be a very broader sort of a spectrum with all the stakeholders having their well-defined roles and responsibilities. Ali Taqir Sheikh Sahab has, stated about the 1973 rules of business and the many other, policies and plans. Very honestly speaking, there had been so many policies and plans, but they are seldom we are seeing them fully implemented, or at least being implemented on ground. So when it comes to having something on piece of paper, it is very good. But when it comes on implementing on ground, it is seldom seen there. Why? Because we are continuously having our governance level or our governance stature, deteriorating day by day. The organizations who are meant to have such plans to be implemented on ground, they are not, being given attention to. They are not being given the new latest tools, technologies, and all that. New things are coming, and those new things are being, dealt with by the setup with some new persons. But there is no integration among them, and then there is also a, difference in decision making. Probably at times we have got a single decision, and at times, there are so many good things to be done on ground. But by virtue of that lack of decision making, or probably lack of that overall consultative decision making process, we are not good in getting close to that. We have got the National Adaptation Plan, we have got that National Flood Protection Plan, and now very recently we have got National Master Plan on Flood Telemetry, and there are many others. There are so many good things. We are still struggling to have our nationally determined contributions document prepared for, that is NDC 3.0 for this year. Why? Because when this activity started, it was so difficult to have a data, so difficult to have a right person from the organization, and there was a sort of everyone is working in isolation with very little or very less coordination, or you can say collaboration spirit among them. I should say, for that very reason, there should be a single forum with so many other, you can say, entities working together, but where their well-defined roles. NDMRF has, taken on ground because of a certain activity undertaken by the government in 2016-2017 by virtue of an MOU signed between ADB and the government of Pakistan. This forum, this NDMRF forum, has proved to a certain extent, I should say, that they worked directly with the provinces, and then they had supported them a lot with regard to at least implementing their very direly needed flood protection infrastructure or rehabilitation infrastructure on ground. So now we are saying that even NDMRF is probably is a bit subdued or like that, maybe because of the policies and because of the, maybe some new things are coming. So while we are getting close to something, a good success, then we retrieved back. I think that has brought us to this point where now we are sitting together here and discussing on this issue. Thank you very much. This is what I should say. There are so many other points that I can talk on that, but maybe the other participants should also be giving their views. Thank you very much.
So one more question from you is that you're also the architect of National Telemetry Plan. Please, can you share with us the benefits and challenges of this plan?
2010 flood was something that, raised some of the very important issues like, if I am not wrong, at that time I was in NDMA, there were about 1.4 million evacuations were made from both sides of the river system. And there had been so many encroachments, and there had been so many, you can say, agriculture practices, those were going on within the riverbed and all that. At that time, it was, being debated, and it was thought that how we can take care of, or we can get rid of all such, issues in the event if a disaster is coming, we lose so many of lives, as well as an extra effort is required to take the people out from the right of way of the rivers and all that. So, as a matter of fact, this debate, I got an opportunity by the grace of Almighty Allah. I raised this, issue at many forums, and then I should, put all credit to ADB, who at my request in 2022, agreed to start working on that, and ADB did not enter into any sort of an agreement with the government of Pakistan, and then we had a certain TORs made, and by virtue of that, this National Master Plan was prepared. What is this National Master Plan flood telemetry? You just, just imagine that our Indus River system is like a tree. 5 are the main rivers, and ultimately it enters into the Arabian Sea. But each river has got small and further small and further small river and stream entering into it. So we need to take care of each and every small branch of the smallest of the rivers, so that whatever flow that is generated there should be dealt with there, and then it should not be converted into any flash flooding or like that. So by virtue of that, the entire country was seen under that lens. 707 telemetry stations were proposed to be put on small secondary and tertiary rivers, so that we can have a accounting of each and every nala and stream where any swelling or any sort of a flash flooding is generated. Once that telemetry system is going to be put on ground, then the second concept we brought in was that we need to have a regional forecasting centers in our 4 provinces, including GB and AJKY. At present, we have only one flood forecasting division in Lahore, which takes care of the entire forecasting responsibility for the entire country. When we are going to have this 6 regional forecasting center, each regional forecasting center is going to have a prediction made for that particular region, and having that telemetry network for all the smallest of the rivers are on ground, a good estimation of a forecast for that particular region is going to be made. So then there comes the third tier. Once the forecast is available and the data is provided by this telemetry system, the provincial disaster management authority or that relevant regional disaster management authority will be better prepared, will be in a better position to put a response, and then it will be able to take care of the issue there and then. Then finally, there is a central decision support system, which is going to see what is happening in KP, what is happening in Sindh, Punjab, Balochistan, all that. And even the Balochistan is seeing what is the state of affairs with regard to regional forecast in KP or in other areas. So it will be a two-way process. The decision makers, highest level, will be able to have a certain decision taken, and there will be much more resilience at a regional level. I'm very much, hopeful, and I have a sort of a passion towards that if this system is going to be implemented on ground, let me assure that the issues that we have been facing during this monsoon can be, addressed to a very far extent. Finally, along with all these, we have also identified 20 plus cities in the country. We identified those 22 cities in 2017 that those are most vulnerable to urban flooding. Had an implementation like that of the early warning system, which presently working in Rawalpindi, Islamabad, with the support of JICA, with the support of Government of Pakistan, had been implemented in the other such cities of the country, this issue could have been settled. Final point. In Rawalpindi, Islamabad, in my first response, I stated that so much bad has happened. But in 2003, we had brought out 3 interventions. Number 1 is the early warning system for Rawalpindi, Islamabad, and second was to set up a community pond in the F9 park in Islamabad. And it was all a study undertaken with the support of the JICA experts with an MOU signed between the two countries. And the idea behind was that the 4 Kassis, Tinnawali, Badranwali, Kantanwali, and Saidpur Kassi, they bring from the Marga Hills about 35,000 to 45,000 cusics of water, and then it creates havoc when this water goes to Rawalpindi, because the Nala lay there is constricted, and then once it is constricted, so much bad happens to the population residing on both sides of it. That project had the capacity to retain that 35 to 45,000 cusics of water in a small pond or a dam, and then once the water in Rawalpindi recedes, this is going to be lowered by 15 to 20 cusics of water per second, so that nothing happens in the two cities. And finally, for the longer term process, a diversion channel was proposed to take care of all those 4 Kassis and to put their water directly into the Kurang River downstream of the Rawal Dam, so that water is taken to the Samar River and then ultimately to the River Indus. Unfortunately, a very good project, a very time-tested sort of approach being used elsewhere in the world, was probably, we tried our level best to have those interventions on ground, but those could not be implemented because of so many, you can say, policy level decisions or indecisions. So, I was talking about the National Master Plan Flood Telemetry, and I have, quoted an example of Rawalpindi, Islamabad. I'm pretty certain that if such sort of a master plan is implemented and tied with all those national, provincial, and district level entities, it is going to bring much good with regard to climate related resilience. Thank you.
Thank you so much, sir. Wasim Saab, you have actually established that insurance penetration in Pakistan is actually very low. What do you think, A, in the structural terms, B, in the cultural terms, C, in the market terms, why is this penetration too low? And what can we do to increase this insurance uptake, particularly in the vulnerable communities?
If you look this problem holistically and try to solve it holistically, then we need to work on a chronological order. So we can start, there are some challenges, start from the legal side and the political side. And the Sheikh Sahib also identified that first you have to work on the legal framework. Do you have what kind of legal framework we have for the insurance sector and for the inclusion of the insurance in different public policies and the national level strategies, and the ownership of the insurance at the different ministries level, like a crop insurance currently not mandated to any ministry on the provincial level and at the federal level. So we can start from the legal and political level. The next step will be economical challenges, because affordability will be a big issue, particularly in the context of this disaster risk insurance, and the budgetary constraint at the national level for allocation the appropriate support from market-based instrument to vulnerable people and to the public property. And third can be the technical challenge, development of product on the basis of available technical data, and in this direction NDRMF is already working on the NetCode model and all these things, and then we have such data and the SPARCO capacities and facilities, and insurance sectors also exploring that. So that an area that can be, that is a challenge they will have to be developed in the field for development. Then that will move toward the development of the specialized product for that disaster things. And then we can move toward the political, social, cultural and religious issue. I think that is the last area that can be touched to the proper public awareness, takaful-based products and other market-based intervention, because the product we are talking about that is the disaster risk insurance. That cannot solve the problem only through that cultural and awareness issue. We need some technical level, legal level and political level will for adopting this instrument in their whole ecosystem.
Building on that, Johan has already, aligned with those insurance sector barriers, discussed the technical skills buildings, particularly in financial literacy and DRF. Johan, what do you think that this technical skill building, particularly for the resilience of women and marginalized group, how can that be built on? And how can GIZ help integrate this gender perspective or the inclusive approach to it?
Okay, from a general perspective, it is, let's say, I think, a general matter whether it's now, let's say, any of the genders who is involved. And it should be an equal approach, irrespectively. At GIZ, or GIZ, we focus, let's say, in general on the projects and our cooperations we are having together with the various ministries, that a stronger focus always should be on the women as such, as the most vulnerable in various fields, not only on the issue of climate change and everything related to it, but also when it comes to literacies, when it comes to general vocational training, when it comes to all other aspects. It is not only one of the key areas, but from our mandate, it is also, let's say, the key area that women, as well as the inclusive ones, are on a higher perspective and high level incorporation. And usually, let's say, the most interesting part is if you see then also the understanding and the awareness, as well as if you go just for micro loans, it's most interesting that they are usually picked up on a high percentage rate from women, and they have got the highest recoupment on any micro loans because they are much more aware and have got a much better understanding in general, because they are usually, let's say, in general or usual, wherever you are, the key holders of the family. They take care that the family is, let's say, safe and sound. And so it is always a much better approach if you find the opportunities to give those the literacy and the understanding and the awareness, as they are then the ones who then reach out to all others, as well as in general, if you see the cooperatives which women have, it is very important to see that the ones who are driven and very moving ahead are always the ones that are purely set up by the women. So in general, from our perspective, GIZ, so we really support that as strong as possible, and it's one of our key mandates as well. Honestly spoken, so here, let's say in Pakistan, we are moving very well ahead. So usually the quota is already lying at 40%, sometimes even reaching over 50%. So this is quite high. And it's in all fields. It's not only, let's say, when it comes to disaster risk issues, insurance, financial literacy, but in all fields. Thank you.
Thank you, Johan. Sir Rehan, I'd like to ask you from the perspective of international development partners that how can international development partners support government of Pakistan in implementing this policy and regulatory response, particularly to foster that private sector engagement in terms of DRF?
Thank you so much. A lot has been said since the morning about the support from the development partners and the international financial institutions. Having spent 40 years with the development partners, and this has been one of the main areas of focus that I have been working on globally, the development partners they generally support countries and governments, and then more importantly the people, in promoting the full spectrum of disaster risk management, which is, as I mentioned earlier, risk identification, risk reduction, preparedness, financial protection, which is what we are discussing today, and then of course response and recovery. So it is this complete menu of the pillars of disaster risk management which have to be taken as one. And one cannot do any fragmentation in this spectrum of disaster risk management. And I think that is where the development partners can continue to work with the government to make sure that it creates the enabling environment for the private sector, and more importantly for the people. The people that we've heard so much about from this panel. It's important because the risk information is something which is generally managed in a very centralized way by the government. And that is where the government's role comes in as the collector and manager of risk, and then also as the regulator and enforcer. Now, this is where the private sector needs to be given the comfort, and the insurance industry as well, and the people need to be given the comfort that they can work together with the government, and together they need to de-risk the environment so that disaster risk financing can become a reality and it can be taken to scale. We've heard from our colleagues about financial literacy and about the fragmentation, and I really feel this needs to be given more thought and more action. The reason for this is very simple. Let me start off by just building on what I said previously as well. Unless the exposure and, more importantly, the vulnerability is reduced, the risks will not come down. And if the risks will not come down, the private sector and the insurance industry will not enter this market. And I'll give you the example of Turkey or Turkey. After the 1999 Izmit earthquake, Turkey launched, and of course there was destruction of almost 400,000 to 500,000 houses, and a number of lives were lost. That's when the government of Turkey decided that we really need to start looking into the option of housing insurance. But as we know very well, it's easier said than done. And they then embarked with the support of the World Bank, which helped create the Turkey catastrophe insurance pool. they started working on raising the awareness of the people, the community, de-risking the entry and creating the enabling environment for the entry of the private sector and especially the insurance industry. But for that, they tightened their regulatory role. They provide the data and they encouraged multi-hazard vulnerability risk assessment to be done at the grassroots, at the community level. And I just want to come back to that later also. The second thing that they did was they removed the ambiguity that exists around what is the risk. So they tightened on the codes, the building codes. They tightened up on the enforcement of the building codes, not just in the urban areas, in the rural areas as well. They tightened up on town planning. They tightened up on a number of areas which we see happen every day over here. I mean, the example of Islamabad was given by my fellow panelist. But the reason why those accidents have happened, and Saidpur village is the recent example of it, is because there is no enforcement of the town planning that was done, and encroachment is happening at will. This is basically what I meant earlier when I said disasters are man-made. They are not natural. We are the ones who create the disasters by literally interfering with nature. So I really feel that with the help of the development partners who are constantly providing this, this support and helping in the reforms, the government needs to take the lead, and it needs to first, I think Ali Toki Sheikh have also mentioned this, the fragmentation needs to be removed. There has to be one body which has the mandate, and all other entities need to work in unison with that body. The second is we need to have NatCat, but we also need to dovetail NatCat with multi-hazard vulnerability risk assessment. That is one multi-hazard vulnerability risk assessment. I can say with a lot of confidence, and I'm sure a number of you people out there will agree, each NGO, and even to a certain extent some development partners also, they are promoting different multi-hazard and vulnerability risk assessments in different geographical or spatial areas. This is creating more fragmentation, and this is not what is needed. There has to be one multi-hazard vulnerability risk assessment as there is one probabilistic risk assessment being carried out by NatCat. Finally, on the community, the financial literacy that was talked about, I think the overall awareness of the community needs to be raised. We all know people who've worked in the community, that the community is very aware of their own risks, the risks that they see on a daily basis in their own ecosystem. What they need, and they can deal with those risks. They know how to adapt to those risks and how to mitigate those risks, be it their livelihoods, be it the social resilience related risks, social cohesion related risks, even risks related to crops and agriculture, because that's their livelihood. It's the risks which are outside their immediate ecosystem, and that's where the information needs to be provided by the state and by the local governments especially. The people can easily fend for themselves. They have a very good coping mechanism, but that coping mechanism is not enough when it comes to low frequency, high intensity or high impact disasters, and I think that's where there is a need for the government to step in. Once that happens, the awareness increases, the information increases, then even a house in a rural area can be insured, and the premium will be such that that is manageable. My final point over here is the state or the government needs to come out of being seen as the final insurer. After the 2005 earthquake, the 2010 floods, and now after the 2022 floods, the government is coming in, taking loans, and coming in and financing the reconstruction of homes. Now, for the most vulnerable, it makes sense, as has been mentioned by the previous presentations and by our panelists. It makes sense. But it doesn't make sense for those who can afford it. But because this precedent has been set, everyone waits for the government to come and bail them out. If you have this kind of a subsidized environment, there is no way the insurance industry will be able to come in. There is no way the private sector will be able to come in because the government is the insurer. So the government has to step back. It needs to, of course, protect the vulnerable, but not protect the ones who can afford it. That's where the market has to come in, and the market will always respond to a vacuum. So far, the vacuum is not there. Thank you.
Sir, from the spatial planning perspective, how do you think government and development partners can develop local institutional capacity to make more data and informed decision making?
Thank you. I think I touched on this in my previous response. The government, the people are very good at fending for themselves. You go to any part of Pakistan or the world, and the people living there, they know about the risks around them. It's the risks that are beyond their immediate awareness sphere. That's the information that needs to be brought to them. So here I must say that there is a need to, coming back to the point that was made earlier, the need to remove the fragmentation and the need to remove these islands that have been created. The public sector or the government works independently. Non-public sector, which includes private sector, civil society, communities, they work independently. And in both of these domains, there is so much of fragmentation. The government needs to partner with civil society, with the likes of rule support programs. Rule support programs are doing so much work in Pakistan on community-based disaster risk management and on multi-hazard vulnerability assessment. But the multi-hazard vulnerability assessment that was referred to by our panelists, that has the work that NRSP or the other RSPs are doing is not factored into that multi-hazard vulnerability assessment. So there should be this kind of a partnership. The outreach is something which the government cannot have, and that's where the partners like civil society organizations, rule support programs, NGOs, and especially coming down to the community, they need to come in and they need to then bring this information from the community, because it's the community that knows about the vulnerabilities and the risks in their own ecosystem. And that needs to be then married to the macro level information that is being brought from NatCat and from the national level multi-hazard vulnerability assessments. Unless this happens, we will continue to have a situation where the risks will still be high, the exposure will be high, and the vulnerabilities will be extremely high. Thank you.
Sheikh Saab, I would like to ask you, what are some of the key barriers when we are trying to integrate DRF instruments within green and climate resilience projects in Pakistan, particularly when we are aiming to make them more bankable for example, ADB and GCF?
Thank you. I think it's a very important question. We first of all need to recognize one basic point. The link between disaster risk financing and adaptive social protection is very close, and it needs to be recognized. It is closer than its linkages with the insurance sector. Adaptive social protection is avoiding losses and damages before it happens. Insurance comes afterwards. And I can dwell on it a little bit further because this point needs to be understood. People sitting on this side of the room are with 30+ experience. People sitting on that side of the room need to know what will be happening in next 30 years because they are possibly, most of them are less than 30 years ago. So we are talking here about, at least from my point of view, forecast-based anticipatory allocation. Now, anticipatory allocation means that I know that my house or my livestock or my livelihood is in the disaster-prone area, if it happens, I'll be on the losing end. And therefore, an allocation beforehand can help me protect and avoid those losses. Now, insurance, with due apologies. Yes, we heard you, and I say that also. The penetration in Pakistan is not very high. And something that I can say probably with a greater degree of confidence, it's not very high primarily because the government has elbowed out the private sector. And also because Pakistan Insurance Company Limited is an archaic company with archaic rules and archaic governing structure that is controlled by the Babu's government representatives. They don't know where the market is. Having said that, we can transform it. But the problem is that the frequency and intensity of climate-triggered disasters is such that even in countries where insurance systems are very sophisticated and penetration is very high, the insurance companies have begun to withdraw. I can take you to the United States, one state after the other, one coastal area to the other, where the insurance companies are packing up or leaving because it's a dying business for them. So much premium people cannot afford that much. So in the climate change context in the developing country, more than insurance systems, which we need to invest on and modernize, we need to have our faith and investments in adaptive social protection. Now, what would it mean? It's not what we have done like Mughal kings, that you harvest development finance from every project, collect $50–70 billion or whatever amount you can, give to BISP, Benazir Income Support Program, to disperse cash. That is not sustainable. In the tight fiscal space, we cannot get in the habit of distributing cash all the time. And that too through BISP that is not trained to undertake damage assessment. It can disperse money transparently and they can do an efficient job, and they have done a good job on that. But it's not their job to assess what was the damage, actual damage at the household level and the community level. They can just give whatever government tells them to do. Many years ago, I supervised a study in Pakistan on 4 sectors: insurance of standing crop, life of the head of household, livestock, shelter, and small business, just a rediwala at the community levels, small. And we found that the people have the willingness to pay and the ability to pay. But nobody was willing to do that because we were looking at flood insurance, but Indus is too big, too sudden, too large a scale for any insurance company or a group of insurance companies to even venture in that. Fortunately, things have moved. No, just I know that we have to go for lunch. I just want to take two points on this. I don't want us to pitch insurance versus anticipatory allocations, even though at the paradigm level that may be the case. A case in point is NatCat can give vulnerability assessment with a snapshot much more accurately, much more quickly based on the data sets that are available. But multi-hazard vulnerability assessments that are done by NDMA and in some provinces, they have not saved one house or one life. They have been sitting static. It takes too much resources to develop them, and then they are not dynamic. What does that mean? For us to attract international investment and finance, we need to understand what donors want. And I will support the donors' expectation. They want clear governance and they want clear accountability systems. Unless we go back to rules of business and provide them, that who is charged to deal with national disaster risk financing. There is no ownership because there is no institution is charged with it. Different institutions are competing for a domain without necessarily having the mandate. And I think we need to fix where the rot is. And I'm not afraid of saying that. People oftentimes tell me why you're saying this. Unless we go back to the drawing board and fix the basic fundamentals, we cannot go very far. So that was the first point, first and the final point I wanted to make. Now, in terms of insurance, I want to just highlight one for the relevant. Encroachments will be encroachments, technically speaking, when they are illegal. Show me a law in Pakistan that says that building hotels or communities on the river banks is illegal. There's no provincial or legal law that uniformly prohibits construction on the river banks. Encroachment of rivers is illegal if it is acquired by the housing societies through purchase or transfer of papers, such as it has happened in Swan River and others. So it's a very technical area. I heard about Kamal Sahab from you about cassis and converting them. Now, if the passage is narrowed at Nala Lai, just one way of example, or so on, in Nala Lai the water went high to 25 feet. It was not because there was too much water, because the passage we had made was very narrow. The water had nowhere to go but to come up. So the point here is that unless we learn to live within nature and respect the right to life of river water bodies and give them a free passage as they have deserved or earned over centuries, we were living in disasters. And if we are living in disaster zones, of course we will need instruments like insurance. But I want to leave you with one thought. If Pakistan's population is 230 million, in 2047 will be 100 years, it will be 450 million. And if every other kid, about 45, 48% of population is below the poverty line, with business as usual, we'll have as many poor people in our poverty added by that time as we have now. And guess where they would be living? They'll be living in downgraded ecosystems, they'll be living in low-lying areas, in flood-prone areas, and they'll be living in river banks because they have no other place to go. So therefore, the need for insurance, the need for disaster risk finance management, and need for us to draw bigger lessons where the adaptive social protection fits. I think, in my humble view, that is the key, and that is where we need to invest. Investment, therefore, my last punchline, is in resilience, in adaptation, through forecast-based anticipatory allocations, for which we already have institutions, baby BIPs in every province. They're just getting their feet on the ground. We can entrust them to allocate financing on anticipatory allocation base and protect people from disasters. Thank you.
On behalf of NDRMF, I would like to extend my appreciation to all our esteemed panelists for today's thought-provoking and insightful discussions. Before we conclude this panel and take your questions, I have one question that I need to ask through all the panelists. We could start from Raja Rehan Saab for answering this question. If you have to recommend one high-impact step that we can take to accelerate DRF in Pakistan in the next 12 months, what do you think it should be? One high-impact step.
I mean, it's a difficult question because that one high-impact step can be itself a very difficult step. I really feel that if disaster risk financing, and especially the risk transfer part of the layered approach needs to be launched and mainstreamed, the government needs to be more open and inclusive, and it needs to get its act together, as has been mentioned by some other panelists, and reach out to all the different shareholders. I wouldn't say stakeholders, but shareholders. And this can be done as the first step to raise the awareness around the risk transfer part of the layered approach, and then also start looking at how the data and the information can be passed down to the people who are really working in this field, and then especially the ones who are at risk. Thank you.
I think that we should empower the organizations that we have established for that very purpose, and my point will be towards empowering NDMRF more so that in the next 12 months they already have got a certain modalities available with them to build on resilience on ground. So if we have a good empowerment given to an organization meant for the purpose, it can deliver well. So that would be my response to that.
I think the instrument recommended in the DRF should be properly embedded in the national level budget strategies and policies. I think the instrument, if properly embedded in future in the national level budget allocation and strategy, that can facilitate the whole implementation of DRF strategy.
Apart from what the previous speakers just said, I think from a general perspective, I think we have to understand what nature did or what we did with nature in the past. So nature-based solutions, understanding of those, and going back in the, let's say like 1,000 or 2,000 years ago, when it was more sophisticated than it's now, this understanding and going back, I think this is also one of the key understanding for us all.
Well, a short answer is, let's see where the pain point is. Climate vulnerability is always a local issue, and the solution and treatment is always local. In other words, unless the provincial governments and through them district level governments are part of the solution, there is no solution. We need to have feet on the ground. Federal government's job, regulatory, attracting international finance, offering credibility and trust to the investors, be it private sector, be it international. They are also private sector investors as far as development financing. So government's role is a regulator, not an implementer. I just gave an example. They are implementer in your insurance sector. They are implementer in housing sector. They are everywhere. They don't need to be everywhere. So first thing is, pain point is at the local level. And we have to put our band-aid there. And the starting point, in my humble view, is the creation of local governments. Without local institutions, it cannot be done. We can very well say, it's very fashionable for us to say in Islamabad, but there is a lot of capacity gap, and there's a lot of credibility gap. I think with due apologies, we can raise the same question about the federal government as well. There's a credibility gap and there's a competence gap. If the competence gap was not as huge, the challenges will not be as huge. Just because we can speak English and talk to international people does not necessarily mean that we have stronger integrity and stronger competence level. It's a language skill that should not be confused with our governance skill. So the governance skill will come when we have mechanisms of accountability embedded, and they can best be embedded at the local level in local institutions. Now that is a big and a short answer. Now, whether or not it can be done in 1 year, that's obviously not the case. So the question is, what is that we can do in 1 year's time? Let me present to you 5 things that I mentioned earlier that I think, if Government of Pakistan wishes, can be done in 1 year. Have just 2 or 3 EAD, establishment and planning, 3 ministries, 3 persons sit in one room, revise rules of business, identify who should be responsible for disaster risk financing. A proposal, a summary can be developed within a few weeks that can then be duly approved and revised. That's the first thing. That's doable. We don't need a donor for this. Capacities and competencies exist in government ministries. That's the first thing that needs to be done. Second, for science-based data that is needed in this domain, there are some organizations in this country that have dormant modeling capacity. They just need to be kicked up or done hand-holding to them that their capacity and competence can be used and become part of at least public sector investments in terms of public infrastructure and the other infrastructure that's built with the help of funding. So modeling field, data field, science field can be strengthened that exists, and it's not for any other reason except that we are not challenging them to put that to test. Bringing NatCat and disaster risk finance strategy in IPAS at the Planning Commission. IPAS, those of you who don't know, is supposed to be a machine through which you can generate data of all public sector investments. It doesn't work fully. It can work fully. The capacities exist. And if the assessments undertaken by NatCat that are vulnerability assessments, and they're very crude, they're very basic level, new modules can be added, and dollar cost can be added to those as well. If they can become part of our PC1 and PC2 and project concept notes or working papers or pre-feasibility studies, that means we have laid the foundation of science, policy making, and the vulnerability assessment. And therefore, this is the third thing in my humble view that can be done. Fourth, fix the governance of PCRL, Pakistan Reinsurance Company Limited. That is where the rot is. Bottleneck, ma'am, in my view, is always at the neck of the bottle. It's never at the bottom. This lethargic center can transform if this institution can be reformed. The private sector space is a lot. Just to give you an example from my neighbor, India, they said 25% insurance clientele for each company should be small holders. And the company said, we don't have the capacity to deal with so many client base. And he said, but we need to lift those people, bring them in the domain, insurance domain. And insurance sector grew, vulnerability was reduced, and the sector started transforming itself. So my answer is no, I think. Is the ministers are there? No. I still need to speak. Okay. So this is the last point that I want to really make. I was asked, I can share with you. I was asked, please keep speaking because the Minister Sahib is coming, is on the gate. So I'm dragging my answer, please live with me. Otherwise I was like everybody else, I was.
No, by all means, sir, you can.
Fragmentation, I want to come to this because Rehan Sahib also picked that. I don't know how many of you have seen NDMA's Ordinance Act that determines it. And how many of you have seen the document that is the basis of NDMRF? National Climate Authority and Ministry of Climate Change. All of them are interested in these issues, as is now Ministry of Finance, as well as the provincial governments in KP, Sindh and Punjab. Two districts are far ahead, everybody is not there. This fragmentation is because of the ambiguity that makes us less transparent, less efficient, and more lethargic in terms of actual reforms. So in my humble view, fragmentation needs to be addressed. I want to thank you instead of continuing.
Thank you so much, Ali Tukeshef Saab. Sir Raja Rehan, I want you to conclude this whole and sum up this whole conversation. And particularly, can you focus on the need for convergence across all the planning, finance, and other ministries for this TRF agenda?
Thank you so much. I mean, it has been so rich, the contributions from the panelists, that it'll be very difficult to summarize it in a short time. But let me just start off by talking about the role of the government, and then within the government, the role of the Ministry of Planning, Ministry of Finance, and then the other ministries, the technical ministries. As we have heard from our panelists and also in the presentations prior to this session, there is a need to start looking at disaster risk financing because it is an imperative. It is not something which we can continue to discuss. There is a need to take ownership of this. I think Ali Tawqir Sheikh Saab mentioned over here that we really need to have the right people from the government at the right level under one roof, and this is a very good forum for it, to take the ownership of this and then agree that there is a need to bring this very important agenda to the fore and start creating the enabling environment for it at the institutional level, which one of the requirements at the institutional level we've heard is the need to remove the fragmentation and to take this agenda forward in a heads-on manner. The second is at the policy level, create the enabling policy environment for the mandates that the institutions have to be carried out in letter and spirit. And these mandates are important because as of now, only part of the mandates are being fully operationalized. And unless the full spectrum of the mandates is not carried out, it becomes extremely difficult. I'll give you an example. We know that the National Disaster Management Authority is mandated as the agency at the federal level to be responsible for the full range of disaster risk management. But we also see that we have this excellent institution, the National Disaster Risk Management Fund here, which is working on disaster risk financing. There's the need to marry the two together, not in physically, because both have different mandates, but the work that they're doing, it needs to be brought together. Now, this is where I feel the Ministry of Planning, Development and Special Initiatives, and the Ministry of Finance, they need to come together and they need to make sure that the work that is being done in a manner where the whole outcome is one. The other point that has been made, and I think that's, I really feel it needs to be highlighted here, is the Ministry of Planning needs to continue to increase the momentum on mainstreaming disaster risk reduction. We see that there is now climate screening happening in the PC1 document. There is also now disaster risk reduction, which is now a very important part of the PC1 document. But we really need to see how the disaster risk reduction part of it and how the climate screening part of it is benefiting from NatCat and the multi-hazard vulnerability risk assessment that NDMA has been leading. Unless this happens in real time and is all connected through information technology, and IPAS is a very good example of it, this information is not really going to be used to the optimum to make sure that every single investment that is being made through PC1s in the development sphere, it is risk sensitive, it is risk informed. And this risk is not just climate risk, it's other risks as well. And we've heard our colleagues talk about it. It's social risk, it's environmental risk, it's institutional risk, it's governance risk, it's financial risk. All these different risks need to be brought together to look at resilience as one. You can't look at climate resilience and not talk about these other risks. Ahmed Kamal Sahab mentioned about some of these, so I think it's extremely important. Even some of the panelists mentioned this, that unless governance is improved, which means the codes are standardized and then the codes are enforced, this is part of governance. the risks are not going to be reduced because the exposure will continue to increase. Now, there is a certain exposure that always is there because of the hazards playing out, but that exposure is being further exacerbated by the complete lack of adherence to codes and to town planning and to so many other requirements. The same is also true for the vulnerability that is so high, because one is not looking at reducing the vulnerability, and it's constantly increasing. So this is where the Ministry of Planning needs to really work with the technical ministries, and then needs to, more importantly, work with the provinces and the local governments. And it's not just the Ministry of Planning. The Ministry of Planning needs to be fully supported by the National Disaster Management Authority, which is the technical arm of the whole resilience agenda. And they need to also then have a very good system at which mirrors what NDMA has managed to do at the provincial level, and more importantly at the district level. So this is something which I feel it's the federal government which can come together. It can plan this, it can finance it, and then the technical ministries and departments can make sure this is happening at the grassroots level. I know there's a lot of talk of penetration of insurance that has been mentioned over here, and some very good inroads have been made. But again, the idea is to build on the inroads that have been made, the penetration that has been made. Insurance needs to be taken beyond just one or two sectors to all those sectors where the vulnerabilities are high and where the risks are high because of the vulnerabilities. And that is the mainstreaming of the insurance market or industry that needs to be brought about. And that can only happen if, again, the risk information is there, but more importantly, the risks are reduced, and of course, the people are informed about those reduced risks. I would like to say one final point over here. I'm not sure if we should just keep on going. One can talk a lot about this.
So we have to take a few questions from the audience as well.
Okay, so then let me stop there, and I think let's take the questions then.
Yeah. So anybody who has any question for the panel, right now is the right time to ask them.
Oh, thank you for such informative panel discussion. My name is Fahim, representing a local NGO, Takal Welfare Organization. I have just my question will have three parts. One is regarding with Mr. Tokir already mentioned, that we are looking at risk transfer or risk financing, but the instrument that we are discussing is the insurance, which comes after the disaster. That doesn't come before disaster or even during disaster. So there is no benefit of it to the people. So there should be some anticipatory action taken before that. So DRR is the component that we are discussing first, and then we are discussing the risk transfer, which is the disaster risk financing. And the tool, then the instrument that we can use is the financing. The second is regarding the insurance. Is regarding the types of the disaster that we are having. Like we are discussing mostly the floods, right? So the vulnerabilities are also physical vulnerabilities, there are assets lost of the people, lives are lost, health, and all these things are combined together to be a one single comprehensive insurance plan should be there. And secondly, the type of disaster that we are having. We are having earthquakes, we are having floods, we are also having the droughts as well. So the slow onset disasters are also there, and also we are having some areas, the coastal areas where there is seawater intrusion, resulting in the loss of the wetlands, and people are losing their livelihoods. So it has to be a comprehensive approach, and it will be a technical thing to do. So I think this is one of the things to consider, and I would like to ask the panelists to reflect on this as well. The second part is about the coverage. The instrument we are discussing is actually providing like who is going to get how much and what will be the extent of the damage on the basis of which this instrument will work. Will it be a uniform thing for everybody, like a person living in a mud house and a person living in a 3-story building? Will they be getting the same benefit, or the losses will be different? The vulnerability will be different, of course. The one living in a mud house is more vulnerable than the person living in a concrete house. Third part of it is regarding the GCF funding, which was actually asked but not responded. Currently, the GCF funding allows only accredited organizations to take that fund and utilize that funding. For that, the accreditation process is quite complex. We are having just 2 organizations, and I would like to know about, because NDAs are involved, I would like to know what can the government or NDRMF can do about to enable local organizations to access those funding, because the minimum threshold is 1 million for even micro funds. Thank you.
Thank you. It's a very good question and a very detailed one, because the Minister Saab has arrived, so let me keep answer to a very short one. Based on 2022 losses, there were 4 categories of losses. One were public sector losses, roads, power stations, schools, colleges, hospitals. They are fit for they are fit for insurance. So if the sector opens up and the public sector assets are insured, that could have saved us public sector losses during that flood. Second, out of $15 billion of net losses, about $6 billion was housing. That requires resilient housing standards. The policy need to be approved. And then, of course, insurance coverage both for rural and urban housing in that category. About 3.7 billion losses were in agriculture and livestock, and State Bank is already working at parametric insurance for crops. This year, hopefully that will be introduced during this fiscal year, but as we proceed, livestock will hopefully also be covered, and the spectrum will also increase. Therefore, we can go into details of each sector losses and see where the space is to improve and add resilience standards for building and construction, and bring modern mechanisms that like risk transfer and insurance. Thank you.
On behalf of NDRMF, I would like to extend my appreciation to all our esteemed panelists for today's thought-provoking and insightful discussion. The dialogue has reinforced that advancing disaster risk financing in Pakistan is not merely a matter of policy or economics, but a strategic imperative for resilience, equity, and sustainable development. From integrating disaster risk financing into agriculture, food systems, floods, management, enabling insurance markets, spatial planning, and financial literacy, today's panel has illuminated us with both systematic barriers and immense opportunity that lies ahead for Pakistan. Dear panelists, your diverse perspectives highlight the importance for this cross-sectoral collaboration and institutional readiness that we are on. Thank you so much once again. Ladies and gentlemen, Finally, it's my deep honor to announce that our chief guest, Professor Ehsan Iqbal, Federal Minister for Planning, Development and Special Initiatives, is here. Professor Ehsan is a seasoned policy reformer, visionary strategist, and one of the Pakistan's most influential advocates for inclusive development. As General Secretary of PMLN and Chairman of International Islamic Institute of Pakistan, a not-for-profit academic institute committed to socio-economic transformation, Professor Iqbal combines a rare blend of policy, academia, and political leadership, and is recognized as internationally a doer who delivers impact at a large scale. Sir, it's a privilege to have you with us today. I would like to invite you to deliver your keynote remarks.
Bismillah ar-Rahman ar-Rahim. Distinguished guests, colleagues, partners, ladies and gentlemen, Assalamu alaikum. Today, we gather not merely to discuss disaster risk, financing as a technical subject, but to engage with one of the most critical pillars of national resilience. In an era of escalating climate uncertainty and financial vulnerability, the question before us is, how can we build a Pakistan that is shock-proof, sustainable, and future-ready for the climate change vulnerability? The question lies at the heart of Udaan Pakistan, our national transformation vision for a stronger, smarter, and more self-reliant Pakistan. Udaan Pakistan is anchored in 5 strategic pillars: exports, e-Pakistan, environment and climate change, energy and infrastructure, and equity and empowerment. Disaster risk financing, by design and by necessity, cuts across all the 5 pillars of Udaan Pakistan. And because without resilience, there can be no sustainable growth. And without financial preparedness, there can be no secure future. Climate change is no longer a distant threat. It is here, and we are experiencing. It is now, and Pakistan, tragically, is at the front line. This year, we have been ranked the most climate vulnerable country in the world. This is not a ranking of shame, but it is a call to action. Over the last 2 decades, Pakistan has endured a relentless series of disasters, each one devastating in its own right, and collectively a humanitarian and economic catastrophe. 2005 earthquake, over 73,000 lives lost, 3.5 million displaced, and more than $5 billion in losses. 2010 super floods, 1/5 of the country underwater, over 20 million affected, and losses exceeded $10 billion. Then recurring floods in 2011, 14, and 20, and then 2022 monsoon disaster. 1/3 of Pakistan submerged, over 33 million displaced, direct economic losses of $30 billion, and recovery needs of $16 billion. Even now, as we face erratic monsoon patterns and rising glacial lake outburst floods, GLOFs, the threat remains very real. This year, the United Nations has declared the International Year of Glacier Preservation, a timely reminder that Pakistan's northern glaciers, which supply 75% of our river water, are rapidly retreating. The stakes could not be higher. Historically, Pakistan has relied on public exchequer and international donor support to manage these shocks. While these have been critical lifelines, they are neither sustainable nor timely. Recovery is delayed, damages compound, and the poorest suffer the most. This reactive approach is not fit for the future. We must shift from reaction to readiness and from fragility to resilience. And that is where disaster risk financing becomes a game changer. It is not just funding tool, it is a national insurance policy against future shocks. It ensures that when disasters strike, resources are available immediately, not weeks or months later. Relief and reconstruction are efficient and targeted. Fiscal shocks are minimized and development gains are protected. Vulnerable populations receive timely, fair, and dignified support. By leveraging tools such as catastrophe insurance, contingency financing, and risk transfer instruments, we can transform how Pakistan responds to crisis. This approach allows us to pre-arrange, finance, model risks, and ensure predictability, making our response cheaper and smarter. Under Udan Pakistan, disaster risk financing plays a transformative role. It protects exports and productive sectors from disruption. It empowers e-Pakistan through data and digital risk modeling. It advances our climate resilience agenda. It shields our energy and infrastructure investments. And above all, it supports the ethical commitment to safeguard the most vulnerable, embodying the principles of equity and empowerment. Ladies and gentlemen, I am pleased to acknowledge the leadership of National Disaster Risk Management Fund in this critical area through initiatives like National Catastrophe Modeling, integration of risk into public investment frameworks, and exploration of insurance, contingent credit, and risk layering instruments. We are making meaningful progress. These are not just policy tools. These are instruments of national dignity and sovereignty. When we build the capacity to respond with our own resources, we reclaim agency over our future. Let me be clear, the seminar is not a conclusion. It is a beginning, a call to integrate financial resilience at the heart of our development strategy. Because disaster risk financing is not optimal, it is foundational. It is not just a matter of economics, it is for us a matter of survival. Pakistan is under world's gaze. We now have an opportunity to lead, not as a perpetual victim of climate change, but as a model of climate adaptation, green finance, and resilience building in the global south. Let us invest not only in recovery, but in readiness, not only in rebuilding, but in redesigning systems to withstand what lies ahead. Together, let us build a Pakistan that is resilient, dignified, and ready for takeoff. I wish conference a success, and I assure you that whatever recommendations will come out of this conference, we are fully committed to implement them, because it is time for Pakistan to take a decisive Udan to transform our country into a $1 trillion economy by 2035. Pakistan Zindabad.
Pakistan is a disaster-prone country, facing risks from floods, earthquakes, droughts, and storms, affecting millions every year. From devastating floods and earthquakes to droughts and cyclones intensified by climate change. These events leave lasting scars on communities and economies. Annual economic losses average between $3 to $4 billion. The 2005 earthquake, 2010, and the 2022 floods caused damages in billions. In the face of growing climate and disaster threats, the challenge is not if the disasters will strike, but when and how quickly we can respond. In times of crisis, what matters most is speed in reaching the vulnerable, speed in restoring lives, speed in rebuilding what's lost. Historically, Pakistan relied on post-disaster funding, causing delays in response and recovery. Delays in funding higher the cost, derail development, deepen vulnerability. Pakistan is investing in resilience, not just response. Pakistan is building a proactive disaster risk financing landscape, using pre-arranged finance to respond faster, smarter, and stronger. Disaster risk financing means planning ahead through insurance, contingency funds, and risk-sharing tools so that the right funds are available at the right time. Effective financial management for disaster risks is a challenge for the government with limited financial capacity to manage fiscal impact. NDRMF is strengthening fiscal resilience by working with the government and partners to design effective financing mechanisms. With a DRF strategy based on risk layering approach for cost-effective risk transfer. Powered by the NatCat risk assessment model, Pakistan can now measure, model, and manage disaster risks with precision, developing tailored financing instruments for insurance and reinsurance. Identifying exposure, estimating losses, prioritizing action. Faster recovery, lower losses, protected lives. Disaster risk financing, finance ready, response ready, resilience ready. Pakistan's risk financing landscape is evolving from reacting to risk to financing resilience. By planning ahead with tools like insurance, contingency funds, and pre-agreed financing, Pakistan can respond faster, recover quicker. Protecting lives, preserving development, investing in resilience, not just response. Pakistan.
I'm once again very excited to announce and with a lot of pride that our first knowledge product, the NatCat Atlas, is here. This NatCat Atlas is based on our flagship initiative, the National Catastrophe Model. This NatCat Atlas covers all the major perils and will be highly useful for disaster risk reduction and climate change adaptation experts and for the risk-informed development and decision-making in this Pakistan. I would like to request CEO Bilal Anwar to come on the stage and launch this NatCat Atlas along with Professor Ehsan Iqbal, Dr. Farooq Sparko, Mubashir Hussain, Manager DRF. Please come on the stage.
Thank you so much, sir. May I please request you to remain on the stage as we are to present shields to our panelist panel one panelist. So all the participants from panel one discussion, I would like you to please be on stage for the shield. I will start with Mr. Raja Rehan Arshad to come to the stage and receive the shield. Second, we have Mr. Ahmed Kamal, sir, please. Mr. Wasim Khan. Mr. Johan Ramke. I think he's left. So lastly, we have Mr. Ali Tokir Sheikh. And finally, we have the moderator, Ms. Barira Zofshah. Thank you so much, sir. Thank you, ma'am. नहीं Ladies and gentlemen, I know we were stretching into the lunch a bit, but I believe it was part of our strategic plan. The more the delay, the tastier the food would be. So finally, we will break for the lunch. Please enjoy your meal and feel free to connect with the fellow participants and speakers during the break. We will resume in 1 hour sharp for our next panel discussion, so please be on time. Thank you. Ladies and gentlemen, we kindly request everyone to please return to your seats as we are about to begin our next session. Everyone, sorry. Everyone, please settle down as we are going to start the session. Please take your seats. Ladies and gentlemen, welcome back. We hope you had a refreshing lunch and took the opportunity to connect with the participants. We now move to the panel discussion 2. This session will explore how disaster risk financing is being applied in practice, from national strategies to field-level innovations, and what key takeaways we can draw from the ongoing efforts across different sectors. To lead this conversation, we are joined by Dr. Kamal Ahmed, CEO of the Institute for Economic Resilience and a disaster risk financing specialist. Dr. Kamal holds a PhD in economic modeling of climate and disaster risk, along with executive education in ESG and sustainable finance from the University of Oxford. With over 18 years of global experience across Asia, Africa, Europe, and the Americas, and small island developing states, he has advised governments and institutions on designing inclusive, forward-looking development policies aligned with the SDGs and national priorities. He will now guide us through the discussion and introduce our esteemed panelists. Dr. Kamal, over to you.
Thank you so much. Good afternoon, ladies and gentlemen. I hope you had a good lunch. We had a good start to the event, and we have some spillover effect actually, but we'll try to manage it. Welcome to the second panel, which is on the current disaster risk financing initiatives and lessons learned. And allow me to welcome my panelists. We have quite a nice panel here for you. First of all, I'll start with Ms. Sobia Becker. Ms. Becker is the advisor for the Pak-German Climate and Energy Partnership of GIZ Pakistan, and her expertise lie in the climate, energy, and sustainable development nexus, in creating partnerships and platform for action, in driving favorable outcomes through policy advisory and programmatic intervention. Ms. Becker, please join us. Next, may I invite Dr. Muhammad Rafiq. He's member of climate finance at the Pakistan Climate Change Authority, PCAA, of Government of Pakistan. Dr. Rafiq holds a PhD degree in environmental economics with over 24 years of experience in teaching, research, and consultancy. In his current capacity, Dr. Rafiq plays a pivotal role in shaping climate finance strategies, driving sustainable development, and ensuring the equitable allocation of resources to address climate change risks in Pakistan. Dr. Rafiq, please join us. May I now invite Mr. Syed Mohsin Ahmed. He's the Chief Executive Officer of the Pakistan Microfinance Network. He's been instrumental in shaping microfinance policy in Pakistan and spearheaded the establishment of critical infrastructure, including Microfinance Credit Bureau. He's also co-founded the South Asia Microfinance Network, the SAMN, which is now GAFI, and served as its first chairman. He's a cost and management accountant and trained at the Boulder Institute and Harvard Business School. Mr. Mohsin, please join us. May I also request Dr. Muhammad Farooq. He is the Director of Space Application Center for Response in Emergency and Disaster Sacred at SUPACO. He is the Project Director of NatCat Risk Assessment Model Project. With a strong background in space-based application and water resource management, he looks after the space-based disaster management portfolio at the National Space Agency, SUPACO. Dr. Farooq, please join us on the stage. May I also request Mr. Azmat Shahi. He is the Country Advisor for Crisis Anticipation and Risk Financing, START Network, Pakistan. Mr. Shahi is a seasoned professional with 14 years of experience in Pakistan's development sector and strong academic qualification, as he holds a master's degree in economics and botany, alongside a postgraduate diploma in disaster planning and management, and additional qualification in artificial intelligence, GIS, and IT. I was about to say GIZ. Last but not the least, we have Ms. Yoko Okura. She is the Disaster Risk Management Specialist at the World Bank. She is focusing on disaster and climate resilience operations in Pakistan, Bangladesh, and Afghanistan. She holds extensive experience leading operations and analytics on crisis preparedness and response across East and South Asia, based in Myanmar, Nepal, and Indonesia prior to Pakistan. Ms. Okura holds a master's in public policy from the Harvard Kennedy School of Government, where she studied as a Fulbright scholar. Thank you so much. So ladies and gentlemen, we have this session for you, and allow me to walk you quickly through how are we going to run this panel and moderated discussion. We'll have a couple of rounds of questions for the panelists. During the course of discussion, Ms. Okura has to leave for other commitments, so we'll have to excuse her. And after her departure, I might finally find a seat. So, and after the 2 rounds of discussion, we'll also have time for the audience's questions and answers. Ms. Becker, may I start with you? So we've heard quite a lot about risk financing. We've heard quite a lot about the challenges, what's happening, and we know GIZ has supported Pakistan in several resilience building efforts. How do you, as Ms. Becker and as a GIZ representative, rate the donor government alignment on risk financing? First, and secondly, has GIZ put in place any initiatives that would improve the overall enabling environment and climate for risk financing in Pakistan? Over to you.
Thank you very much, Kamal, and a very good afternoon to everyone. May I first congratulate NDRMF on this fabulous milestone that they've achieved under Bilal's visionary leadership. So thank you very much also for having me here this afternoon. The morning's discussion have been very rich, and a lot has been covered, and I hope you'll allow me the liberty to also tap back into some of the things that were said in the morning. But the questions that you're giving me are very difficult, obviously apart from the ones that we talk about the GIZ portfolio. But what is very clear is that Pakistan is at an inflection point, and this is very obvious. We've spent the morning discussing several things, and if I were to distill this down into its very core, we're talking about 2 issues. Issue number 1 is, how do we stop hazards from becoming disasters? This is the first thing. And the second thing that we have is a need to have a common understanding where disaster risk professionals and climate professionals are equating and speaking the same lingo. And this is that in disaster risk management terminology, ex ante is nothing more than adaptation. So this also needs to be established because sometimes one has the feeling that these issues are not well understood. You spoke about donor-government alignment on these key issues. And I'd like to point to, first of all, Some key issues that help provide more context to the answer that I'll give you. The biggest issue that we have in this space is that of information asymmetries. The fact that there is not the right kind of information available to the right audiences.
Can I interrupt for a moment?
Yeah,
Can
thank
you
you.
please keep quiet a little? We are getting disturbance here.
Thank you. So information asymmetries, these need to be addressed if we're going to institutionalize any sort of disaster risk finance in this country. And these asymmetries exist within the public sector, within the private sector, and in the interfaces between the public and the private sector. The second one is an absence of evidence-driven, data-driven decision-making at all levels, whether it's the public sector or the private sector. So this is quite symptomatic of the ills that we are seeing at this point. And to come to the point of donor-government alignment, there are opportunities for improvement. And the first area for improvement, which would probably be a low-hanging fruit, is the area of making this information asymmetry more symmetrical. It begins with embedding the climate risk profiles, with embedding the outputs of any climate modeling that is done, and really moving towards very evidence-based decision-making. And again, I'd like to congratulate NDRMF on their NatCat model that they have, which will play a role in this regard. Secondly, I'd like to begin my input by underscoring the fact that I will be talking about extreme weather events, climate events, which are essentially hydromet events and not earthquakes and so. And when I talk about a lack of clarity, this is also then a lack of clarity that exists, whether it comes to looking at the PC1 and seeing how we're going to categorize the disasters and how we're going to respond to them. And this also pervades. The next question that you asked me was about German development cooperation's interventions in this country. I think that the biggest and most valuable contribution that we are making is in strengthening the science and policy link, so that interface. We've developed climate risk profiles for the KP and the Punjab. We have, because agriculture is so important for Pakistan's export revenues, we have developed the climate smart agricultural investment program, investment profiles, which show exactly what needs to change in response to a changing climate and how investments can be directed or redirected. We have that. In the morning, one of my esteemed colleagues and panelists was speaking about the importance of embedding this function or such a function within the Ministry of Planning, Development, and Special Initiatives. And by virtue of our project, the Global Initiative for Disaster Risk Management, GIDRM, we are doing exactly that. So there will be a dedicated resource in MOPDSI who brings specialist knowledge, who will be able to translate all of this technical information into actionable policy interventions that MOPDSI would need, as the Honorable Minister was saying, for the Udan Pakistan, the 13th five-year development plan. Then we have adaptive social protection, because there is an urgent need to extend the social safety net to vulnerable populations. Insurance is indeed one mechanism for doing that, and then social protection is another way of increasing social resilience in the face of a changing climate. We are working with the private sector, specifically supply chains in export-relevant industries, in cushioning them against climate volatility and variability, and then also looking at how these impacts, how they are going to be better equipped to respond to these impacts, and how we can support them. So down the line, looking also very actively at climate risk insurance, which brings me to the final input that I'd like to give at this point. That would be the Global Shield. As you know, Germany is the single largest donor to the Global Shield, and the intent of the Global Shield is to provide risk insurance solutions to highly vulnerable communities. So this, in sum, is what we're. Thank you.
Thank you so much, Ms. Becker. I love the fact that you targeted the asymmetric information, and I really like the expression, making the asymmetry more symmetrical. And just for the information and for the knowledge of the House, the Global Shield that Ms. Becker is alluding to, the government of Pakistan has finally been able to submit. Ms. Sana will bail me out here. We have finally been able to submit the request for support, which is $245 million, I believe. So that's something really laudable. Ms. Okura, we heard Ms. Becker talking about the climate risk profiles that they're making for the Khyber Pakhtunkhwa province, and this kind of information instrument need to be embedded. And we also know that the World Bank's grid framework and the CCDR profiles that the World Bank has been developing for all around the region, Pakistan including. And these documents do highlight the urgency of climate resilience given the fiscal constraints that Pakistan has. And we also know there are short-term requirements. So how do you think World Bank can help balance and mutually align the short-term shock response financing with long-term development funding, especially also the fact that the federal minister also talked about Uran Pakistan? Over to you.
Thank you very much, and thank you for the opportunity to speak in this panel, and congratulations, echoing congratulations to the NDRMF on organizing this event. So to start with, yes, indeed, the World Bank, for the World Bank, climate resilience is a critical pillar. It is a specific outcome of the 10-year country partnership framework we have with the government of Pakistan. So going back to your question on the short-term versus long-term, let me start with a very specific example before zooming out on our products on what happened after the 2022 floods, which, as we all know, is a catastrophic disaster. So as part of the response, we did this in Pakistan, and it's very common in other countries we work with as well, is to repurpose out of the portfolio we have with the government of Pakistan to the immediate response. So in the case of the 2022 floods, this was around $277 million that we used out of the existing portfolio to do cash transfers, non-food emergency response aspects that we could, really classify as emergency response. And then, of course, it doesn't end there. This was a catastrophic disaster. There's a lot of reconstruction and resilience building needs. So from there, we have developed around 1.7 billion to support the country's reconstruction and resilience. And this is across housing, rebuilding infrastructure, health, social protection. So this is a very wide spanning support that we are still continuing to provide to the government of Pakistan. And when we think about balancing short-term and long-term, of course, a lot of these are disaster recovery projects. But in the experience, I've worked extensively in SINS recovery. So when we are rebuilding, infrastructure, roads, to, respond to the damages that happened in the floods, what are we doing so that we're not just building climate resilient roads, but ensuring that roads built in the future, climate resilience standards are institutionalized. Our previous panelists spoke about climate risks, but how is the planning risk informed, and how is that being taken up at a very systematic level is something that we work also very closely with in our projects to make sure that there are long-term outcomes. And of course, within the country partnership framework, the resilience to climate change is something that's so very important. And as an example, we recently had a project approved called the Resilient and Accessible Microfinancing Project. I'm sure our microfinance expert panelists will speak more on this sector, but it is a quite innovative project for the World Bank in Pakistan, where we've established a climate risk fund targeting the microfinancing sector. And this really comes from learnings of the 2022 floods, seeing how the microfinance sector and its borrowers were impacted and how we can support them. So I think, you know, with the continuous disasters and the continuous severity and scale of disasters, we're seeing, you know, we're constantly also iterating, how can we better, you know, support the government, the provinces, and ultimately the people, so that, you know, you are becoming more resilient to disasters in the long term, but also be able to recover quickly, because unfortunately these disasters are, you know, or they're happening almost on an annual basis. Zooming out a bit, let me speak a little bit about overall on the World Bank's financing products on disaster risk finance, but also more broadly on crisis preparedness and response. We announced a new toolkit on crisis preparedness and response. I won't go through all of the financing instruments as they're quite technical. You can, you know, find them online. But 63 countries have adopted this toolkit, and in the main buckets, they focus on ex-ante crisis preparedness as well as ex-post crisis response. And out of this, let me just highlight one key instrument that we implement in a lot of countries across the world, which is the catastrophe deferred drawdown option in our development policy loans. So this is a contingent credit line that provides immediate liquidity, and the funds become available once a declaration of a state of emergency, a state of calamity is announced. And what I mean by the development policy loan part is that in the meantime, we work with our, you know, governments to work on really transformational policy reforms that can move the needle on, you know, better preparing for disasters and emergencies. So this can be on policies related to risk financing, financial resilience. It could be more on the legal framework, on coordination. You know, to get disaster risk finance to the actual people, you know, requires many, many layers from procurement to service delivery. So thinking through what are the, you know, really important and key reforms that are needed to move the needle on strengthening emergency preparedness and response. So we work with governments to work on these policy reforms, and in the meantime, and unfortunately this happens quite a lot in this world today, that a huge disaster strikes and a state of emergency is declared, then the government has immediate access to this kind of contingent line of financing, supplemented with the policy reforms that they, you know, hopefully have implemented. So you have the policy enabling environment as well as the financing in the case of a major disaster. If you're interested to learn more about our different products, I'm happy to speak more, but I know we have former speakers and their brain power in the room today, so I'll stop here. Thank you.
Thank you, Ms. Okura. And about the contingent, thank you, contingent financing. But this is something we have, when I was part of NDRMF, we also explored it with the World Bank. It didn't materialize for some microeconomic reasons, but it's still part of the risk financing strategies. So it's definitely on the table, which might be materialized one day. I was supposed to have a different flow, but since you talked about the microfinance and the RAM project, so it naturally brings me straight to you, Mr. Mohsin. And we know the 2022 floods, every sector was really, really affected. But Pakistan's microfinance sector has been repeatedly exposed to disasters. Climate insurance penetration remains marginal. So in this context and in this background that we've been establishing with the last couple of panelists, how is the Pakistan Microfinance Network tackling these challenges? First, not only to upscale inclusive insurance, inclusive risk financing products. Secondly, how to safeguard the marginal borrowers that you have with microfinance institutions. Over to you.
Thank you, Ahmed. And I'm grateful to NDMRF for inviting PM into this session. So I'll just give you a slight snapshot of the industry. So we are talking about close to 45 members of the Pakistan Microfinance Network. These are microfinance banks and non-bank microfinance companies. And together, they represent almost 99% of the microfinance industry outreach. In terms of the outreach, so we have credit, deposit, and insurance clients. We have close to 12.5 million credit clients, around 100 million deposit clients, which include the conventional and now the M-Wallet accounts, and around 9.5 million insurance clients. The insurance clients are largely credit life and hospital insurance services. So that's the larger picture of the microfinance industry we're talking about. In terms of the socio-economic background of our clients, you look at the NSER that was reported by, I think by BISP a couple of years back. On the NSER framework, our clients, if we map them, they fall in the bracket of between the score of 30 and 65-70. So that's the socioeconomic picture of our clients. So these are clients which are slightly above or quite above the typical safety net programs, BISP clients, and there are programs for graduation of clients from extreme poor to economically active poor, which is microfinance clients. So that is the overall characteristics of the sector. Now, largely in the not just the 2022 floods, but we've gone through different crises, though, starting from the 2005 earthquake to the 2010 floods to the 2012 floods which hit southern Sindh, and up to 2019, where from 2018 onwards we had a consistent different kind of impacts that have hit the industry from the exogenous side, which includes late in 2018 and early 2019 was the drought in Lower Sindh, which was accentuated with the fact that the Supreme Court of Pakistan at that time intervened and gave some orders with full respect to the Supreme Court, but that had an impact on the microfinance industry. And then we had the locust swamp, which hit us in the fall of 2019, followed by the 2020 COVID. And then when things were coming out of the COVID around 2021, it didn't hit Pakistan, but it hit India, the Delta virus of COVID. And so things, rather than moving again towards growth, it contracted. And then the 2022 floods, followed by the macroeconomic picture in Pakistan. So all of this resulted in problems for the microfinance industry. But what we see is that institutions which were close to the clients, and so yes, we do talk about digitization and using the digital touch, but the outcomes and I'm not just talking about Pakistan's survey, but researches done across the world, they did say where clients, you had direct links with the clients, where human factor was directly involved, it helped in recoveries, it helped in linking clients with humanitarian agencies or with disaster agencies that were providing relief to these clients. So all of this together is clearly led to certain things which involves availability of disaster risk financing that we are talking about today, and also that my colleague from the World Bank is referring to, where the World Bank intervened in the form of RAM. Like for example, I can tell, so some of the things that happened. Institutions faced severe liquidity problems. For some of the institutions, especially some of the microfinance banks, they had to write off huge amounts of credit portfolio, so that affected their overall financial position at that time, though they have been recapitalized now. And then we very clearly saw that a very clear indication that rural financing or agri, specifically crop-based lending, has declined by almost 50%. So we were the apple of eye of governors of the central bank at the ACAC meetings till 2019, because if you look at financial inclusion, microfinance was growing at the fastest rate in terms of lending, agricultural lending, and also in terms of lending for smallholder farmers. And then post 2019 and definitely post 2020-21, this has come down from a high of, we plateaued at around 4.2 million active crop and livestock clients to now around 2 million active clients. So what is very clear is that unless there are instruments available that provides a sort of risk coverage against natural disasters or climate-based crisis, which all of us can see, outreach into agriculture, crop, lending will contract, and it has contracted. So it's a public policy issue. It's a food security issue for smallholder farmers. So I think something which very definitely requires intervention from the government and from the donors and from the public policy side. So I think I will end here.
Thank you so much. Well, thank you for the lovely and insightful remarks. Ladies and gentlemen, we have to excuse Ms. Okura because of another commitment. Can we please have a big round of applause for her intervention? Thank you so much. Thank you. Well, I'm really sad to see you go, Ms. Okura, but I'm also happy that I got a chance. That leads me to the next question to Dr. Farooq. We've been talking about the impacts, and we know that risk analytics, reliable, timely information is really, really important. And you've led the NatCat Risk Assessment Model project, and 1,000 miles journey starts with the first step. And we now have NatCat Phase 2 on board. Could you please walk us through how you are planning to strengthen NatCat 2 compared to the NatCat 1?
Okay. Thank you, Dr. Kaman. And I think we started this 1,000-mile journey together, I think 4 or 5 years back. So, but I'm happy that with the financial support of the NDRF, now we are in a position that we can provide data-driven analytics for the DRF. So just before going into the NatCat 2.0, let me just highlight a few things from the NatCat 1.0. The NatCat 1.0 provide the probabilistic hazard, exposure, vulnerability, and risk loss information against 9 perils at the national levels. That include fluvial floods, that's the riverine floods, that include the flash floods, the landslide, tsunami, cyclone, and drought event, and beside that, the heat wave as well. So all the major 9, unfortunately, Pakistan has a complete spectrum of the disasters, and we experience multiple disasters every year. So the complete spectrum has been covered at the national level, particularly those areas which matters a lot and which contribute a lot in terms of the direct and indirect losses. That has been already included in the NatCat 1.0. So just building on the discussion in a panel 1, or maybe recalling some of the issues who were there, the data-driven analytics in the form of the probable maximum losses, which is the requirement for the insurance industry, which sum has to be insured, so that can be calculated from the NatCat, and beside that, we also provide the scientific-based information on the AAL, annual average losses, and annual average loss ratio can be used for the computational premiums by the insurance industry. So the data-driven analytics, and that's true on a very scientific background and scientific modeling. Tawqir Saab mentioned about the dominant modeling, but I would say there are a lot of people that who are doing a lot of efforts in these countries. They have did a lot of modelings, and in just alone in NatCat 1.0, 11 different state-of-the models were developed, and that has been put in place behind this data, which will be used now in a DRF. Now coming how this DRF, how this data-driven analytics will help. The first dimension is the spatial planning, where we should build our new structures. They should be safe. They should be enough resilient against the earthquake, against the flood, etc. The second thing is it must tell us the scientific profiling for the DRR project prioritization, so that we have a limited fiscal space for that, so we can use it in a better way. The number 3 is the DRF, because the DRF required disaster risk profiling at the national level in the form of the PML, AL, ALR against these perils, so that the insurance industry can develop the product for that. And most importantly, there was one problematic issue about the harmonization and the limited data about the multi-hazard vulnerability and risk assessment. So it will also provide a harmonized database for the development of the multi-hazard vulnerability and risk assessment at the much lower level like the UC at this one. Now coming to your question specifically, what is on the agenda in the NetCat 2.0? We want to include two missing perils, the glove hazard, which is more recurring now in Pakistan in view of the more temperature rise, particularly around 2 degree or 4 degree in the north regions. And similarly, a more recurring phenomenon now in the Punjab is the environmental hazard, that is the smog. So that's the two important remaining perils that has been included in the peril database. But beside that, keeping in view the Pakistan government more expenditure on the, its own public infrastructures, we want to give a more detailed risk assessment of the energy, road, education, and health sector, so that the government can have precise and accurate information of its assets in these four sectors, so that they can go for insurance financing or e-insurance financing. So in the event of any unforeseen, they will be able to provide these information to the insurance industry, and they can secure the sum of that, or even they can also keep up a fiscal spacing over there in their portfolio as well. Last but not least, in terms of NetCat 1.0, NetCat 2.0, it will shift the focus from a reactive approach to proactive approach. It will provide the basis for the proactive measures like DRR measures, the DRF measures, and beside that, one of the most important things is Government of Pakistan is signatory to the Sendai framework, to the SDGs, to the COP21. All of these emphasize on the reduction of the human livelihoods and economy against natural disaster, climate-induced disaster. So we would be able now, we can tell them we have achieved a lot in this area. So I think I will answer your questions.
Thank you so much. Well, thank you for bringing back so many memories, especially about the AAL and the PMLs, the countless hours, ladies and gentlemen, that we have spent crying literally how to do it. But finally, we have a good product. And allow me to plant this seedling, not only at Suparco, but also at NDRMF. So the government of Pakistan is expected to prepare the quantified nationally determined contributions. So think about it, how we could use the NatCat to help that quantified NDCs, maybe not this year, but maybe for the next version. So that's a seedling I wanted to leave with you. Mr. Shahi, Dr. Farooq talked about data-driven analytics, and Ms. Becker also talked about it. I mean, we can't move an inch without data and without risk-informed analytics. Now, and the START network, we know that it's the pre-positioning of funds from START network and early action is literally reshaping how the humanitarian affairs are managed and how the support is provided in terms of disasters. In your experience, how are these designs validated first of all, and how are they shaped to release the pre-position funding, and how the START network, particularly in Pakistan, is doing it?
Thank you very much, Dr. Kamal, and thank you very much NDRMF for inviting START network to this forum. First of all, just I will introduce START network because most of the participants maybe didn't see the START network more. So START network is actually a network of humanitarian organizations. It's a global network. Currently, we have 134 humanitarian organizations at global level. And START network is globally known for his well-structured and recognized disaster risk financing program. So in Pakistan, currently START network have 54 member organizations. We have 22 internationals and 32 national organizations. We are working with them. So how the START network is working in Pakistan? Basically, we are working on 3 hazards: flood, drought, and heat wave. We have globally tested and recognized models. We are following them for our designing anticipatory actions. And then how, you know, the structure is working here, of course. The START network is present currently in 10 countries through their hubs. In Pakistan, we are present through Ready Pakistan is the hub of START network. Within Ready Pakistan, we have a good coordinations and governance structures, like the whole program is supervised by the National Steering Committee. The National Steering Committee is comprise of different national stakeholders, like the member from National Humanitarian Network, the member from Pakistan Humanitarian Network, the Indus Consortiums, and other international organizations are part of that governance body. Under that governance body, of course, the DRF technical team is here. It's direct representative of START network. Then we have technical working groups. The technical working group is a specialized structure for flood, drought, and heat wave. We are here. And then we have another structures which basically they are the experts of the models to review and analyze the model outputs, which is called the 4-1 group, which includes, you know, the person from Pakistan Meteorology Departments. We have the academicians from different universities. We have UN agencies experts in that groups. We have international experts in that groups. So in this way, we are currently present in Pakistan. So this is, you know, one of them.
Lovely, thank you so much. Last but not the least, Dr. Rafiq, you're representing the Pakistan Climate Change Authority with the new kid on the block, but soon it's going to be one of the most influential, hopefully, once the annual plan is approved. The Pakistan Climate Change Authority is supposed to anchor a range of resilience initiatives. Could you please enlighten us and the House if PCCA is positioning risk financing within broader climate finance architecture, and also if there is a plan in place or it's already doing taking some steps to accelerate the subnational risk financing mechanisms in relation to accelerating resource allocation to Pakistan?
It's a very complex question. I'll try to remember all the components. Thank you very much for having me. Good afternoon, everyone. Let me first tell you about the Pakistan Climate Change Authority. Under the Pakistan Climate Change Act 2017, there was supposed to be an authority that has to, you know, assemble every component of it, because climate change is a very complex phenomenon. It requires a lot of expertise, a lot of coordination. So it was envisioned and then enacted. Law was enacted in 2017, but it wasn't operational. It has been operationalized partially since last year. We have been working. We are 3 members, the technical members, member coordination, member finance, member mitigation. And there are 4 provincial members. The best thing about the Pakistan Climate Change Authority is, you know, after the 18th Amendment, there is sort of environment where we say, I mean, something is to be done by the federation and something is to be done by the provinces. So all that, confusion exists. So the Pakistan Climate Change Authority has a mandate in the whole of Pakistan, and it has also its provincial members, member KP, member Sindh, member Balochistan, member Punjab, and then there are 2 co-opted members from AJK and GB. So what we have to do is to, you know, strengthen the coordinated efforts to meet the challenge. You must know that under the CRI, the Climate Risk Index, Pakistan has now the top position in terms of climate index. And this is because of the hazards, the kind of hazards we have, the kind of exposures we have, the kind of vulnerability, and the capacity isn't there at all. So Pakistan Climate Change Authority is mandated to work with the provinces to further strengthen the process at the federal level and the provincial level by, you know, helping them prepare further plans and implement those policies that are already there, federal and provincial. And then to, just come up with more projects. The international finances have been lackluster. Like last year, at the federal level, only $800 million could be mobilized. So as to strengthen that process further, by establishing a dedicated fund known as Pakistan Climate Change Fund. Under Section 12 of the Act, there was supposed to be a fund. So that has been approved by the Law Division, by the Finance, and it's with the Minister, and hopefully it will be notified. So this will be first of its kind in Pakistan, a national level fund where there are provincial quotas, because the main actions are supposed to happen in provinces. So there are provincial quotas, provinces are on board, and there's a fund strategy also, how to mobilize fund. We have also come up with the strategy. The seed money will be provided by the federal government, but then further there will be different sources of funds. It has to be approved by the federal government, of course, but we have conceptualized this as how to go about it. 40% of the funds will be for the adaptation, 30% for the mitigation, and 20% will be for the cross-cutting areas. 10% will be for the administrative costs, etc. So that's a main mandate that we are supposed to do. And then government entities can apply with, there will be matching grants. So it will be one-to-one matching grants. So provincial governments can apply. They will have from their quotas. INGO, CSOs, private sector. Yes, the good thing is that the funds will also be available for the private sector as 1-to-2 ratio.
The structure is decided by the authority itself, 40% for mitigation.
Right. So yes, we are autonomous authority, and with the help of the members, we have actually gotten it approved by the authority. So it's sort of board that we have. Things are ongoing. I mean, we don't have a team right now, but the service regulations are with the finance department. It will be approved. We'll have a team.
So will it become a bill? Will it be flexible in the future? Or no, we'll have this demarcation for the rest of times?
I couldn't get your question.
So for example, so 40% goes to adaptation, 40% goes to mitigation, 20% goes to cross-cutting. So will it become a bill eventually if the regulations are approved, or no, it's just going to be the rules of business for the authority?
So, see, there will be 3 committees. Okay. The fund management committee will be the apex body. So they are going to take the decisions. So it includes all the EAD secretary planning. That's the composition. Super. And the private sector and some NGOs. So the board is going to take decisions. Board will be supported by 2 subsidiary committees. The technical committee is going to evaluate the proposals that will be forwarded by the provinces or by the private entities or by the NGOs. And the committee is going to recommend for the funding. Fantastic. It depends upon the span of funds, the volume of the funds that are available. And then there will be fund investment committee, FIC, and FIC is going to mobilize funds.
Great.
And give recommendations as where to invest it. Initially, it will be a seed money pooled together, and then it will be invested somewhere. The earnings will be available for funding. I mean, that's the mechanism that we have. Probably I've lost your question, but
well, thank you so much. Lovely insights, and I mean we can spend hours discussing this. With this, we are done with the first round of questions. We inherited the lag, we inherited the delay, but we are planning to wrap it up on the 60 minutes mark as against the initially 90 minutes mark. So we are left with 15 minutes, which means we'll have roughly 3 minutes per question, which that's not fair enough, but and the questions are quite heavy. So to start the second round of questions, and I'm merging the second question for Ms. Okura and yours. So, and throwing it to you because you're the powerhouse of this panel. Aiming for sustainability and scalability, we know that's a key issue, and you already talked about some key systemic changes that we need to address. Information asymmetry, data-driven decision-making, but what other policy and systemic shifts we need that we could empower risk financing to meet the global standards? You talked about Global Shield. We know that the pace has been slower than the rest of the country, and for example, Costa Rica was submitting it before Pakistan. What do you think, and also in the context of climate, energy, and sustainable development context, how can we make that pace faster? and also without compromising scalability and sustainability? That's a very complex question, but
It's
3 minutes would be okay.
3 minutes, boy, that's tough. You planted a seedling, and I'm going to plant the second seedling. And this would be that who is looking at the big picture of finance, whether it's disaster risk finance or adaptation mitigation finance, who holds the big picture? At the present moment, this is a gap that needs to be filled. And this leans in very heavily into all of the institutional arrangements discussion that we had in the preceding panel. It links to governance issues, but it must be addressed. Very happy to hear from Dr. Rafiq about all the developments on the PCCF, which brings me to the point of how do we make it sustainable and scalable. Any good disaster risk finance strategy is going to lock resources into place that can be called on when a hazard turns into a disaster. Now, there are different layers of risk, as we spoke about this morning. At the micro and the meso level, these are more your market-based risks and risks that can be handled and transferred to, for example, other bodies. Then you have the sovereign risks and the catastrophic risks, which sometimes cannot be transferred, and there you need to have other sorts of risk mitigation and management strategies. But for scalability and sustainability, I'm going to focus more on the micro and the meso levels. We equated, or when I started, I began with, first of all, harmonizing the different terminologies that we have in the room, ex ante, adaptation. You spoke about NDCs or the NCQG. I'm going to speak about how we need to make space for disaster risk finance in the nationally determined contributions as well as in the National Adaptation Plan. Because when you identify all of the adaptation actions, that's already where you can identify where you're going to need disaster risk management strategies and where you're going to need possibly disaster risk finance. From there, you look at your PC1s, you look at the PSTP, and when you're deciding how to allocate finance for any development project, then the deciding factor must be having the right indicators and the right metrics in place. So adaptation metrics, which are taken very seriously, not just adaptation metrics, but also mitigation metrics, which are then taken seriously. Again, links back to the institutional strengthening and the governance issues, because it needs political will to say this is where the money will or will not flow. That's the one thing. In a disaster risk finance strategy, and this is also what I mean about the big picture, does the National Climate Finance Strategy, does the disaster risk finance strategy, linked to that, the multi-hazard vulnerability assessment, do your NDCs and do your NAPs, do they tell one complete story or not? Because this is how you're going to come to truly climate-informed, climate-resilient development if we're going to look at it. Sorry, I may be over my 3 minutes, but I think this is important to say. A disaster risk finance strategy has many elements, and insurance is one element. Risk transfer instruments are designed to create a behavior shift. In the morning, we had a colleague in the audience, Fahim, who asked about sustainability, and he said, insurance comes too late. This is not the idea of insurance. The idea of insurance is to make people more aware, designing risk premiums in a way that encourage risk-informed behavior. As Kamal was saying earlier about, or Ali Tokir Sheikh was also saying earlier about all of the hotels that are on riverbanks, or all of the encroachments. Why do we have so much urban flooding? Etc., etc. These are the things to be very, very conscious about. So running this down very quickly, I could name 5 main things that need to happen. First of all, the standardized risk assessments that I already spoke about in my opening. Then the comprehensive regulatory reforms that are needed, I've just alluded those. Market-based risk layering strategies, so the public and the private sectors need to get involved here and need to understand how they're going to manage the risks that they face. And this also includes pricing. It includes greening the macroeconomic financial regime in order to get the shift that we want to see. The number 4 is strengthening institutional and coordination mechanisms. This also includes market integration. And then number 5, creating an enabling environment where you're able to draw sustainable finance, where you're able to draw blended finance, as well as risk transfer instruments into the mix. Thank you.
That was precisely 3 minutes multiplied by 2. Well, thank you. A quick follow-up. So when you talk about regulatory framework, you're referring to the land use or you're referring to the financial instruments? Yeah.
Sorry,
So one of your 5 points in the end was, the second was regulatory reforms.
Yeah.
So you were referring to the land use, particularly to the hotels, or you were referring to the financial instruments?
I was referring to all of it.
All right. Thank
Yeah.
you. Lovely. Mr. Mohsin, 3 minutes. What are the future plans for integrating risk transfer mechanisms in microfinance services? It looks very trivial, but it's really difficult.
So, as a strategy, what you can see is that at the microfinance institution level, we are very clearly seeing that they are segmenting the market, and the segmentation is in the form of geographical segmentation. So and what you will see is that despite the fact that in majority of the other countries, in peer countries like India, Bangladesh and Mexico, the cost structure as they achieve economies of scale starts coming down, but that's not happening over here. And one of the reasons behind that is that in order to diversify your risk, the institutions are moving into different geographical markets. So every institution is spread across almost the entire length and breadth of the country except for Balochistan, which has its own dynamics. So that's one way of managing risk. The other is that institutions are talking to insurance companies, and yes, insurance products right now are very basic. But insurance companies and the sector and the consultants that have been hired by international investors that invest in microfinance, they're all trying to come up with products which are managing crop insurance risk and also livestock insurance risk. There is another trend that has started happening, which is urban flooding, and also which is to do with heat waves that has happened. And so that is leading to loss of income for, say, a week or a few days. So you need to come up with insurance products that is managing those, covering those income also, which are very important for our end of the clients. So interacting with insurance companies is very important. But if you ask me at the national level, so when we are talking about institutions like NDMRF, it becomes very important that we look at, so what have been the outcome of the previous events. So PMN has been involved in both the post-disaster need assessment, both post-2010 floods and 2022 floods for the World Bank. And what we found out was that there are 3 kinds of risks or support that the clients require. One, for clients who have almost their entire asset or crop or product has been wiped out, they require a complete support in the form of writing of their loans. If not beyond that, covering the loss of the yield, but as financial institutions, we can only, to the extent of loan, we can cover their losses. Number 2, there are clients who require immediate, I would say, rescheduling of their loans. So that means that the lending entity will have to reschedule the loans of its clients, but they also take funding from commercial institutions. So their repayments to commercial institutions are then at risk. So how do they cover that? They require immediate liquidity support from some source. whether that's Apex, which up till now Pakistan Microfinance and Investment Company is providing that support, but that's a support that is required at the public policy level. And then the third is when you are rehabilitated, then the clients wants to restart their businesses, so refinancing.
Yeah.
So how do we provide the refinancing instrument? However, because NDMRF is present in its entirety, including its CEO, I think what is the discussion that happened in panel 1, and I think Dr. Tokir raised this issue, is that as we are discussing all of this, there is some sort of China wall or glass ceiling we hit, because so there are 3 entities we engage with. It's the central bank, because we are financial institutions of which majority of them are regulated by the central bank, and the central bank also looks at how do they provide coverage, support, insurance coverage against your loan outstanding, so that's one entity. Then SECP, which is the regulator of insurance sector, you need to engage with them, and they are also the regulator of the non-bank sector. And then because majority of the problem is, it arises because of a national disaster, so NDMA and so NDMRF. So we really don't know between the 3 entities who is the principal owner of, where do we go at its real best, where we can find the solution. So I think if at the state level, government of Pakistan, or between the 3 entities, we can find a solution so that these kind of disaster related crises, we know where to go to and we find a solution, is something we look forward to. Thank you.
Thank you so much, Mr. Mohsin. That was way above 3 minutes. It's all right. Mr. Shahia, may I call you Your Royal Highness? Mr. Mohsin talked about micro-level pilots, and Start Network also deals with micro-level. And you've talked about like heat wave and floods. There are many pilots that you've been implementing. What lessons or what are the key experiences that have emerged? And do you think there are any lessons from the micro-level that we could implement it in our National Disaster Risk Financing Strategy? 3 minutes.
Thank you very much, Dr. Sir. Of course, there is as in the first panel, there are the experts, they highlight few essential points, how can the disaster risk financing could be. So the disaster risk financing has basically 2 components. One is basically the crisis anticipation things, like our net gate is, we are going in right directions. And the second thing is basically you have a financial tools. So for the last 3 and 4 years, we have implemented both of the tools, as the Start Network has both of the mechanisms. So we have seen, basically we are working with our local partners in Pakistan. So when you allocate it, pre-positions the finance, and if you can develop a costed plan ahead of the any crisis, of course we have seen that it creates a lot of impacts. It's even, for example, when we coordinating with our government entities, when we came to them and we told them that we have this kinds of money, of course the cooperation is quite high. And then of course when you are coordinating with the community and you will sit with them, then of course the response is quite very well, and you come up with the right kinds of things, what they have need actually. So since for the last 4 years we have implemented more than 35 anticipatory actions projects in Pakistan. So of course our experience is basically it will cost very low when you anticipate and finance ahead of the crisis as compared to the response we are actually doing. Thank you.
That's brilliant. Dr. Farooq, I'm giving you a very difficult question. Talking about risk analytics, and we know in Pakistan for the last 20 or 25 years, we have this fragmented approach everywhere. Everyone wants to have their own shop. Everyone wants to have their own stall, that we are doing it. As National Space Agency, how do you think Pakistan can unify these are fragmented approaches and these fragmented instruments and come up with one unified decision support system, or NatCat, or risk analytics, whatever you want to call it? But how can we have it unified? 3 minutes, but I can give you 3.5.
Okay. Thank you very much for putting this difficult question. I think most importantly, there are fragmented approaches around, and most importantly, there are different approaches. There are peoples who look for the quantitative, there are people who look for the qualitatives, there are people who use the analytical functions for the vulnerability, there are people who use the physical vulnerability function, and there are some people that use the expert opinions. So ultimately, you would come up with the different results. So that's the right question at the right time. But fortunately, I would say at the moment, the NatCat is the only one system in place which provides the national level analytics against the 9 perils. Although there are some people, they are also doing same things at the SAM level. Again, duplicating efforts, raising some question about the approaches, the inaccuracies. So what I would suggest that there should be a clear mandate for one of the organizations, whether if this is the NDRMF, so if they carry the mandate, so they should make a giant, like a task force or maybe like a steering committee, and then they can invite all the relevant stakeholders and they can come up with one unified approach. Otherwise, if we would not do that, unfortunately, we would end up with 4 or 5 different curves like that. So which one to pick? Maybe if somebody is using the qualitative, we would get nothing over here. Low risk, medium risk, high risk, it doesn't help you in terms of the PML and AL. So ultimately, the way forward, which is the global practice as well around the world, there should be one unified systems. We should start with that. And definitely, everything is not final. We must go for incremental improvement as the time passes on. So what I would say is this moment, NatCat is luckily one of the unique systems in Pakistan. There is no other system in place right now which provide the quantitative risk assessment up to the tehsil levels. Fantastic. So that can be taken as flagship projects, and everybody else should be on board so that we can improve it further by taking their inputs. There are certain limitations in terms of data or approaches, so that we can achieve the ultimate goals. We should have an accurate analytics for the DRFs. Otherwise, we will end up in a mess up.
Fantastic. Thank you so much. I think that was quite on the spot. That you have already hit the bullseye.
Yeah.
Dr. Rafiq, last question of the moderated discussion, and may I say 3 minutes. Ms. Becker already talked about adaptation metrics, mitigation metrics, and last week we were all together when ADB was talking about adaptation metrics. You were there yourself. Do you think the Pakistan Climate Change Authority can play any role in standardizing all these matrices, adaptation metrics, mitigation metrics, resilient metrics, and particularly in the context of blended risk finance, because we cannot move an inch without blended finance?
Yeah, thank you. I told you that, it's partially operational now, and once we get our team, so we'll be in action. And that's very much on the agenda of what you are talking about. The matrices are very important as far as attracting more funding even is concerned. So because nowadays donors, they do ask for the previous funding as what has happened to those. So in terms of that, we have prepared our annual plan as well. That entails several things. That entails, as I said, coordination mechanism. We have established certain technical working group at the provincial level.
Fantastic.
Those have been notified in the province of Sindh, KP, Punjab, hopefully Balochistan, and rest of the 2 co-opted members, they are going to do the same. Okay. At the federal level also. Fantastic. So we are also, what is the objective is to stock take what has happened so far, and then take the agenda forward as what will be for the next 10 years.
Lovely.
So, I mean, we are in the right position to do that, and with the help of our provincial members. We also are looking at the partnership with the private sector, and with especially with the banks and with the other development partners. And also, we have to arrange those trainings. Somebody talked about PC1. I guess you talked about the PC1 and its inclusion. So it's very much technical. So all this is on the agenda. We also have to do this technology action plan, and the research is very much on the agenda. So I think yes, you are right. with the passage of time, this will be something mainstream. Yes.
Thank you. Thank you very much. Ladies and gentlemen, this was our 2 rounds of discussion. I leave it unconcluded because the discussion must carry on. We have maybe time for 1 or 2 questions. If there is any burning question that is not letting you at peace, please take the mic. Okay, there is one raised hand. That gentleman is, yeah, that one. Could you please introduce yourself, and also who are you requesting the question to?
Thank you so much for this enriching discussion. I'm Asif Iqbal from Islamic Relief. We used to hear about number of countries where we say that everyone living there is more resilient or kind of prepared to the natural disasters because of the fact that they are more prone to the disaster and more frequent disaster. But now that's the case with Pakistan. But unlike those countries, we are not prepared like that. Even people living in Islamabad are not prepared, or in the rural area. So what you think are the reason behind this lack of preparedness, despite the fact that the Pakistan is now even more vulnerable than those countries like Thailand or other countries, Bangladesh? What are the reasons that we are not getting prepared for those frequent disasters? Thank you.
And who do you want to answer your question?
Anyone.
Panel, why are we not prepared? Yes, let's go with Dr. Farooq and then Dr. Rafiq.
There are 2 straightaway answers to that. There are no enforcement of the building codes. So if we talk about the earthquake vulnerabilities, so we are not enforcing the building codes in Pakistan. Neither we are opting for the retrofitting of the existing buildings. The second one is we don't have any regulations regarding the land use, land covers, where to construct, where not to construct. So we encroach waterways. We don't care about the building code. So ultimately, whatever any disaster happens, so that's ultimately end up in a much more vulnerabilities of the human livelihood and economy. That's from my side.
Dr. Rafiq, I'll come to you. I'll come to Ms. Becker.
Right. The way I've analyzed, people can have different angles to look at the same picture. So the way I've analyzed and the way I see it and the way I envision it is there are 3-4 problems. One is the data problem, right? We don't have accurate models to predict, and as somebody said, standardized way of doing it. So your planning can only begin with the information that is available. So in Islamabad, in next 20 years, how much rain are we supposed to get? I mean, what the model says. And then are the sewerage lines, are the canals, are the waterways and the channels are according to that information or not? The second thing is the capacity. Most of us, we don't understand the complexity of the climate change. It is a global externality in economics, what we say, imposed on us. And we can't say it's the provincial responsibility, it's the federal responsibility, it's the MOCC responsibility. It's everybody's responsibility. We are the most vulnerable nation. So everybody, they have to take their responsibility and then work for the agenda that is making Pakistan more resilient and in the future carbon neutral, of course. So that requires, just look at the PC1. There are 4 tools, the Chira, the Kara, those tools. How many of us do understand how to use it? And where is the information? If I understand, so where is the information, and is it the right information that I need to put in there? So it requires lots of capacity building on different aspects. It is few aspects I talked about. Similarly, the climate finance. So the third thing is the mainstreaming of climate change that has already happened into budgeting and planning, for example.
Thank you.
At the provincial level. And then the most important thing is the coordination.
Yeah, absolutely.
At the federal level, the ministries are coordinated. The EAD, the planning, MOF, Ministry of Climate Change, PCCA, And then, you know, you have those vertical coordination as well, horizontal coordination, vertical. These are the 4 things.
Great.
And that's why we are facing
I think that's nicely wrapped up. Ms. Becker, what's your take on this?
Thank you very much. Dr. Farooq and Dr. Rafiq already spoke about the governance, adaptation, and maladaptation problem. But I would be very sad if we didn't talk about all of the flood affectees that we have in Sindh and other places who still are waiting to be rehabilitated. In the morning, we heard that every person has the ability to bounce back from a disaster. That is not the case. It is absolutely not the case. Because with every successive disaster, any person's ability to bounce back from an extreme weather event reduces significantly, such that recurring extreme weather events will leave them extremely vulnerable. So if they are chronically poor, they will be pulled deeper into poverty, and they're going to become, if they're transitory poor, they will be pulled deeper into poverty traps, and they will then become chronically poor, where the government has no other option but to look at social protection mechanisms, because their insurance or other types of risk transfer instruments are not going to work. And these are things that, that have not been studied. And coming back to the colleague's question, thank you very much, it's a great question. Awareness is the biggest thing, but also a need to unpack this issue, because the affectees of the 2022 floods are almost the same communities that were affected in 2010. And you can already see, if in 2010 they had 2 buffaloes to their name, they were then left with 1 charpai, and now in 2022, they were probably left with not even that. So the resources that they have are simply, they are washed away with the flood water, with the rest of their things. And these are things that we need to understand. From my 6 years of leading a project on climate risk insurance in the Caribbean, I can tell you that you know, the Eastern Caribbean is affected very much by hurricanes. If it costs the government of Jamaica $30,000 to rehabilitate 1 family after an extreme weather event, with insurance, they could manage with $300. And you can imagine the savings to the exchequer. Yet here we are, not looking at any sort of ex-ante mechanisms, not looking at any sort of risk transfer instruments, and not addressing the problem. So this whole idea of, you know, that every successive event is going to reverse decades of development gains, this is very true. Social resilience needs to be studied, and it needs to be very well understood how we're going to address this sort of vulnerability, because this will mean that Pakistan's, a big chunk of the population is going to be pulled deeper into poverty. There are things like saved health, saved wealth indicators, and then the fact that there's a complete disconnect between our universities, so the researchers and the policy makers, so the typical sort of tripartite arrangements that we look at, these are missing. In Lahore, I have showcased the work of very talented scientists who've developed mechanisms to ease urban flooding in Lahore's metropolitan area, as just one example. Why are we not looking at these practices and seeing what can be mainstreamed in the urban areas in Islamabad, for example, or in other instances? So there are very many disconnects. The climate models can tell you exactly when the next, Farooq sir, please correct me if I'm wrong, but I don't think I am. The climate models can tell you with a very high degree of certainty when the next extreme weather event is coming. It can pinpoint the location. Climate models developed at the Potsdam Institute for Climate Research, for example, can tell you which part of an extreme weather event was climate change and what was maladaptation or malgovernance. So you have all of these at your fingertips. You need then the political will also to make the change. Thank you.
Fantastic. That was quite comprehensive. Mr. Mohsin, your take.
Okay, so I think my 3 colleagues did talk about challenges with Pakistan, but I want to respond in terms of comparative. So you look at what happened in Uttarakhand only yesterday. You look at what happened in West Texas, I think few weeks back. You look at what happened with the Canadian forest fire and the California, North California fire this spring. So just blaming Pakistan will not solve our problems. Look at the overall global aspect of this climate change. And then वो जैसे सुबह चटर्जी साहब ने कहा था, अपने अंदर भी यकीन और उम्मीद पैदा करें. Thank you.
Thank you. It's only fair enough that I give Mr. Shahi the last, if you want, because we are not taking any more questions. Do you want to take this? Why are we not prepared?
Thank you very much. Of course, my colleagues, address the whole questions very well. But, in my opinion, we have to see, as my colleague mentioned, it's all about the awareness. If we can see at individual level, as household level, how we are serious to take these kinds of things. So, this is my point. Yeah. Of course, awareness is needed for that. Yeah.
Lovely. I think we have seen really good perspectives on why we are not prepared. But if with all of you, if with your permission, there will always be a situation where we will not be ready. We will always be overwhelmed because these risks are getting more and more intense. The fact is we have to push the boundaries of resilience higher and higher and higher. With this, ladies and gentlemen, let's wrap up this panel discussion. It was wonderful to be here with you. Can we have a huge round of applause for this brilliant panel? And thank you so much. Over to the Master of Ceremony.
Thank you so much to our moderator and panelists. I would request you all to please remain on stage as we distribute the shields to the speakers. Thank you so much. May I kindly invite Mr. Bilal Anwar, CEO, NDRMF, to join us on stage for the shield distribution. Thank you. We will start with Ms. Sobia Becker. Dr. Muhammad Rafiq. Thank you, ma'am. Mr. Sayyid Mohsin Ahmed. Dr. Muhammad Farooq. Mr. Azmat Shahi. Last but not the least, our nice moderator, Dr. Kamal. Thank you, everyone, and we will take a group photo with the panelists. May I join you, sir? Thank you, everyone. Ladies and gentlemen, we will now take a short working tea break, and I think break has already started. So we just request for those who haven't got the opportunity, please get yourself a nice cup of coffee or tea to your tables. So meanwhile, we will start the panel, our final panel, panel 3. Thank you. everyone, please get yourself a nice cup of tea again and be seated on your tables. We will start our final panel in a while. Ladies and gentlemen, I request you all to please be seated. We are about to start the final panel. Our today's final panel will focus on forward-looking financial instruments such as catastrophe bonds, contingent credit lines, insurance mechanisms, and global risk pools, essential tools for building sustainable and shock-responsive financial systems. We are pleased to have Mr. Mubashir Hussain, Manager DRR and DRF, moderating this discussion. Mr. Mubashir is a disaster risk expert and urban planner with more than 30 years of designing not just physical spaces, but systems of sustainability and disaster risk reduction across Pakistan. From crafting master plans of cities to steering the national DRF strategy, his fingerprints are on Pakistan's future-proofing efforts. As manager DRR and DRF, he is the quiet force behind NatCat model, DRF reforms, and DRR financing, backed by global partnerships and grounded in persistent fieldwork. He will now lead us through the conversation and introduce our panel of distinguished experts. Over to you, sir.
Thank you, Prayal. Panel discussion 3, we start with way forward for sovereign and market-based DRF instruments. Good afternoon, ladies and gentlemen. We now begin panel discussion 3, focus on way forward for disaster risk financing in Pakistan. This session will explore innovative sovereign and non-sovereign solutions, and including contingent credits, catastrophe bond, inclusive insurance model that can strengthen financial resilience across public and private sector. Our distinguished panelists bring rich insight from government, reinsurance, national insurance institutions. Their expertise will guide us in identifying feasible and scalable and context-specific DRF instruments suited to Pakistan's unique risk profile and evolving fiscal challenges. So let me introduce my panelists. First, I would like to introduce Mrs. Aisha Javed, Deputy Secretary Budget, Ministry of Finance. Sorry. Ms. Aisha Javed is a civil servant and public finance management expert and strategic budget specialist with an overall experience over 11 years serving at federal government. She has significant experience in fiscal planning and budget preparation and public finance management reforms, including implementation of green and gender budgeting. Then she's also lead on gender, climate, and SDGs, and inclusive public finance management reforms in federal government. As a result, the whole federal budget is now climate, gender, and disaster sensitive for the first time in the history. She has designed various instruments, framework, and methodologies embedded in climate lens for public finance management in the country. In his role as trainer for public finance management, she has trained nearly 200 federal government employees. She has also been recognized globally, and she represents and advocates the successful model of transforming the existing public finance management system in Pakistan to many other countries through the platform of IMF, EU, OECD, ADB, and ACC, etc. Earlier part of Planning Commission, she has been very much involved in PSDP preparation and evaluation. And her major contribution remained devising the implementation and M&E strategy for South Balochistan Development Program of Prime Minister, comprising 200 projects worth $20 billion US. And she has developed for the first time the National Framework on Gender 2022 and National Development Agenda for 21. Now I would request Aisha, she's already here. Thank you. Our next panelist, I would like to call Mr. Khurram Arshad. Mr. Khurram, he is General Manager and Zonal Head of National Insurance Company Limited. Possesses 24 years of experience in the general insurance and extensive expertise in climate and disaster risk insurance, led and contributed to various strategic projects for public finance sector entities, actively engaged in the development of parametric insurance solutions for our climate vulnerable regions. Mr. Shah represents NICL in national and international forum. So thank you, Shah sir. Now we have other panelist, next panelist, Mr. Khurram Lalani. He is a founder Resource Future. Mr. Khurram specializes in global climate investments, climate finance, and public finance management across key markets, including the UAE, Pakistan, Jordan, Algeria, Indonesia, China, Egypt, and US. His work involves structuring bankable projects, optimizing carbon markets opportunities, and integrated ESG criteria to ensure sustainable and impactful outcomes. Thank you, Mr. Khurram. Then we have our next panelist. She's representing UNDP, Ms. Sana Ihsan, and is a seasoned development professional with over 16 years of experience in public policy, economic development, and financing for development. Currently serving as National Project Coordinator as UNDP Pakistan, she has led strategic initiative for UNDP Insurance and Risk Finance Facility and Global Shield against climate risk. Her career span key roles at UNDP, WFP, and Government of Pakistan. Thank you, Ms. Sana, be here with us. We have one participant online, and we We are sorry that we kept you waiting. Mrs. Laura Schaefer, she's representing Global Shield Solution Platform. And Laura has background in sociology and is a project manager at Frankfurt School of Finance and Management, International Advisory Service, specializing in disaster risk finance and insurance. Prior to joining Frankfurt School, she worked for the German Development Bank KfW, where she was introduced to the Insure Resilience Solutions Fund, ISF, and joined the team in structuring and setting up the ISF. At Frankfurt School, Climate and Disaster Finance and Insurance, CDRIF, one of the focus area of International Advisory Service, she mainly worked for ISF and monitor ISF co-finance project while also acting as Global Shield Solution Platform country focal person for our Global Shield country. Thank you, Laura, joining us for this panel discussion. So let us start the discussion. Thank you, all the panelists. At this time of the event, it's I forget one most important one. Dr. Kamal, I would like to invite Dr. Kamal, another panelist, and he has been already introduced to the audience. Dr. Kamal is here. So sorry for that. So
I was just looking at the door if I could quickly run.
Otherwise, you may come without any introduction and without any invitation. Thank you very much. Actually, when we talk about disaster risk financing, NDRMF has the privilege to introduce first DRF strategy, and under that strategy, there are role and responsibility of various related organizations. And you see the main and pivotal role lies with the Ministry of Finance, and Mrs. Aisha Jwaishi is representing that ministry. So I would like to start from her. Aisha, how you see that the policy reforms and the existing setup of governance and budgeting, what type of challenges we have if we introduce any DRF instruments like CAT bond or credit lines or pool funds, how these situation can be handled, or do we need any policy reform or legal setup or changes in the system? Thank you, please.
Thank you so much, Mubashir Saab, and thank you so much, NDRMF, Bilal Saab, particularly for having me for an important discussion. You have elevated my status to Mrs. Aisha Javed. I'm still Aisha Javed, and happily, so. So that's a little correction on that part. Apart from joke, I just wanted to make you laugh because I can imagine you must be tired by now, and I hope tea is helping you. So coming towards your particular question about DRMF strategies and the instruments and public financial management systems. Before starting to talk about the financing risk management and the mechanism in the system, I think we need to understand what sort of macro fiscal challenges we are having at the moment in the country, right? Pakistan, like any other developing country, is facing many macro fiscal challenges, including low to moderate economic growth, high inflation rates, high fiscal deficit, increasingly spending requirements for the area of the development and the social sector protection safety nets. Among all these macro fiscal challenges which we are facing and having this limited fiscal space available to the federal government of Pakistan to prioritize the climate agenda, Pakistan is extremely vulnerable to disaster risks, all sort of disaster risks at the moment. And as a result of these disasters, the financial implication on the public spending is increasing every year. As you see, the frequency and the intensity of all these natural disasters is becoming high every year. So during the event of this, any type of the disaster in the country, we have to prioritize and we have to reallocate our public spending from other priority areas to manage this disaster. So in all this situation, what we need a strategy, a fiscal strategy to ensure your fiscal sustainability, your debt sustainability. At the same time, you have to build the capacity and the capability in the financial system to manage the extra financial impact which is being posed by all these disasters. So in this stage, once you have that strategy, you need to look into the assessment mechanism. You have all the, the risk assessment models available, and particularly NDRMF is playing a very critical role when you have designed this 10 years risk financing strategy, and then you have been able to develop this NetCat model, which will give you a very, evidence-based, the policy directions for the federal government of Pakistan. There is another aspect which we need to cater now, and that is to strengthen your existing public financial management system to cater all these needs. What do I mean by that? You need to integrate, and we all need to integrate the risks strategies, the risks, and the disaster management at the different level of the PFM systems and the tools and processes. So at the level of the Ministry of Finance, we took this initiative where we have modified the PFM tools, all stages of the PFM cycle, to make it climate, gender, and disaster sensitive and inclusive. As a result of this, federal government's budget is for the first time gender responsive, climate responsive, and disaster responsive. And this gives me pleasure to explain this to you, that Pakistan is one of the very rare examples in the world where we are having this disaster budgeting at the moment. We have been able to map your budget for disaster preparedness, for response and recovery, and then reconstruction and rebuilding. So rest of the world is doing this disaster management as a part of the climate budgeting, but not as a separate instrument. Why we are doing it? I have been asked this question a lot whenever I'm going to present this work to the rest of the, other parts of the world. Why we are having this disaster budgeting over and above than the climate budgeting is the reason, the quantity and the scale of the disasters we are having, and the quantum of the financial impact we are facing on our financial systems. So what is the significance of having all these disaster budgets, tools in your public financial management system, where you have mapped your federal budget at the cost center level across the three sections? The importance is, once you have these instruments, we are able to identify the public spending which is being aimed for the disaster preparedness and recovery and relief measures. At the same time, when you have these assessments through risk assessment models, including the NetCat, we can identify the gap between the existing public spending aiming at disaster management and the gap, the actual requirement to mitigate your disasters, right, in the medium to long run. So once you identify that gap, there comes the instruments, the risk financing instruments, other than the public funding which you are requiring. So there are different models which can look into, there could be different risk instruments, including the NatCat model, including the CAT bonds, including, these risk pools which are being, which are in a very discussion right now, and the credit lines and the contingency budgeting. They are all in place. But the choice of the instruments depends on various, the intrinsic and extrinsic factors. And we can talk about this like during the discussion. I just don't want to take a lot of time because other panelists are waiting, and then we can talk about the potential use of each of the instrument later on. Thank you.
Thank you sharing for a lot of information, and I'm happy to listen that there is budget tagging now, and we can see how much is being spent for the disaster risk reduction and response measures, and after the disaster response, relief and recovery. So that is very important for us to understand the pattern of expenditure over the longer period of time. Once I visited your office, but at that time it was not easy to calculate all these things. But I am very hopeful that we are changing this system. Now, following the formula ladies first, so I come to Sana Ehsan. So you are representing UNDP, and UNDP has its own structure, and how can these international organizations like UNDP and your partnership with Global Shield help catalyze innovative disaster risk financing solutions that are not only scalable but also accessible to countries like Pakistan?
Thank you so much, Mubashir. Although I do not believe in this thing, ladies first, especially sitting on the stage, that was fine. But anyway, thank you so much for the question. And there are many development partners who are working towards this agenda, disaster risk financing, and talking about that how we can move away from the reactive aid. And it's very important that we strengthen our systems and try to work towards a common goal of how we can actually be a resilient country in the wake of the disasters. And the country which is already prepared. So we are talking about the pre-arranged financing. And at UNDP, we are working on a global project, which is called UNDP's Insurance Risk Finance Facility, which is right now active in more than 25 countries. And we are replicating many of the initiatives which are strengthening many countries globally in terms of sovereign risk financing, in terms of inclusive insurance, advocacy, in terms of creating awareness and also supporting the solutions which can protect the lives and the livelihoods, and as well as support the government in terms of public assets insurance and hence so and forth. So anyway, we also supported the government last year as a Global Shield in-country coordinator to support the whole process, and we submitted the request for support last year. And that was a very inclusive and participatory process in which we consulted all the provinces, the regions, and we disseminated the information at the national level as well. And we submitted the request for support and handed it over to the Global Shield Secretariat at Baku in Azerbaijan at COP29 last year. And at the moment, the request for support is being reviewed by the Global Shield Secretariat, as well as the financing vehicles. And the financing vehicles, I mean the Global Shield Solution Platform and the other ones as well. My colleague from the Global Shield Solution Platform will also be there at the panel. But the ones we are looking at right now are the financing vehicles who are going to tell us, who is going to inform us that how they're going to respond to Pakistan's request. Now that brings me to a very important point, that what is the request? What does it look like? What are the priority areas? So the priority areas mostly are around the financial protection for the critical infrastructure. And by that we mean the public infrastructure like buildings, like schools and hospitals, and then shock responsive social protection for the vulnerable communities, as well as the climate risk insurance for smallholder farmers, and also the risk analytics, which is the basis for any kind of instrument that need to be put in place. And we heard in the several panels in the morning as well about the importance of data and many instruments that need to be integrated based on the informed information that could be available. We are thankful to NDRMF as well, and thank you for inviting me today here. I'm replacing Shiraz Shah, who would have explained things quite in a better manner, but we have seen NDRMF grow from the DRF strategy to NatCat modeling, and now presenting the NatCat model. And I think these are the stuff which is really needed at the moment to strengthen the basis for these kind of tools to actually come in place. For instance, at the moment, we don't have any sovereign risk finance instrument in place for the public assets insurance. Like, for example, if a disaster strikes, the burden is on the government books, right? So we need to have that kind of instruments there. And I really want to congratulate Ministry of Finance as well on integrating risks in the PFM system. I think this is the much needed, and the work which the development partners are doing at the moment also resonates with the work which ADB is doing with their policy-based loan, also the IMF's RSF. It also translates into most of the work which we're trying to do in this space. And we look forward to work with all the government entities, the provincial, the national, the federal ministries, and as well as other development partners to strengthen the whole systems. Because this is not, this is a big thing, and it requires a lot of time to come to a point where we can say that we have done substantive amount of work to make this country resilient.
and also the financial resilience, of course. So I'll just stop here and hand over to you. Thank you.
Thank you for acknowledging the efforts of NDRMF. It's a long journey, but at least we have started so many initiatives. You see that when some institution is created, it has some clear mandate. And under our output 3, we had a mandate to promote the disaster risk financing in the country. And through that, we have created the NatCat model, and next is the crafting this DRF strategy. Now it's the time to roll on all these things. So we are on our track very much, and we need definitely help of all the institutions involved. Now, I would take this opportunity to take on board Laura. She's online, our panelist. Laura, are you getting our, are you hearing us?
Very well. I hope you can hear me as well.
Yes, we are getting your voice. Thank you. Thank you for joining us. Laura, you are representing Global Shield Solutions platform. Let me put you a direct question that within the Global Shield, what do you think that what is the standing of Pakistan, and how Pakistan can be supported by Global Shield for advancing the DRF agenda and initiative in Pakistan? Thank you.
I'm so sorry, thank you very much. Could you repeat the question? There was a bit of an audio gap. I'm not sure if I got everything.
Yes,
sorry.
Let me repeat. I'm just asking that what type of help Global Shield can extend to Pakistan other than providing finance for the proposal we have submitted through UNDP to the Global Shield. So other than those financing, what type of help you can extend for DRF agenda in Pakistan?
Thank you. Thank you very much for repeating, and thank you very much for your kind introduction, and also very much to the organizers for the invitation to this very interesting and, if I may say, very relevant seminar on disaster risk financing in Pakistan. For me, it's a great honor to be part of this panel. Unfortunately, I could not be there in person, but I hope there will be a possibility in the very near future. So coming to your question, exactly, this is, and also building what my colleague from UNDP already introduced as part of the Global Shield in-country process, and where we at with the request for support being submitted and being reviewed at the moment. So from the Global Shield Solutions platform perspective, which is, if I may take a step back, the Global Shield Solutions platform is one of 3 financing vehicles that are managed and hosted by Frankfurt School of Finance and Management in Germany. These facilities are the Global Risk Modeling Alliance, which is offering country support for climate risk analysis and capacity building. We have then the Injury Resilience Solutions Fund, where we offer support for climate risk insurance solutions implemented in developing and emerging markets. And last but not least, the Global Shield Solutions platform, where we offer country support programs for climate and disaster risk finance and insurance. So together, these 3 grant facilities form the Climate and Disaster Risk Finance and Insurance Competence Center at Frankfurt School. And I just mentioned this to also provide an answer to your question, because this is the background from where we draw all of our efforts and our support that we offer under the Global Shield Solutions platforms. So it's really a comprehensive approach, building very much on all the lessons learned and the experience gained with implementing these 3 grant facilities. So with regard to the Global Shield Solutions platform, this is a service platform, and in that an impartial partner in co-designing and structuring really a tailored and modular support program in response to the country's need and request for support. It's also our objective to find, together with the country, implementing partners and best fit solutions that are then applied in a competitive approach. So apart from financing support or financial support, the Global Shield Solutions platform also provides technical support. We have three support components, varying from research to design of needs-based and best fit solutions, and finally also supporting the implementation. So for example, research and education, where we support climate risk with climate risk analyses, provide or support with CDRFI trainings and education, as well as research and analysis of the CDRFI landscape, impact and gaps. To also then supporting, for example, the technical product design of an insurance solution and also product quality assessment. Thirdly, this would be more than on the implementation side, not only implementing the CDRFI instruments, also including potential premium support for insurance solutions, but also then the establishment and improvement of payout mechanisms. So I hope this gives a bit of an insight into the range of what we provide, or what our support as Global Shield Solutions platform covers, and I can allude to any of these components if need be. But I'll stop here in the interest of time. Thank you very much.
Thank you, Laura, and pardon me if I have pronounced your name incorrectly. And I
that was
got,
perfect.
We got that you are also providing support in R&D and technical support, and definitely, first of all, I'm thankful Sanai, she has connected us with you. So we are planning that we are developing a product for public sector, starting from the school building, educational institution, and definitely we are having collaboration with Global Shield through UNDP. Thank you. Now I move to my next panelist, Khurram Lalani. Mr. Khurram, you are representing private sector in a sense, but how can disaster risk financing be effectively integrated into climate resilience bankable projects to ensure long-term financial sustainability and risk reduction, particularly in vulnerable regions in Pakistan?
Sure. Thank you, Mubashir, and thank you for inviting me over. I definitely represent private sector, but I think the work that we do is something which is very closely tied with the public sector. So I think in terms of when we speak about DRF and bankable projects and all those opportunities, I think there's a framework that you could apply. So maybe I think I'll just shed upon 2 to 3 areas. I think whatever DRF opportunities that you want to tie in should be rule-based. And by that, I mean that, I think a lot of disaster risk financing and opportunities, they are not presentable, or they are not presented to the private sector as opportunities. They are presented in a way which comes across as something of an additional burden and not something of an additional incentive. So for example, if I am a private sector oriented individual, then my first impression for a DRF opportunity will be that it's something that I have to deal with as a cost and not something as an opportunity. And I think we have to translate from that incentive mechanism, we have to transpose the entire thing from a cost-based to an incentive-based. So I think that's number one. The second, I think there's a lot of technical capacity which is involved. The more that you think about disaster risk reduction and the financing opportunities and everything that goes with it, the kind of technical capacities that we really ought to have to structure those transactions is something which is missing. So you find that maybe there are instances where those opportunities can be converted into good bankable projects, but then how do you structure them? How do you make them financially viable? How do you package them? Is that something which can be tailor-made, which can follow a template? I think those are all the kind of questions that you have to pre-think instead of, I think just present opportunities as such. So maybe I think we just have to think more in terms of packaging the opportunities canvas to the private sector so they are genuinely interested. So for example, insurance companies, and we have got several insurance companies, but the kind of participation that we have from our local market, we understand that I think there is still a lot of incentives to be there for them to be excited about the kind of opportunities that this sector genuinely presents.
Thank you, Khurram Lalani, giving us insight how to integrate climate risk into bankable projects, especially in private sector. But at the same time, do you see any positive change in public sector to adopt to just develop their capacity for bankable projects to get funding from the development partners?
No, absolutely. So I think, even when we talk about capacity is a very layered process. So capacity, I think we use it very loosely and we use it very profusely also, but I think it's a very layered process. It comes with a lot of nuances. So, what kind of capacity are we talking about? So it could be financial capacity, it could be technical capacity, it could be the regulatory capacity. So what kind of capacity are we, genuinely? I think so we need to tag the capacity and then really work hard on it in terms of that, we build long-term institutional memory and make sure that we have got those execution capabilities also. So I think many times we've got these very good-looking documents in place, and those are outstanding documents. But I think when it comes to execution, execution is the word which we all want to focus more on, because essentially when it comes to execution, then it turns out that a lot of those brilliant ideas that we have put there in the policy, they don't really get translated into the actual execution. So it's a long-term process, it's a nuanced process, it's a process that takes a lot of time and has layers of meanings. So we just need to be mindful and work along the way in making sure that all angles of capacity is something that we have worked on.
Thank you, Lalani sir. Now I come to Khurram Arshad sir. You are representing NISL, National Insurance Company Limited, and that is the public sector insurance company mandated to take care of the public assets and public infrastructure. You have your business. So first introduce what type of, how this NICL is being operated and how well NICL has created the registry of public assets, and particularly the critical lifeline assets, because we want to see from the natural, from the disaster perspective, are you prepared to take on the risk transfer of public sector, critical public sector? So over to you, sir.
Ji, Assalamu alaikum. I'm Khurram Arshad, and thank you, Mubashir Saab, and thank you, NDRMF, for providing us this opportunity to appear as a panelist. So first of all, as you know, that NICL is the state-owned insurer for the public sector, and we have been mandated by the insurance ordinance to insure the public assets. So this mandate gives us opportunity to NICL to play a central role to protect the Pakistan's critical infrastructures against the disaster risk like earthquake and flood. So your question, first of all, I would like to explain that what NICL has done so far against the disaster risk insurance. So first of all, NICL is providing and ensuring the critical, significant strategic projects of power generation facilities in Pakistan. That is the vital for the energy security point of view for for Pakistan. So right now we are ensuring power plants of the public sector. We are ensuring refineries, and we are also ensuring the oil and gas installations. And furthermore, we are ensuring more than 5,000 public sector buildings. So this is the fixed infrastructure that we are ensuring right now. In parallel, We are also providing insurance against the disaster to the PSDP project, to PSDP related project and CPAC projects during the construction phase. And in 2022 flood, that was a drastic flood for Pakistan, we have paid significant claims under the construction projects. And so you know that in 22 flood, we all know that there was direct losses of approximately 16 billion, and there were indirect losses of 15 billion US dollar, which makes $31 billion. So if, unfortunately, the most of the public sector projects like highways, motorways, schools, hospitals, they all had been remained uninsured. If there were insurance and if there was properly safeguarded through the insurance product, then definitely the burden on the fiscal budget for the Pakistan hopefully will be on the lower side. So furthermore, we are also developing parametric insurance with international firm, like we are working with the Acted, we are working with Instafull, and we have developed a parametric project as a pilot project for Sindh and Balochistan that would cover the drought in Sindh and flood in the Balochistan. Now come to the point that disaster risk for disaster risk financing, the major challenge is comprehensive data, public asset registry. That is the main fundamental for the public sector's point of view. But unfortunately, we are lacking that public asset registry at a national level. So, you know, we are working with ADB's team on CDRAP project, and we are in close liaison with NDRMF and Ministry of Finance. And despite of all these gaps, we have proactively expanded our portfolio in energy and energy sector. And I proud to say that NICL's 85% of the total portfolio depends on energy sector and infrastructure sectors. So if, unfortunately, there is lacking of budgetary funds for the public sector, that is the main cause. If there were some allocation of budget from the government side, then NICL is in a position to extend its coverage to the health sector, to the education sector, and towards the infrastructure. And I would also like to say that we need to focus on health and infrastructure particularly. And Mubashir Sahab, you know, I have studied in Feb, I have read out a newspaper clip where it was mentioned in the International Conference on the Climate Change that Pakistan need $30 to $40 billion annually. And if we not provide proper safeguards to the public asset, then by 2030, we will face a loss, potential loss of $250. That is a big challenge for Pakistan's economy as well. So this is it.
Thank you. I was just thinking that the coverage you mentioned, if we compare the available assets and infrastructure in public sector, is not significant to my opinion. But what are the hurdles that you could not create the registry of public assets? Let me share that under CDRAP and PIMA and CPIMA, especially the mandate is given to you and to us as well, that for the 4 priority sector to create the, to go for a detailed risk assessment. It includes education, health, communication, infrastructure, and energy sector. And we have already engaged Sparco on this, and we are just on it. What I say, like to request you issue and share that we should join our hand for this public registry. And first of all that, if you get immediately funding sources, if you are not prepared to utilize that funding, because you need first registry, then you need to have your product ready to be implemented. So these are the challenges. So while we are waiting for the funding, but we need to prepare ourselves. So these are the immediate comment. We will come on other question later. So these are the. So now I have my colleague Dr. Kamal, and he is actually my ex-colleague, and after having his career at NDRMF, he's got so many opportunities. So he should be thankful to NDRMF first, and now he's playing his role. So he's actually the person who was steering this DRF initiative and NetCat and DRF strategy, and he started all those work, and to start anything is really difficult, and he deserves this credit. I just took forward that agenda. So in your opinion, Dr. Kamal, what do you see? What are the challenges to roll on this DRF strategy, which is finalized and approved, available with us, but its implementation is a big challenge. There are so many actors and stakeholders, particularly the Ministry of Finance and the Provincial Finance Department. What do you see? What are the challenges? How to overcome those challenges?
Well, thank you so much. First of all, we should always be thankful nonetheless, unconditionally thankful to all of it. So it doesn't, the thankful and the gratitude doesn't come with opportunities. Coming straight to the question, the challenges, there are quite a lot. There's a huge list of challenges, and learning from our experience, what we've seen in the context of Pakistan, working with finance colleagues, working with planning, all the ministries, all the stakeholders. The key challenge that I would say is the very easily changing priorities. Our priorities keep changing on day-to-day basis, which is not really good. These things, some of the things that, and I think I have said it, had I sent my blessings on the Holy Prophet these many times, I would have been in heaven already. But I've said this like 100 times, that we need to have a long-term agenda without having it compromised on any given day. Whether it's COVID, whether it's 22 floods, whether it's a tense situation on the borders, we need to make sure that we are targeting something called financial resilience. That is it, full stop. Now, financial resilience, when we talk about it, and we achieve it through risk financing strategy, we achieve it through climate finance strategy, we achieve it through budget coding, Ms. Aisha already talked about it. These are the things that should not be influenced by the arrival or by the exit of a donor. This is something that the government and the state institutions need to have documented, and these are already documented, but unfortunately, with every developing situations, this agenda, as we saw literally in the context of risk financing strategy, when the advent of epidemic happened, everything went to the back end, and there was like enormous delay, and the cost of inaction that we have seen, I will not specify the projects, we all know which projects we're talking about, but the cost of inaction that we face because of this, it actually costs the exchequer. It doesn't mean that we are not able to achieve the targets of the project, but it's actually we are costing the exchequer. So the first thing is our priorities need to remain very clearly documented. This is our long-term agenda. This is our short-term agenda. This is how we are going to achieve. And this was one of the questions I was asking in the previous panel. How do we balance this low-hanging fruit? Unfortunately, this tendency of us everywhere, whether it's NDRMF, whether it's NDMA, whether it's finance, we are after the low-hanging fruit always. We don't want to go, and we don't want to go through the unbeaten path. But unless we go and we take the unbeaten path, we can't achieve something we never had in the last 70 years. But if we take the same approach, the conventional approach, we are going to have the same mediocre. So it's very explicitly documented priorities should not change. Secondly, and most important part of the entire equation is transparency and collaboration. This is an agenda that no agency, whether it's NDRMF, whether it's finance, whether it's planning, no single agency, and I'm saying it very loud and clear, no single agency can do it in silo. So it has to be a joint effort, a team effort. The developmental partners need to step in. The philanthropy, the private sector is really, really important, particularly to the long-term mainstreaming of this particular agenda? Thank you.
Dr. Kamal, you well said that it's collective responsibility and we need collective. Now I come again to Aisha, that on the other hand, we are at risk because of owing to climate change. But at the same time, this is an opportunity for us. We are getting intention and funding from the development partners. How Ministry of Finance is planning to take forward this, these opportunities and to launch some DRF instruments, like in so many countries, like in Philippines, sovereign insurance available to the disasters. At municipal level, they have system, but how this Ministry of Finance, they can play their role for achieving this agenda?
Thank you so much, Mubashir Saab, for asking this question. Since I'm representing the Ministry of Finance and Public Financial Management side, but of course, there are a few points which already have been discussed by other panel members, and I would like to stress the focus on that as well when you are talking about. When we are talking to build this, the financing, risk financing strategies for the government at the national level, we have already talked about certain, the risks, certain prerequisites. The one thing which have been talked about is the strategy or the policy framework available to it. As I already mentioned, even the choice of the instruments you want to use in future also depends upon various factors, and one of the factors is having a very comprehensive medium to long-term policy framework available to you. As Dr. Saab already mentioned, how important it is to have a long-term strategy without, changing every couple of years. That's the one prerequisite. The other prerequisites include the regulatory frameworks for all these instruments to work. The one important from the government perspective is how the government can how the government can make inflows through the availability of the fiscal space. We are already, because of this, the fiscal challenges coupled with these disasters which are we facing, we are trying to adopt the contingent budgetary, the frameworks, where we have already reserved some funds for the contingencies. We are making annual budget allocations for the disaster management, but of course these are not sufficient. We have to look for the other instruments. The one could be developing the funds, the public funds, which have the non-lapsable, the availability of the funds. The other tools which you already mentioned, the CAT bonds, the credit, the lines, and other instruments, they also require a strategic level, the policy framework, which is still under, the preparation. Before having that, it's difficult to, identify the right tools. But under this three-layer, the risk approach, you have already provided the guidance on the basis of the risks which are low intensity and high frequency. You look for the instruments like the budgetary allocations, the contingency reserves. For the second layer, layer risks, you are moving towards credit lines, credit guarantee lines. And the third one is the risk where you are having high risks with the real frequency or the low frequency, where these all instruments of, the transferring the risk to the capital market comes in. So all these are very important, but I think the one important component which already Sana mentioned and Khurram Lalani mentioned, put it very well, that's related to the awareness and, generating some incentives for the private sector and the capital market to participate in. I think there is a need to, build this sense of urgency and sensitivity among the individuals, the organizations, and the institutions, that the climate is a collective agenda. So we all have to work around it. I mean, there is no other question about it, that that it's important for us because it's better to spend the $100 today to save our $1 million like in the future. But how it is the responsibility of everyone and not particularly about the government side, that will only be coming if you can reduce this, the cost sharing approach towards more incentivizing this approach, that's one thing. That's the one of the important factor. For example, I mean, the other countries are doing it very, in a promising way. I already mentioned one about this example of the Bangladesh. The Bangladesh already having these budgetary allocations, the contingent reserves, funding available. Even their central bank is, that they are promoting the climate risk fund to promote and to support the post-disaster recovery and the resilience as a part of their social corporate, the corporate social responsibility. That's an important factor which we are missing in our country. The second important could be they are also adopting, I'm presenting it as an example. They're also operating some partial guarantee schemes, credit guarantee schemes, amid of all these disaster, the mitigation for the cottage industry, for the micro, medium, and the small industries. So these are the few examples which we can look into. But overall, I think the last thing which Dr. Saab mentioned is about the collaboration. I think we all need to bring all this consensus among all the stakeholders, that we share a responsibility from the government side's perspective, from the private sector perspective, and to bring solution for a very resilient future. So that's how it is from my side.
Thank you. The key here is the collaboration. But I have my opinion, I may be wrong, that for contingent fund, for to responding any event of high impact, government is always ready to spare and to reallocate the budgets. But in routine, there is no significant allocation for disaster risk reduction or adaptation, climate change adaptation. So we know that this low frequency is not anymore low. If we see last 20 years. So in that situation, we need to have significant budget allocation for regular investment to reduce the vulnerabilities and to strengthen our infrastructure. So that is one observation from my side, but it's not easy because there are so many pressures on government, and it's not easy to. So similarly,
so just to respond to this, because I want to take the opportunity through this platform. I mean, initially, Mubashir Saab, you did not have any instrument or any the secret documents where you can see how much existing funding is being allocated for the disaster preparedness, for recovery, and for reconstruction. This is the first time from the last couple of years you can see the budget documents are showing you exactly the budget allocation under these three categorizations. So now you have your assessment models. Tell us, this is the financing requirement over a medium to long term. I mean, you can choose it from the 3 years to 10 years, whatever the time frame suits us, like in these circumstances. And then you identify the gap, right? And then we can talk about, okay, we have established these baselines. Now we can move, ahead of it. So that's a key. That's why I say these are the important, some of the important reforms which we have taken. And by the way, as you already mentioned, that we wrap up all these reforms very, very quickly. So because we were unable to institutionalize all these reforms. The only thing the Ministry of Finance is doing and trying to do it at the moment is to institutionalize all the PFM reforms we are taking in. So they are setting the baselines. The system will run not the circumstances, or not the wishful thinkings will change with the circumstances. So that's how. Yeah, that's it. Yes. Thank you.
Thank you. I'm happy that there is a big visible transformation is going on. And now, Lara, are you there? Laura?
Yes, can you hear me?
Oh, thank you. So I just want to ask you the wrap-up final question from you, that what do you see for Pakistan? What is the way forward from your perspective and based on your experience and the global shield, with the support of the global shield, what should be the way forward for disaster risk financing?
Oh, that's a very big question. I mean, with Pakistan also being one of the first countries in the in this Global Shield in country process to be at the stage where we have the request for support. I think as it was mentioned right now, we are, and with we, I'm referring to the financing vehicles and the Global Shield Secretariat and the Coordination Hub members. We are together now tailoring a support package in very close coordination with the country to really respect the needs and address the needs that have been identified, and that would then lead to a path together with the experience that we bring in based on the implementation of different initiatives. Also, again, referring back to, for example, also the Inter-Resilient Solutions Fund, but also the Global Risk Modeling Alliance. So all of this bringing together a vast pool of experience and expertise that we offer and bring to Pakistan now at this stage to let this seep into tailoring the support package. So from our side, we are very much focusing on right now working on putting together this supporting program and the support package to then hopefully move as quickly as possible towards an implementation. I think there were so many points that were that are so very much important. And I'm not going to repeat all of them, but definitely reflecting on that, the importance of the support coming in as in a way of subsidiarity and complementarity. So really leveraging all the existing efforts already in the country and or by other initiatives by other donors, to not replicate but to really complement all the existing efforts and building on the same to bring or to help the country towards a sustainable future with regard to disaster risk financing and management, in all the different aspects that this very big endeavor brings with it. I think that that's very much our aim, and we are trying to include that in our offer, and are ready to move as quickly as possible. Thank you.
Thank you, Laura. And we are looking for that support package, and we will be in touch with the UNDP and SANA to see and to align with that. So, Khurram Lalani, we have a short time, so we want to be quick. And how can climate investment be structured to incorporate DRF mechanism, ensuring the resilience is not just an outcome, but a core investment criterion from the start? So your comment, please.
Sure. So I think, again, a very broad-based question. I'll try and summarize it as, in a shortest possible time. But I think generally, again, this is a word that we tend to overuse, resilience. And what exactly do we mean by resilience? And at what levels do we mean by resilience? So resilience as an outcome, it's a goal. That's something that we've been theoretically, studying and talking about. But then how do you measure resilience? So despite doing everything, let's just suppose that, if I tend to do everything that we have discussed over here, at the end of it, can we measure resilience, and should we measure resilience, and how do we measure resilience? I think it's always going to be a question that no one has a perfect answer to. So for example, can I really pinpoint and say that the US at this point in time is a resilient country vis-a-vis, say, Germany or Bangladesh or Pakistan? And then how do you measure resilience of each one of those countries? And then what is the metric to measure resilience? So I think there is no one standard answer. What we do know is the fact that it's an ever evolving process, and it's a process that's going to change. So maybe resilience outcomes today will be very different from resilience outcomes tomorrow. That will be very different from day after. But merging them and making sure that our investment thesis really has resilience parameters inbuilt, it's something of a long-term process. And I think we all need to come collectively together and really think about what end goals are we trying to achieve, and then just backtracking and try and come up with metrics and indicators that can really support those outcomes, and then try and identify stakeholders who are best placed to achieve this. So it's a very multi-pronged strategy and just not one answer that fits all.
You are right, it's not easy to answer this question because we are also thinking that a resilience indicator, first of all, how to set those indicators and how to measure. So we are just planning and we are in the brainstorming process that how we incorporate those resilience indicators up to district level in our NatCat, so that we see this is the baseline and what are the improvements over the time. So that is the agenda, and it's not easy task. Last, I would ask from Khurram Arshad that now NACL, they have mandate for the public insurance. What do you see the situation that if it is open to all insurance sector for the public assets, they can develop product and they can offer their services. What do you see then? What would be the response of NACL on this if it is open to all, open competition?
First of all, I would say that it's NACL wish that the public sector remains with NACL first of all, but in case there is opening of section 166, definitely NACL have to step forward and show their expertise and competencies, particularly in energy sector, because we have long history in the energy sector. And I am sure that our team, their excellence and their expertise for the power sector and for the oil and gas sector, I think we have the upper hand as compared to the private sector, because their major chunk of the business is from the motor business or from banking sector, digital insurance. But our expertise, we hope, and furthermore, through our strong financial equity, that is, I proud to say that we are 70 billion plus company in equity.
So
and we have
retention capacity you are talking about?
no, our actual financial equity, I'm talking about equity, that we have an equity of more than 70 billion. We have strong relationship with the international market, with the international reinsurer. So I hope and I wish that we have a strong footing, and furthermore, this is an opportunity for NACL as well. So to cope up with the challenges, definitely we need some, we're lacking basically the private sector like agent system or other stuff, because right now we are transparently dealing with all the public sector, because once we receive the terms from the reinsurer, we just pass on to the private sector. This sort of transparency we are handling. But once this is section 166 is no more there, definitely we have to follow the same strategies that are prevailing in the market, and we hope that we will excel in the private sector as well, inshallah.
Thank you. Let's see what happens in future, but what I would like to say that there should be some open competition and competitive products should be available. So we have one question, and its time is very short, but we can take only one question. So please, Mike. Sir, first introduce yourself and then please ask your brief question. Israr? Any question from any other participant? Yes, please.
जी मुबशिर साहब अस्सलाम वालेकुम जी, मेरा नाम लियाकत अली है।
यस।
और क्वेश्चन मेरा किसी ख़ास पैनलिस्ट से नहीं है, बल्कि मैं बिलाल अनवर साहब को मुतवज्जे करना चाहता हूँ, आपको भी और एज ए होल आपकी टीम को भी, कि हमारे एक बहुत बड़े प्रैक्टिशनर हो गुज़रे हैं डॉक्टर अख्तर हमीद ख़ान, और वो कहते हैं कि हमारा मसला मुआशी नहीं है बल्कि अखलाकी है। तो हम जब अपनी इस तरह की प्लानिंग कर रहे होते हैं, और ख़ास तौर पर लंबी प्लानिंग, जिसमें मुझे खुशी हुई है कि ये नेट कैट और 10 साल का प्लान, ये देखकर तो मुझे रियली खुशी हुई है कि ये 10 सालों में इंशाअल्लाह हम कुछ न कुछ कर गुजरेंगे। दूसरा जुमला है अल्लामा डॉक्टर मोहम्मद इकबाल का। वो कहते हैं कि द कुरान इज़ अ बुक विच emphasizes deed rather than idea। और मैं ये देख रहा था जो 10 साला हमारा प्रोग्राम है, इसमें डीड का लफ्ज़ वहाँ भी अल्लामा साहब की किताब में भी कम आज़ में है। तो ये डीड जब हम अपनी कौमी ज़िंदगी की तरफ ले जाते हैं, अवाम की तरफ ले जाते हैं, तो मुझे सेल्फ हेल्प बहुत कम नज़र आई है। तो उस लिहाज से हम अगर कोशिश करें, और ख़ास तौर पर यहाँ एक से ज़्यादा पैनलिस्ट्स ने ये बात की है कि ये एक बिहेवियर है रेजिलियंस का, एक रवैया है। और बल्कि मुझे एक पैनलिस्ट की तो फ्रेज़ बड़ी अच्छी लगी है कि रिस्क इन्फॉर्म्ड बिहेवियर। तो ये चीज़ पैदा हो सकती है अगर हम अपनी इस पॉलिसी में ज़्यादा से ज़्यादा इन्वॉल्व करें महकमा तालीम को। और महकमा तालीम का हम कोई सिलेबस तब्दील नहीं करवा रहे।
सर मैं ज़रा थोड़ा सा ब्रीफ कर लें, वी वांट टू क्लोज। सर प्लीज़।
जी मुझे समझ नहीं आई आपकी बात की, फिर आपने क्या कहा है?
मैंने क्या उसको प्रिसाइज कर लें क्वेश्चन को।
नहीं नहीं, ये मैं इसको इससे ज़्यादा ब्रीफ नहीं कर सकता। ये तो 1.5 घंटे का लेक्चर है, मैं सिर्फ 2-3 मिनटों में निकालूंगा। इससे ज़्यादा क्या ब्रीफ होगा, फिर तो मैं बात ही ना करूं। कि ये जो मुबशर साहब हमारा निज़ाम तालीम है, वो हमें कहाँ रेजिलियंस पढ़ाता है हमारी पहली क्लास से। और ये बात बिलाल अनवर साहब ख़ास तौर पर उस वक्त एहसन इकबाल साहब एक बात कर रहे थे कि जो इसकी फाइंडिंग्स होंगी वो आप उनसे शेयर करेंगे, जो भी आज की फाइंडिंग है। तो ये फाइंडिंग किसी तरह महकमा जो प्लानिंग का है उसमें भी जाए कि ये प्लानिंग हमारी किस तरह की हो रही है, कि क्या रेजिलियंस हमारे बच्चों को समझाई जा रही है। और ये हमें कोई महकमा तालीम का सिलेबस चेंज करने की ज़रूरत नहीं है। ऑलरेडी सिलेबस में बहुत सारी चीज़ें हैं। और मुबशर साहब आप कमर कस लें, अल्लाह खैर करेगा, कोई इतना बड़ा मसला नहीं है ये, कि जस्ट उनको हेल्पिंग बुक्स या फिर कहीं कहीं छोटे नोट्स दरमियान में आ जाएं तो हमारा काफ़ी हद तक ये मकसद पूरा हो जाएगा। जी बिल्कुल। सिमिलरली हम किसी तरह इन्वॉल्व करें इस काम में महकमा हेल्थ को, और ये दोनों मिनिस्ट्रियाँ या महकमे जब इस काम में मैक्सिमम तौर पर अपना ये एंगल देंगे कि जो उनकी ज़िम्मेदारियां हैं रिजिलियंट मुआशरा या रिजिलियंट कौम पैदा करने के लिए, वो अपनी ज़िम्मेदारियां कैसे अदा कर रहे हैं, तो हमारी ये पॉलिसी बहुत एनरिच हो जाएगी। मुबशर साहब वक्त देने का बहुत शुक्रिया। और बिलाल अनवर साहब,
आपने इंट्रोड्यूस नहीं कराया आप किस ऑर्गेनाइजेशन से?
मेरा नाम लियाकत अली है, मैं दुआबा फाउंडेशन का CEO हूँ।
थैंक यू।
बहुत शुक्रिया जी।
थैंक यू।
कैन आई क्विकली कमेंट? लियाकत साहब शुक्रिया, बहुत मेहरबानी, आपने अच्छा लेक्चर दिया। अभी आपने बात बिहेवियर की, लेकिन द सरप्राइजिंग फैक्ट इज़ जब उन्होंने आपको कहा इसको इख्तिसार से बयान करें, यू रिफ्यूज्ड. हमारा मसला एज अ नेशन ये है कि बिहेवियर जब तक दूसरों का ठीक करवाना है हम ठीक है, अगर मैंने अपना ठीक करना है वी डोंट लाइक इट. दैट्स द मेजर इशू. हम जब तक अपने अंदर नहीं झांकेंगे हम में चेंज नहीं आएगा. हम चाहते हैं कि NDRMF ठीक हो जाए लेकिन मैं ठीक ना हूँ, NDMA ठीक हो जाए मैं ठीक ना हूँ, हेल्थ ठीक हो जाए मैं ठीक ना हूँ. तो ये जो आपने बात की ना बिहेवियर की, तो दैट these are small optics जो कि रिफ्लेक्ट करते हैं how rigid we are, we don't want to change, we don't want to improve. रह गई बात आपने शुरू की मुआशी नहीं है मसला इखलाकी है, I strongly disagree with that. जब तक हम ये एक्सक्लूसिविटी से नहीं निकलेंगे पाकिस्तान में हम ठीक नहीं हो सकते. हम मसला ये है कि हम बड़े स्वीपिंग स्टेटमेंट्स दे देते हैं और उसको ग्लैमराइज भी करते हैं अनफॉर्चुनेटली कि हमारा मसला इकोनॉमिक नहीं है, एथिकल है. ये टू एन एक्सटेंट वो बातें ठीक हैं, लेकिन अगर हम एक चीज़ के पीछे लग जाएं और एक्सक्लूसिविटी की वजह से दूसरी चीज़ मुकम्मल छोड़ दें, बेड़ा गर्क हो जाएगा, जो कि तकरीबन हो ही चुका है. तो आई थिंक इसको जब तक हम एज अ होलसम कॉम्प्रिहेंसिव अप्रोच में नहीं जाएंगे, it's not going to make any change. Over to you, sir.
Thank you very much, all the panelists. I will conclude with these words that the situation is not so simple that any single instrument can resolve this situation. We need a mixed approach and long-term engagement, and we need to seek lessons learned from the globe, and what is best possible for Pakistan. We must start at early as possible. But it is really a long-term engagement. Thank you very much, and thank you for being here.
Thank you, Sir Mubashir and dear panelists. So I would request you to please remain on the stage again. As we conclude this final panel, we would like now to present the shields. May I invite Mr. CEO again to join us on the stage for the shield distribution. We will start with Ms. Aisha Javed. Sir Khurram Irshad Khan. Ms. Sana Ehsan. Mr. Khurram Lelani. Dr. Kamal. Lastly, our moderator, Mr. Mubashir Hussain. Thank you so much. We will take a group photo with the panelists. Thank you, everyone. So we now move to the closing session. To share a brief summary of today's deliberations and extend the word of thanks, I request Sir CEO to please say a word of thanks. Thank you, everyone.
Oh, that's nice. I need that as well. Thank you very much, Prayal. And I will not really make any attempt to conclude or to make the summary, and especially not the brief summary, because I don't know how to make things brief, so I better avoid it. I think, some discussions are better remain to be unconcluded for providing us the space for reflection, for creative tensions, and for actually giving us an opportunity to carry on the discussions for next times. But we heard a lot from this morning. I think it's quite amazing actually to see that how much can be packaged and blended in a one single day. We have started from just hearing very strategic, very high level ideas from our distinguished inaugural session panelists, and then we moved on to the more nitty-gritty and practicality of the things with regard to the issues and the challenges with the ongoing initiatives within the DRF space, and then going into the instrumentation or the development of the instruments and what are the challenges in this particular regard. This is just the beginning. It's a beginning for us, as I kind of emphasized in the morning. The task is just too big, too gigantic, too complex, and too creative, and too important. So let's carry on with this. I thank you very much, all of you, and some of the patient souls who remain in the room. So especially, I think we should give a clap to them who actually remain on their seats. So thank you. And then many thanks to all the participants, and then of course my immense pleasure and thanks to my own team. Everyone came together, regardless what hat they were wearing within the NDRMF hierarchical structure, but they all came together and as a team, and they have actually put together a very good show. So I thank you very much for that. Thank you.
Thank you so much, sir, for being an amazing leader to us, giving us the guidance, direction, and all the way forwards, and the courage to speak at multiple forums, and the courage to actually speak our thought as well. So before we close this up, I would like to invite NDRMF's team to please come on the stage and have a group photo.